Welcome back to the European Market Open. 40 minutes into the European trading day, Continental plans to cut investments by at least 20% this year due to slumping market demand. The German car parts maker said revenue and profit are expected to decline further in the second quarter. Joining us now, I'm pleased to say, is Wolfgang Schäfer, the Continental CFO. Wolfgang, very good to have you on the program. Welcome to Bloomberg TV. I see that you've said this morning you see a gradual business recovery in May and June. I wonder if you could tell us, does that back to what kind of levels? When you talk about that recovery, back to what kind of levels of business?
Well, Anna, this is not easy to say. For us, forecasts of more than 2 weeks at the moment are more than challenging because the environment is so volatile. What we clearly saw and believe is that April was the worst month which we see this year because April had the lockdown in Europe and in the U.S., North America, and both together for us are 75% of our normal sales. And we are seeing now that Europe is already ramping up. 30% of more than 30% of our plants in Europe are restarting now, already in production. North America is somewhat behind us. I think the pandemic there is 2-3 weeks behind Europe, and by that the restart is more expected mid of May. Now, taking this into account, this is to be expected that after this very worst April, the next month will be better. To what level? I would like to tell you in July only. As I said, hard to predict.
How elastic, Wolfgang, is demand for your products? I mean, when I need new tires, I buy new tires. But I'm sure there are a lot of people out there, especially if they're facing difficult employment times, that are going to try and drive less, maybe get a few more miles out of the tires they already have.
In principle, this is right, Matt, but I would like to use the example of China now, which had the lockdown in the first quarter. And there actually we are observing now that April, as an example, sales are above prior year. And same experience at the moment in Europe. Again, very early to talk about a long-term effect, but what we are noticing is that people are coming back to the showrooms now as the dealers are starting to open, and volumes are up and are nicely moving towards prior year level. So it seems to be that for these products, people are coming back, getting in the showrooms fast and replacing the tires, which they could not do for the 4 or 6 weeks before soon.
That's interesting insight as to what's going on in China. In terms of the way that you're preparing your balance sheet for this period, Wolfgang, what about the dividend? Are you going to be able to pay out dividends as you had planned? I didn't see an update on that this morning.
No, there is no update this morning. We will have our annual shareholder meeting in the second week of July. And with the invitation to this shareholder meeting, there will be finally a recommendation for the dividend payment from our supervisory board.
What about the restructuring? I think you wanted to reduce your staff by 20,000. Does that still seem like the right size, or are you going to need to make deeper cuts?
Well, we are clearly distinguishing between the long-term structural adjustments which we want to make and have to make, and the short-term measures. At the moment, what we are discussing mostly, obviously, is short-term flexibility to adapt our cost to this extremely volatile downturn markets which we are seeing. And then there is this long-term. The long-term plans are unchanged at the moment, as I mentioned, only see the next 2 to probably 4 weeks of sales. As soon as we have more clarity and we can better predict how our markets will be in the next 2 to 3 to 4 years, we have to probably revise our program, as we call it, the Conti C program, that we might have to adapt it to another level because we see that the future volume expectations are different than they have been before.
Wolfgang, here in Germany, you can use the Kurzarbeit program, and other European countries have similar schemes. Have you taken advantage of those programs in countries where you can, and how much of your staff has been on that, if so?
Yes, we did take advantage of that. It's very helpful to allow for flexibility of the cost and of the load of your production sites. We have used in Europe those programs. There is in some states of the US furlough, which somewhat has a similar effect. And overall, we had more than 60% of our people in, I think, 2 weeks ago, which were in the one or other type of these programs on a worldwide basis.
Do you see, Wolfgang, do you see any conflict between taking advantage of those programs and paying a dividend? Some companies that have been relying on government support at this time have decided not to pay money to shareholders as well.
Well, if I refer to the German situation, probably first comment, dividend paid out this year is for last year. So it's only a delayed payment for the performance of the company of last year. And secondly, if I take Germany, the money which is paid out for this short-term work is in the end money which the company has paid in Germany agency for work, as it's called. And for Conti, for example, this pay-in sum which Conti itself paid was more than 400 million over the last 10 years. Our employees paid about the same amount into it, and the amount we are receiving now from this fund is a small fraction of this sum. So no, I don't see a conflict between those two numbers.
What kind of time frame do you see, Wolfgang, until we get back to normal demand? Do you think 2021 looks normal again for Continental?
Well, very hard to predict. We actually don't have a final view on this. And the question is anyway, what is normal? But at the moment, we concentrate on short term, and we believe it will take some weeks, if not some months, to finally get a clearer picture of what 2021 and then 22 and 23 will be like.
Have you asked the German government, or you talked to the German government about the possibility of stimulus, of a cash for clunkers type of deal?
Yes, there is a discussion between the automotive industry and the government. I think 2 days ago was the last discussion about it. Automotive industry is supporting and asking for any program like in the US it was called 10 years ago, the cash for clunker, supports, incentives to buy cars. And the discussion is ongoing. Discussion 2 days ago ended in a way that it was said we will think about how this could be put together, and we will talk together in about 4 weeks from now. So that will be beginning of June.
The beginning of June. What about your production facilities, Wolfgang? As you mentioned that some of them have come back, but I think substantially they remain closed. Update us on that, and how does production look different in the aftermath of the virus in terms of what you need to spend on social distancing and other measures?
Well, Europe, about 30% of the plants are ramping up now. The number was at more than 80%, which was ramped down in the peak times. In the US, it is somewhat delayed, and probably starting mid of May, we will see these ramp-ups. In China, we are above 80% of the production load, which is back now. But yes, obviously, we have used the last days and weeks to analyze not only each plant, but each workplace, how much of distance this workplace can keep to his colleagues, what are the risks of infection, and for each single workplace, we have single protection measures for our workers, be that a mask or be that even more protection. Some of the work processes have been changed in a way that people can keep the distance which is required. We are confident, and we have set it up in a way that we will be in a position to deliver what our customers want from us, even when it comes soon back to the old levels which we have produced in those production sites. It will bear some additional cost, but this is too early to quantify that.
I was just going to say, be careful what you promise, Wolfgang, because some of your customers want snow tires for motorcycles. There are no snow tires for motorcycles. I've looked everywhere, and nobody makes them. So maybe we'll chat about that at some point in the future when you come fully back online. Wolfgang Schäfer, the CFO of Continental, thanks very much for joining us. Up next, we're going to talk about larger treasury supply, how that's going to play out and how it'll affect the market. We'll put the questions to our Bloomberg MLive currency and rates strategist, Ben Rahm, next. This is Bloomberg. Welcome back to the European Open. We are 53 minutes into the trading day right now, and we're still seeing some solid green arrows across European equity indexes. It looked at the open like it could go in either direction, but it does look like we are going, at least in the beginning of this session, to see a continued risk on sentiment here, with the FTSE up 0.5%, but the DAX up 0.9%. Joining us now is Bloomberg's MLive currency and rate strategist, Van Rahm. And Van, I'll start out with the Bank of England decision today, and we saw a little bit of movement there on the pound. What do you take from that statement that a couple of members wanted to raise their bond buying, increase their bond buying program, and they do see a 14% drop this year and a 15% gain next year in GDP?
Morning, Matt. You're right. The 7-2 vote in favor of the bond buying program may kind of support the pound for now, because it in a sense, it avoids a more dovish outcome immediately. And as you mentioned, the prospect of 15% GDP growth is a big rebound. That's bound to support the pound as well. If you look at the front-end yields and gilts, they have risen pretty much across the board this morning, and that is bound to support the pound in the short term. Actually, if you go back to the start of the year, Matt, 2-year gilt yields were holding at above 0.5%, and they collapsed all of a sudden to pretty much nothing. As of yesterday, they yielded 1 basis point. So in if you look at the collapse of the pound, if you look at the collapse mean and you juxtapose the pound against it, the pound is held up pretty resiliently, I would say. So the fact that yields are climbing today is supportive, is very supportive of the pound. As far as the size of the bond buying program goes, even though they voted 7-2 in favor of keeping it intact, I have no doubt that come June, they will raise the size of the bond buying program. So it remains to be seen what happens to front-end.
Looking at some of the detail. Yeah.
Sorry, go on, Anna.
Yeah, looking at some of the detail they released, Ben, it was interesting to, they were talking about how when they're going to meet their existing target, and that certainly has led some people to believe that there'll be more, a higher QE target coming in June. What about from the Eurozone today? We've heard from de Guindos at the ECB saying the ECB is more determined than ever to support the economy. This, very interesting in the wake of that German court ruling, sent a bit of a wobble through the euro.
Absolutely. The ECB's reiteration and Guindos' reiteration that they will do everything within their mandate to help the euro area through this crisis is significant. And as you said, it must be seen in the context of the German court ruling earlier this week. Now, the ECB has been asked to justify its bond purchases within 3 months. The question is whether the ECB's purchases have been disproportional to its capital key. And as far as I'm concerned, I have no doubt that the ECB will acquit itself very well on that front, because they've done a lot of good things. Employment is up. They're trying to revive inflation. All the same, I must say that the entire burden...
Ben, I got to cut you off there. Ben Ram there, MLive currency and rate strategist. This is Bloomberg.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, seeing red, the markets plunging deeper, despite the Federal Reserve's latest efforts to prop up the economy. Meantime, cities and states taking unprecedented measures to keep residents at home. The Bay Area announcing a shelter-in-place order to start tomorrow. Plus, this shelter-in-place extraordinary, a big step to contain the coronavirus outbreak. We will have the latest. And staying connected amidst life disrupted as schools and businesses close around the world. Facebook COO Sheryl Sandberg joins us live to talk about a massive effort she is launching to help feed local families. This as Facebook shares plunge more than 14%. First, to our top story, the markets going deeper into the red over fears the economic fallout from the coronavirus will be more prolonged and painful than we all expected. President Trump saying life could be disrupted well into the summer. The S&P falling the most since 1987, sinking 12%. The Dow falling to its lowest in 2 years. This despite the Federal Reserve cutting rates to zero. For war, I want to get to Romaine Bostick, co-host of Bloomberg's What'd You Miss? So Romaine, it's hard to figure out what to focus on. So much red everywhere. Break it down for us.
Yeah, so I mean, it's pretty much a day full of superlatives. I mean, you talk about the response with regards to that monetary policy. What you have today, really, Emily, is a market that has basically figured out that what is ailing the U.S. economy and potentially the global economy isn't going to be solved through monetary measures alone. Today, you saw the Dow Jones Industrial Average and the S&P 500 have their worst single-day percentage drop since Black Monday back in 1987. And as far as tech stocks, you look at the Nasdaq Composite and you look at small caps, the Russell 2000, they had their worst days on a percentage basis on record. So this is basically a market that is now already pricing in what is effectively a technical recession with the anticipation that we are going to see a fundamental recession once we start to actually see that economic data, Emily. And we've talked to a lot of economists, Carmen Reinhart today, Alan Blinder last week, a lot of big names who were around during the financial crisis in 08. They were around during long-term capital management. They were there back during the dot-com bubble, and they've all said there's really no precedent for what we're going through now. This is a demand sort of bust that you're looking at right now. People are staying home. They're not going to work. They're not really buying anything that isn't essential to their sort of day-to-day survival. And this is something, again, you would have to go back at least to the Great Depression to find anything sort of equivalent to it, but definitely nothing in the modern era, Emily.
Meantime, Romaine, the president's remarks becoming grimmer. How much of Facebook shares plunged with the rest of the market today, closing down a whopping 14%. Let's get perspective on that and much more from Facebook COO Sheryl Sandberg, who joins me now from Menlo Park. Sheryl, obviously, the news has been changing by the minute for the markets, for your company, for people who live in the Bay Area. I have to ask you about your perspective on what we're seeing in the markets right now. You worked for Larry Summers. He says we're headed for a recession. You worked at Google amidst the dot-com bust. You helped navigate Facebook through the financial crisis. Where is this going?
Well, thanks for having me, Emily, and welcome back from maternity leave. This must be a broad move coming back. You know, look, these are unprecedented times and these are scary times. And of course, it's not going to be business as usual for any business. So we're all watching this carefully. You know, at Facebook, we're really focused on not just ourselves, but really the small businesses that use our platform, because this can be just devastating for small business. We rolled out last week a Business Hub, trying to help small businesses connect with people online. Some of them are able to replace some of their brick and mortar walk-in business with some online. Other people are working hard to keep the lights on. And we want to help support that because the impact to small businesses is going to be very serious and very real, and people need jobs.
Facebook's headquarters are in the Bay Area. We're going into a Bay Area-wide shelter-in-place order tomorrow. What does this mean for Facebook? How are you handling this?
We've already been aggressively pushing people to work from home. Any job that can be home is home. For contractors, we're paying whether or not they're sick, if their work, can be done anywhere. And for the critical jobs where we still have people coming into the office, we're getting as much of that home as possible. And we're working on reducing the size of the population there just so we can keep our services up, protect our people who are working for us, but also keep providing the services we provide all around the world, which we think are increasingly important in this time when people are socially isolated. We're seeing more people turn to our products, especially video chat and messaging products, so that they can stay connected.
Schools across the country are closed, and you are launching a massive initiative to help feed families in the local area. A lot of people don't realize that families depend on schools for hot meals. Talk to us about this effort, what it involves, and how other people can join you.
Well, thanks for asking, Emily. This is so important. So food insecurity is a major issue in this country. 1 in 8 children in America doesn't know where their next meal is coming from, and 1 in 3 in Silicon Valley. So this is something I've been working on for a very long time. And then just a few days ago, my fiance and I helped Second Harvest, our local food bank, launch the COVID-19 emergency fund to feed families. A small group of families got together and started this off with a $6 million group donation. And then we've gone out to our donors and to Facebook. My Facebook fundraiser has raised almost $200,000 in just a few days. And I think people realize a lot of kids, 30 million children in this country get 10 out of 21 meals at school at a free and reduced basis. And so we need to help these families replace that food. There is a food bank in every local area. You can go to Feeding America and find yours. But I would just love to see people launch Facebook fundraisers or any way we can support people, because it's not just health risk people have. It's a very serious risk of meeting basic needs. And food, of all things right now, is something people desperately need and people are really worried about getting.
Speaking about needs, people are desperate for information, and the coronavirus seems to present a unique opportunity for people to panic and people to seed misinformation. Everything from fake cures to who created the coronavirus, or that this is a media-inspired fantasy. When it comes to politicians, when it comes to celebrities or influencers on Facebook or Instagram, how are you handling potential misinformation or misleading claims at a time when we are in the middle of a public health crisis?
Well, we're responding to this with all hands on deck. We are taking down any harmful misinformation on the coronavirus. We're working with WHO very closely and directly, taking down things they think are harmful right away, working with local health ministries. We're trying to get good information out to people. Tom, my fiance, and I, we just did, asked by the WHO director, a hand washing video. And we're asking celebrities across Facebook and Instagram, anyone with a big following, to share good information. So it's about taking down the bad and about getting out the good. We're also partnering with the UN Foundation and the WHO to launch a COVID response fund for them. We have a $10 million match. We've already raised $3 million on Facebook, and we're going to do our match whether or not we hit it, but we really hope people will jump in. And we're going to do the same for the CDC coming very soon. So this is about taking down the bad information, but also getting the good information and support out to people and to these incredible organizations like the WHO and the CDC that are going to need everyone to be doing what they can do to reduce the spread of this virus.
What about misinformation in private groups, where sometimes some of the most critical misinformation resides, and a lot of that is medical misinformation? Is Facebook hands off there when it comes to misinformation in private, but on Facebook?
With COVID-19, we are not. As soon as we can find it, if it is harmful misinformation, particularly the misinformation the WHO or local health ministries are most worried about, we're getting it down as quickly as we can. But we're also seeing a lot of Facebook groups doing amazing things. There are groups in Italy, which has been just particularly hard hit, getting together online to provide support. There's a doctor in Lombardy, Italy, very hard hit area, who's been providing services to patients, not even her own patients, just people in the area who are suffering from depression, suffering from isolation, suffering from anxiety online. We're seeing churches and synagogues put their services online and use Facebook groups to reach their community. So this is a time, we've seen this through other disasters, even though I don't think we've seen anything like this, where people come together to support each other in any way they can. And we're going to do all we can to keep facilitating that.
Cheryl, Facebook is down almost 14% with the rest of the market. How big an economic downturn are you preparing for, and how well positioned is Facebook's ad business to weather this?
Well, this is not going to be business as usual. And the marketing industry is certainly, going to see a real impact. I don't think anyone knows how big. And so we're going to watch and look. But again, we know that we can keep paying our employees, paying our contractors. We know we can keep the lights on. Whereas so many small businesses around the country and the world do not have that luxury. People are, working paycheck to paycheck. And so that's where we're really focused on our efforts, because that's much more important than anything we could do for our own company. And so you're going to see, we announced the business hub we put out last week, and you're going to see more coming from us, including this week, in big efforts to help small businesses around the world.
Meantime, Cheryl, the panic across the country, life being disrupted, not enough testing kits. What do you need from U.S. leadership, from governments around the world to inspire confidence right now?
Well, I'm not a health expert, and at Facebook, we are relying very heavily on the health experts. I think it's clear that we need a very strong response from our government, from our health care system. We're going to need a really strong response to help people socially isolate. Any unnecessary contact right now is just avoidable. And we've taken that very seriously at Facebook. And I know my fiance and I have taken that very seriously for ourselves. But we also, know that the government, local, state, national, is going to have a strong economic response, because we're already seeing people suffer. That's why I was so grateful to the people across Silicon Valley who donated to our food bank. I'm already hearing from people around the country who want to set up donations to their food bank. This is serious, and we all have a very deep responsibility to do everything we can to help keep other people safe. And that means cutting down on all of our social activity, anything unnecessary, so that the people on the front line, my sister's a pediatrician, she has to go to work. The more we all stay home when we can, the safer it is for her and other health workers, and also to support people financially through this very serious crisis.
Right, and you are matching donations for anyone who joins you in this effort through the Second Harvest of Silicon Valley. Sheryl Sandberg, COO of Facebook, thanks so much for joining us. Meantime, much more ahead. Stay with us. This is Bloomberg. U.S. stocks plunged the most since 1987 as President Trump warned that disruptions from the coronavirus could last well into the summer. For more, I want to get to Bloomberg's Kriti Gupta on the markets. Now, Kriti, we saw a broad sell-off today across most sectors. Let's drill in to tech, though. Give us the highlights there.
That's right. We did see the Nasdaq and the S&P 500 really take some major hits down, I believe 11% on the day. What you really want to take away, though, is the way that tech is really interacting with these volatile swings in the market, moving in both directions. Now, something I've been talking about a lot is how this broader stock market is moving, like I said, in both directions. Massive losses followed by massive gains, and tech really leading on both sides. Now, think about it here. If you're looking at investing in tech, now is really the time to kind of buy in. And the people I'm talking to on the street are really taking taking this opportunity to buy the dip there. On the flip side of that, there is a shortage of kind of liquidity in the market right now. So you are seeing also when people are cutting their positions, really targeting tech in that aspect because you are, of course, exposing yourself to the tech industry in larger volumes than other sectors. So really interesting to see how tech is really kind of interacting with the broader sell-off there.
All right, we're going to continue to monitor all develops. Of course, watch the open into Asia. Bloomberg Markets Live reporter Kriti Gupta, thank you so much for that update. Plenty more ahead. Stay with Bloomberg Television. This is Bloomberg.
another day of risk off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television.
Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Back to the markets. We want to get a read on how equities and bonds did today. And for that, I'm joined by our What You Missed co-anchor, Romaine Bostick. And on the phone, we've got David Schwawell. He is the Chief Investment Officer of Family Management Corporation. David, thank you so much for calling us. Obviously, it's so hard to know where to place your bets at this time and just what you should be preparing for. What are you preparing for as you work your investment strategy out for the next 24 hours?
Order submitted. 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 Order submitted.
Short-term horizon, I think investors are really trying to get a grasp of what the different range of outcomes could be. I think President Trump's announcement today really gave kind of a more realistic framework that, the coronavirus really could be in place until summer, and I think to some degree that might help manage investor expectations going forward of just how long this could last for.
So where are you placing your bets? I mean, in terms of shaping your own strategy with so many unknowns, what do you think is the most likely scenario, and how are you operating?
I do think that the markets may be getting a little bit ahead of themselves, but it's a very fine line. I think that if you look at corporate bond spreads, we've seen corporate spreads blow out very wide over the past week or two, particularly high yield spreads out probably more than 400 basis points on the year, wider to over 800 basis points. So there's a fine line in corporate America, depending on how long this slowdown or economy screeching to a halt lasts, that you could really put some significant strain on corporate borrowers. So I think that the high yield space could probably still see some pain. I think that investment-grade bond spreads are actually fairly attractive right now at a couple hundred basis points wide. It's 200 to 300 basis points wide, so I think there is value there right now.
Order
I think
filled.
That,
Order submitted.
Even
Order
the banking
submitted.
space, I think that the banking space right now is really pricing somewhat for Armageddon, and I think that there's some interesting value there.
Well, David, kind of expand a little bit on that
filled.
pricing, because
Order
I'm wondering
submitted.
that when you look
Order
at the sell-off
submitted.
that we've had, not just today, but really over the past 3 weeks,
Order
3.5
filled.
weeks here,
Order
how much of
submitted.
that is tied
Order
to this idea
submitted.
that
Order
a lot of the
filled.
companies out there
Order
did have
submitted.
this net leverage
Order
that was
submitted.
really, by some measures, astronomical?
Absolutely, and in the market conditions were really favorable for that. So you had a corporate market that was really amenable to refinancing, a leverage loan market that was really open up for really favorable terms, and then you add on to the fact that interest rates were low, spreads were low, and you had an environment where leverage was easy to take on and debt service was very low. And at the current time, we do have low risk-free rates, but obviously credit spreads are much higher now, and obviously top-line sales are going to be non-existent while costs are still going to be there. So the pressure, depending on how long this lasts for, is really going to start to pinch borrowers, particularly lower-grade borrowers.
Okay, so I mean, that's the conundrum here. So for everyone out there, David, who's trying to sort of go into their spreadsheets and sort of remodel things, I mean, how do you solve for X in this type of environment when you look at these multiples and you basically have no multiple because there's nothing to multiply?
Exactly. So I think that the typical, what is the S&P going to earn for 2020, that goes out the window. We have no idea how long this is going to last for, what the downturn is. I think within the credit markets, at least in high yield, I think that the markets are kind of pricing for 15 to 20% defaults at this point, just based on where spreads are and kind of where we're heading. So certainly certain segments are going to be hit harder than others, but I think on a sector-by-sector basis, there are interesting values out there. I know a moment ago I talked about the banking sector, but I think that there's some interesting value out there depending on how things go over the next 6 months.
What do you see happening in tech where we're seeing some of the most dramatic slides, David, of the day?
Right. Well, if you go back probably 6 months ago, the headlines in tech were really on the regulatory front. So if you think about big tech,
the headlines were, are they going to go after Facebook, Google, Amazon for antitrust? And what's interesting today is you almost think that these big tech companies are under maybe a little bit better competitive advantage going forward. I mean, if you look at Amazon, the retail segment is going to be decimated, which is extremely sad, and we'll have to see how that plays out. But you saw the news coming out today that Amazon's going to be hiring another 100,000 workers to keep up with the demand. So you think that it's conceivable that whenever this blows over and whenever the U.S. economy gets back to normal, that Amazon could be in an even better shape going forward, not only if some competitors go under, but consumer preferences have changed and more consumers are used to ordering online.
So, David, though, what about the esoteric question here? I mean, obviously, you're talking about companies that did well in environments before where investors got nervous. They gravitated to tech stocks because they had the growth. Most of them have very little debt, or at least debt that is certainly manageable. If you throw in this idea that Amazon goes out and hires 100,000 workers, Google helps build a government website, and these other big tech companies start to use their weight and their leverage to help sort of pull the economy.
Order filled. Order canceled.
The increasing use of chatbots by retailers is changing our shopping experience. Live Person is one of the companies that are helping brands go conversational to better connect with customers. Joining us now on our Retail Transform series, it is CTO Alex Spinelli, who's also the former global head of Alexa at Amazon. Alex, great to have you. I think the coronavirus has certainly been disrupting all of our consumer behavior. What in this moment do you tell clients?
Yeah, actually, thanks for having me. I could not ask for a better person to follow than Jim from Square, because some of the things he talked about are exactly the things that we're seeing. So our tool, we build a conversational cloud, which enables businesses to have real-time conversations with their consumers, both AI-driven and human-human. And what we're actually seeing now is a lot of our customers, and these are some of the biggest brands in the world, reaching out to us saying, we actually have to send our contact centers, our call centers, home around the world, and how can you help us actually offer a work from home solution? So interestingly, it's not a use case that we've typically looked at. Our solution is fully SaaS, so we're now really excited that we can suddenly help both big businesses maintain the connection to their consumers and also the hourly workers, and Jim mentioned this, how changes might come to hourly workers going home. We can actually help them work from home and continue the continuity of being able to have jobs and service their consumers. So that's kind of the big thing for us right now over the last 2 weeks, is this swarm on, wow, our tools can actually be used to help both businesses and people continue to have some type of normalcy through this crisis.
Retail foot traffic last week was down 9%. So it's very clear that consumer behavior continues to shift. This is not a new trend to online.
Absolutely.
How are you managing that shift now? Apple shares tumbled as the company announced a decision to close all of its retail stores outside China due to the coronavirus pandemic. At current levels, the stock has lost more than a fifth of its value from a record hit just last month. For more, I want to bring in Bloomberg Tech's Mark Gurman, who joins us on the phone from LA and, of course, covers Apple for us. So, Mark, Apple announcing these closures over the weekend and today falling with the rest of the market, though certainly has felt some pain from having to close its China stores earlier this year. What's the latest on Apple's approach here?
Latest on Apple's approach, what you saw was an 11:30 p.m. announcement on a Friday night about this. This announcement, I was actually, up waiting for something like this because their work at home had expired on Friday, so there was clearly something coming. But this was a big surprise. This is Tim Cook taking leadership here and closing about 460 stores outside of China. They have one of the biggest global footprints of any singular retail brand. And, they really had no choice here. Obviously, there's liability issues. But if you think about what an Apple store is, you have foot traffic of millions of people a month coming into these stores, trying on Apple Watches, putting AirPods in their ears, playing with iPhones, using iPads and laptops and desktops. So many people touching these products and interacting with it. This was potentially a breeding ground for this virus to spread in very high population areas with lots of cases. So they really had no choice but to do this. And of course, it was a difficult decision, but I think the right thing to do.
Apple, not the only retailer doing this, but obviously one of the biggest, if not the biggest retailer in the world. What does this mean for the business going forward, given that these devices drive their revenue?
Yeah, this is a big deal, I think, from a marketing standpoint and a visual standpoint and a headline and news and us talking about it standpoint. But at the end of the day, we're probably talking about, if this does indeed end in 11 days from now, as it's scheduled, I would say a $3 billion revenue loss at max. And in terms of investor expectations, I don't think that is all too shocking. They already removed their guidance of hitting $63 billion for the March quarter. So this really isn't going to have an impact there.
Okay, we'll continue to follow Mark Gurman, who covers Apple for us. Thank you so much. Mark, that does it for this edition of Bloomberg Technology. You can find us live streaming on Twitter. Check us out at Technology. Stay with us. Bloomberg TV has coverage live around the world as this outbreak continues to unfurl. This is Bloomberg.
renewable plants are coming into the mix. It is just happening faster, but it's not something that keeps us, that surprises us at all. We have a view that in a time frame of about 10-15 years, most of the decarbonized energy mixes in Europe and the rest of the world will have extremely low prices of energy when compared to now. And that is why we want to rush and accelerate the transformation of this sector and be the first to do it in a large scale. The more energy, the renewable energy content you have in a mix, the lower energy price consumers pay, the more energy, the more electricity is getting into the society and into the economy. Ultimately, this enlarges the market.
Thank you so much for joining us today. Francesco Starace, CEO of Enel, thank you for your time. Now, coming up, when will the world have a vaccine for the coronavirus and how quickly will we have enough doses? We'll ask the Chief Scientific Officer of Johnson & Johnson. Don't miss our interview. That's next. This is Bloomberg.
Commodity investing is more than buying gold and oil. From coffee and corn to cattle and natural gas, many sectors drive the commodity markets. And the Bloomberg Commodity Index covers them all. With exposure across 23 traded commodities, Bloomberg is the standard for diversification in commodity markets. With full transparency, measure and monitor your investment performance against the benchmark used by commodity professionals globally. More than gold and oil, the Bloomberg Commodity Index.
This is Bloomberg Surveillance. I'm Neera Chahij in London. Let's get the Bloomberg Business Flash with Ritika Gupta in New York. Hey, Ritika.
Thanks, Neera. Apple is maintaining its lead in the smart watch market. That's as the devices defied a global sales slump. The coronavirus outbreak is driving up demand for health tracking, with Strategy Analytics estimating a 20% rise in overall shipments. The Apple Watch is seen as a key driver of growth for the tech giant. Peloton's quarterly revenues has soared 66% as coronavirus has spurred thousands to work out at home. The company is also raising its forecasts as it expects continued demand. The lockdown has sparked a rally in the stock, gaining about 34% so far this year. The coronavirus pandemic could delay Heathrow's expansion by 5 years or more. That's according to the airport's chief executive. A third runway to lift capacity will now be needed in around 10 to 15 years' time. The $20 billion landing strip had been due to open by 2029, but that was already in doubt after a court ruling on environmental grounds in February. And that's the Bloomberg Business Flash, Neera.
Thanks so much, Ritika. Now, when will we have a vaccine for the coronavirus and how quickly will we have enough doses? According to the Milken Institute's Faster Cures Tracker, there are currently 123 vaccines in development. My next guest spearheads the research and product pipeline at one of the biggest companies involved in that effort. I'm delighted to welcome Paul Stoffels, Chief Scientific Officer at Johnson & Johnson. Welcome to Bloomberg, Paul, and thank you so much for joining us today. So we understand that you've said that you'll have hundreds of millions of doses ready in early 2021. But can you clarify for our viewers when you actually intend to begin manufacturing the vaccine, and is it in line with Operation Warp Speed?
Yeah, we are already starting to prepare manufacturing, and that's ongoing in parallel with the development. We are building out new facilities where we can produce a massive amount of vaccines, as well as fill them. So you need to fill them in vials to be able to bring them to people. So, and that's unprecedented. Never in history has been done doing that in a year to get to a billion vaccines. But it's all underway. We have already 2 manufacturing sites which are in full preparation, and we're starting a third and a fourth one in the next few weeks. And that will be able to, those will be able to produce a billion vaccines in the course of next year. Mm-hmm.
Okay, you mentioned vials as well there, Paul. What are you going to do to mitigate the potential for vial and stopper shortage issues, particularly if you suddenly get a demand for billions of doses for this vaccine?
Yeah. We have already 250 million vials which are in the making and produced. So we have very early on, a few months ago already, when we started this project, we looked into all of the supplies which were going to be needed for making a billion vaccines. And our teams around the world, they made sure that we had the right orders, the right manufacturers already mobilized to make everything we need. And on a monthly basis, we review where we are. And so we have taken all the measures to be prepared. But also we have to change certain things in the system. We probably are going to put 5 vaccines in one vial so that we can save on vials and on stoppers, and that then people would have to be vaccinated 5 at a time. But I think in these times with Corona, that is possible to organize that in pharmacies and in doctors' offices to make sure that we can get a vaccine by priority, and then 5 at a time should be a possibility for making it happen operationally.
Absolutely. Yes, I've heard about the 5-dose vial that you're working on, Paul. Not to labour the point, but I'm sure you can appreciate it is of concern to potential users of the vaccine. If the 5-dose vial doesn't necessarily work, what other options are there to ensure there are enough vials and stoppers out there?
Yeah, it's all starting manufacturing now, and that is the big message in this COVID-19 vaccine era, where we are doing development at the moment. We start clinical trials in September. We know whether the vaccine works by the end of the year, but all the work to make the vaccine is done at risk. So building the manufacturing plants, ordering all the supplies, preparing the filling, everything is done at risk, so that by the time the vaccine is available, by the time the data are available, we can deliver the first batches of vaccines, as well as be ready for massive upscaling. And we are not waiting for anything at the moment to do that, and everything we do is here at risk.
Sure, and to that point as well, Paul, what are you doing to prepare for the possibility that this virus could mutate, making any vaccine that is developed irrelevant?
Yeah, we are of course measuring that very, very carefully, and there are some reports on mutations in the virus which we have looked already at, and at the moment we have not yet a mutation which makes the vaccine we have in development not usable. But if that would happen, then we have to very quickly start on a second vaccine which would solve this. But I think that's for the future. The chance that it will be like an influenza vaccine, we think is much lower. There will be mutations because every virus mutates, but not to the extent that we need a totally new vaccine every year. Hopefully not. What we might need is, because people need to be protected for longer term, this virus is not going to disappear in the next 1 to 2 years from the world. We need to have boosting probably a year later or 2 years later to make sure people are protected for the period the virus is around in the world. So it's not going to be over after one vaccination, I think. We'll have to boost people to be protected for longer term.
Right. So in that case, Paul, then, what's the sort of guidance that you're getting from Johnson & Johnson generally in terms of if you do need to look at new vaccines, not every year, but certainly more than once? Is the guidance that you have all the resources at your disposal to do this regardless of the cost, or is profit actually important in this equation?
No, in this equation, we have the agreement. I have the guidance and the permission from the company to do whatever is needed to get this done. And profit is not important here. We are a company with a very solid foundation existing for more than 100 years. We are the largest healthcare company in the world. We have built the technology over the years to do this, and we are going to do everything what's needed from the Johnson & Johnson side to get this done. And profit is not important. We will do this at a not-for-profit basis, covering our costs, but that's it. All the efforts will be put in, and it's unconditional at the moment what we are doing.
All right, some might be reassured by that. Thank you so much for joining us, Paul Stoffels, Chief Scientific Officer at Johnson & Johnson. Really great to have you on the show. And coming up, Think's warning, the CEO of BlackRock has a stark message for corporate America. We'll discuss that next. This is Bloomberg.
Order canceled. 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 Order canceled.
Fuel, corn, livestock, precious metals. Commodities are everywhere, and so is Bloomberg. Bloomberg commodity indices deliver leading benchmarks for true diversification. Adding commodity exposure can help hedge against inflation and diversify your stock and bond portfolios. With full data transparency and broad distribution, the Bloomberg suite of commodity indices is your measure for the commodity markets. With Bloomberg, you've got the markets covered.
economics, finance and politics. This is Bloomberg Surveillance. I'm Naira Chehich in London. Now, of course, earlier this morning, the Norges Bank delivered an unexpected interest rate cut into uncharted territory. So it cut to 0. But the outlook was that the Norges Bank said the rate is most likely to stay at this level for some time. So perhaps that's what's given a bit of a lift to the krona. And Governor Øystein Olsen delivering a news conference as well right now. What we've been hearing is that basically the Norges Bank remains as a potential actor in the currency market. Of course, with the drop in oil prices, that's been one of the factors that's really seen the krona drop of late. Also, Olsen saying there's large uncertainty around the effectiveness of negative rates. We've heard comments to this effect from the Norges Bank in the past as well. And the governor also saying that the cut can help reduce the impact of the downturn, and they remain focused on the inflation goal over time. And don't miss our interview with the governor of the Norges Bank, Øystein Olsen. That's later this morning here on Bloomberg TV. Now, Larry Fink has a stark message for corporate America. As bad as things have been, they're likely to get worse. The BlackRock CEO laid out his concern in a call with a private audience, warning on everything from taxes to consumer demand. Joining us to discuss is Bloomberg's Danny Berger. Danny, great to have you with us. So what did we learn?
Well, first off, let's just say when Larry Fink speaks, we want to listen. Remember, he has President Trump's ear. He's an advisor. BlackRock has been helping the Fed fix market issues. But his conversation, this private call, basically seems to stem from conversations Fink has been having with bankers who warned of a cascade of bankruptcies likely to hit the economy. And so he wonders on this call whether the Fed is going to have to step in with even more action. But even in the middle of this economic despair, he thinks that corporate tax rates are going to go higher to help pay for some of this relief. He puts the figure at 29%. It's currently at 21%, which of course would really water down what Republicans and President Trump see as one of the crowning achievements of the past couple years. But he also says that corporate America is in for even more pain. Remote working is certainly going to hurt companies. Demand is going to be changed as well because the American psyche is going to take a hit. Consumers are less likely to go on airplanes, for example, or go out to restaurants. And also the economic duress, he says, could spur nationalism and really upend the world order as we know it, Naira.
Danny, we've both been looking at a study by the Fed in terms of what companies are saying on the ground. Do Larry Fink's concerns match up with what businesses on the ground in the US are experiencing?
Yeah, certainly. And this is one of the things I find so stark because we're looking at U.S. stocks continuing to rally today, for example, at least futures. But on the ground, in Fink's warning, the Fed has a study. They looked at earnings calls from companies, about 600 of them in the U.S. And apparently the concerns there, the fear is greater than it was in 2008. They look at all the cuts to payouts, investment cuts, and pulling down on credit lines. Not to mention there was also a study done of small businesses, and more than half of the firms said that they expect to be out of business in the next 6 months. That's definitely some stark warnings of what's to come, be it earnings or these small businesses, Naira.
Bloomberg's Danny Berger, thank you so much. And as Danny was saying, you know, we have been seeing a fair amount of risk on, and that's reflected in the markets today. If you look at the European equity market and also what US futures are signaling, even ahead of jobless data and after that painful ADP report yesterday, the euro is pretty much unchanged, but it's really the pound catching attention out of G10, catching a bid after no change to the BOE's policy, and it did forecast a V-shaped recovery in terms of growth. Perhaps that's what's giving the pound a little bit of a lift. The krona on the move as well after a decision from Norges Bank. The 10-year yield steady ahead of the jobs report tomorrow, and crude a little higher as well, though pretty much anchored at $24 a barrel. Bloomberg surveillance continues in the next hour. This is Bloomberg.
Urban farming has the potential to grow 10 times more vegetables in a city and improve the city's food security.
Yet another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
This morning, it is the worst British economy since 1706. In the War of the Spanish Succession, Governor Bailey and the Bank of England, they will provide a total and unwavering commitment. The government will sell 41-year gilts. Meanwhile, in the colonies, another Thursday of 3 million additional jobless claims. The president, he considers Depression-era unemployment. And, well, stocks are bid. Bonds, well, they're offered yields higher. After the pandemic, there will be an inflation. Good morning, everyone. This is Bloomberg Surveillance on a most historic day. Tom Keene in New York, Nayra Chayich, at the Docklands, our Bloomberg office in the Docklands on the River Thames. Francine Lacroix in the midst of an interview with Governor Bailey, and we hope to have that for you here in a bit. Nayra, just simply at this historic moment for the United Kingdom, what do you observe this morning?
Well, I'm observing headlines coming through right now from Andrew Bailey, Tom, in the call with journalists that he's having right now, saying there's clearly a commitment to take action, saying that the QE program is highly aggressive and appropriately so, also saying that there's no evidence the BOE is targeting any part of the yield curve. But what's really interesting is that we did see a little bit of differing views in terms of the decision today. There were two policymakers that wanted to extend QE today, but the reaction to the fact we've had no change in policy today is that it's coming. Analysts saying we're going to get more QE either in June or August or both, and the pound catching a little bit of a bid also off the back of the fact that the BOE is forecasting this V-shaped recovery. I think that's what I find staggering. 14% contraction this year, but a 15% rebound in 2021.
Yeah. I think you're dead on that, Nayra. There's no question, folks, what sticks out within all the Excel spreadsheets and the heroic language at this moment, really with Depression-era economy contraction and unemployment is, as Nayra says, this V-shaped hope that we see. In this case, I believe off the top of my head, -14 down to -15. You wonder if tomorrow we'll see that in the American Jobs Report and also in John Farrow's conversation scheduled with Lawrence Kudlow of the White House. Right now, a briefing, your first word news. Here's Ritika Gupta.
Thanks, Tom. Top US and China trade negotiators will speak as soon as next week. They'll try to make progress in implementing a phase one deal. President Trump threatened to terminate the agreement if Beijing wasn't sticking to the terms. The trade deal was signed in January, just before the coronavirus outbreak hammered the world's two biggest economies. The World Health Organization is considering a new mission to China. It's looking at what's called an academic trip to find the animal origins of the coronavirus. There's a growing controversy over how the virus started. The Trump administration has said it likely escaped from a laboratory in Wuhan. China has denied that claim. The UK could start easing its lockdown on Monday. Prime Minister Boris Johnson will unveil his plan the day before. Johnson is under pressure to get the British economy moving again without another surge of deaths. More than 30,000 people in the UK have died from the coronavirus. That's the highest number in Europe. BlackRock CEO Larry Fink has delivered a grim outlook for corporate America. He's foreseeing mass bankruptcies, empty planes, and a rise in the corporate tax rate to as high as 29%. Fink was speaking on a call to clients of a wealth advisory firm. BlackRock is the world's largest asset manager. Global news 24 hours a day on air and at Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Naira, Tom.
Ritika, thank you so much. Let me look at the data. Equities, bonds, currencies, commodities, real simple. Now, Naira mentioning stronger sterling. I'll let her take that. It's fractional, but we'll go with it. But equities continue to drive higher. And the critical distinction over the last 30 hours has been a steepening of the yield curve. Let me use the surveillance hands here. The 2-year is pegged. The short-term paper is pegged. And what you're seeing is the price of the longer duration paper is going out like this with a lower price and a higher yield. And that gets you to a steeper yield curve. Naira?
Tom, we are seeing a bit of a risk-on tone today. You've showed it in U.S. futures, but also in European equities. Green on the screen. A cable kind of stealing the attention a little bit, recouping losses. We do edge up on a 123 handle after 4 days of declines and a 2-week low going into the BOE decision. Of course, what's really striking is the V-shaped recovery that the bank is forecasting, even as they say there are risks to the downside that could show more easing. The Norwegian kroner leading out of G10. We got a cut from the Norges Bank, but they said rates are likely to stay at this level for some time. So perhaps it's the guidance that's leading to that strength, and the 10-year yield dead steady ahead of jobless claims and, of course, non-farm payrolls tomorrow.
In a hugely busy day for bankers, we may have a conversation with the Norwegian Central Bank later on in surveillance. Let us do this. Let us try to gain the history of the moment. We've known these statistics were coming. We've known these reports were coming, but there nevertheless is the absolute shock of depression statistics. Andrew Sheets is a student of the history of economics, finance, and investment with cross-asset strategy at Morgan Stanley. Andrew, we're finally here to depression statistics. How has Morgan Stanley's strategy adapted to that?
So it is really remarkable. I mean, it's not often that you feel very confident that you know what the headlines of the paper are going to be when you wake up on Saturday. And it's going to be that, U.S. unemployment is going to be the highest level that we've had on record since 1947. And it's going to be the highest level by a lot. Our chief economist in the U.S., Ellen Zentner, is forecasting unemployment of 17.7%, which, compares to a prior high of 10.8%. So that is striking, but I think what's equally important is this idea that markets lead the economy, not the other way around. And so I do think markets can be somewhat forward-looking here. I do think what we see in the unemployment data is obviously striking. It's obviously terrible, but it is also, I think, somewhat backward-looking. And I do think markets can look ahead and can ultimately care more about the rate of change than the level.
Andrew, let's start with in-cross asset with bonds. I mentioned the 41-year gilt offered, I believe, May 19th by the government of the United Kingdom. There's talk of longer duration, 20-year, even out further in the United States as well. Is that an indicator of desperation? What does it signal when we see 30, 40, 50-year debt being issued by governments?
Well, I think it's maybe a combination of factors. I mean, obviously, you're looking at some of the largest deficits that we've seen in peacetime in many of these countries, and so given that large amount of issuance, it certainly can make some sense to spread it out and even open up new maturities to that issuance. And I think also in a little ways, I think some of these governments might be a little bit opportunistic, saying, look, we can actually borrow at very long rates at still some of the lowest levels on record. And so let's do that. Let's take advantage of those low borrowing costs and spread this cost out. So I think you also have very, I think, kind of rational acting from those treasuries. Now, I think, as you mentioned, this is starting to steepen the yield curve, and I think that makes sense. I think the bond market is, I think, catching on to the fact that near-term growth is going to be very weak and near-term policy is going to be very supportive. But 2021, 2022, 2023, these years could look different from where we look today, and I think ultimately that will support a somewhat steeper curve.
Andrew, you were saying a moment ago that markets can look ahead to the rate of change, and so many people have been saying to me the reason that equity markets are priced where they are is that people are looking through not just the economic data but also earnings, to the recovery on the other side, and importantly to the stimulus on the other side. Does what you're seeing in investor positioning, sentiment, levels of cash support that view as well?
Yeah, it's interesting actually, because while I hear a lot that I think from investors that the market as we say is kind of expecting a V-shaped recovery or is expecting things to normalize. Actually, I think talking to investors, I think there's a lot of skepticism. I think a lot of investors themselves are more hesitant about that view and are more skeptical that growth will bounce back. And so I do think investors are reasonably cautious here. We see that in many different measures of positioning. We see that high cash balances, as you mentioned, where I think a lot of investors, for very understandable reasons, in March and April, sold assets, tried to get more liquid in what they were holding, but that has left them with unusually high levels of cash, which ultimately I think helps limit some of the downside in the market, and over the longer term, I think should be a supportive factor.
If that cautiousness among investors shifts and we see some of the cash start to come off the sidelines, Andrew, what's going to benefit more, equities or credit?
I think at the moment credit will, and I think there are a couple of reasons for that. I think corporate management teams, I think, have moved into a credit-friendly mindset. They're focused on protecting the balance sheet more than growth, which is a phase in the cycle that's often quite credit-friendly. I think with credit you have less uncertainty, or you're less vulnerable to exactly where earnings end up, or Tom, as you kind of mentioned at the opening, some of these discussions around, say, where the tax rate might ultimately end up after all of this. Credit will be somewhat less sensitive to that. So I think for the moment, both investment grade and high yield credit are the bigger beneficiaries. But look, ultimately, I do think this will filter into equities as well, and ultimately. Yeah. I think that's especially true if we start to see more clear signs that the data really is bottoming.
My reading of history here, Mr. Sheets, is simple. With a contraction like this, there are combinations. Address how Morgan Stanley sees the future of transactions, combinations, just general M&A wrapped around what we're observing now, which is a new wave of bankruptcy.
Yeah, so I think it will be a really interesting environment because you will likely see a pretty severe default cycle. At Morgan Stanley, we're forecasting a U.S. high yield default rate of somewhere between 10 and 14%, which will be certainly on par, if not a little bit higher than what we saw in 2008, 2009. I think it will mean that companies that have strong cash positions and strong balance sheets are going to be in a very advantageous place to take advantage of that, to make to do transactions that might otherwise present themselves. And so I think that also goes to this point of it's not just investors who are trying to raise cash. I think companies are doing that as well, and again, ultimately, I think that will be a supportive factor because that cash ultimately gets released into the market. But I think at the moment those companies are focused on liquidity and trying to make sure that they can make it through.
Let's do this. Let's continue with Andrew Sheets of Morgan Stanley. Thrilled that he's with us today. I've got a number of really good guests coming up. The string of conversations, folks, we've been having has just been extraordinary. On this historic day where there is discussion of the United Kingdom back to Queen Anne and the War of Spanish Succession, there can be only one conversation of the day, and that will be Francine Lacroix in conversation with Governor Bailey of the Bank of England. That is scheduled for 7 a.m. New York time. That will be required listening for Global Wall Street. Stay with us from the Docklands in London. From New York, this is Bloomberg. We welcome all of you. Bloomberg Surveillance from New York here on the Upper East Side near Mount Sinai. And of course, in London today, London Docklands is Nara Chayich in for Francine. Again, Francine's conversation at 7 o'clock-ish New York time with the governor of the Bank of England. And again, to frame an historic day, just stunning economic data and economic contraction out of London. Jobless claims coming up here at 8:30 in the United States, another 3 million scheduled, and on to tomorrow's jobs report, widely anticipated in America. Andrew Sheets with us with Morgan Stanley. Andrew, I want to talk about the mathematics you knew at Brown. Are we going to see glide paths, or are we going to see abrupt jump conditions in the markets as they adapt and adjust to the pandemic and the economy of the pandemic?
So I think the really crucial thing here is holding a positive rate of change. There's a lot of debate, as you're aware, around what letter does this recovery look like. Is it a U? Is it a V? Is it a W? What have you? And ultimately, I think that debate is really, I think the debate between U or V-shaped, I think at some level is a little bit of a red herring. I think both of those recoveries imply that the worst is going to be behind us, that the worst is happening now, or the worst happened in April, and that there's a recovery after that. Is just debating over how fast that recovery is. I think in both cases, the market can actually be quite forgiving to that recovery, even if it's slow, because the worst is behind you. I think the scenario that drives a lot of volatility in the market, the scenario that I think is really unsettling, is that W-shaped, is anything that kind of hints that, we might have to shut the economy might need to be shut down in a bigger way again because the reopening was not successfully executed or cases are spiking again. That's the event that I think the market's not priced for. It's not our base case at Morgan Stanley, but it's something that we're certainly keeping an eye on.
Andrew Sheets, back to the historic moment that we are in. What will you listen for from Governor Bailey today?
I think for I think in the UK again, I think it's the question of willingness to do more, and we do think that will be there. Again, I think the question around the forecasts and whether or not they're overly optimistic, I think in our view they're reasonably in line with what we're expecting. Again, these are forecasts that would probably roughly bring the economy back to where it was prior to the crisis, not until the end of next year. So that is still, I think, consistent with a very gradual normalization process. But I think the Bank of England, and I think we've seen this, a similar tone out of the ECB and the Fed is I think central banks that really are willing to act, very aggressively to kind of do what it takes to act very rapidly, even relative to some of the big interventions that we've seen over the last 10 years.
Andrew, the W shape that you said the market is not priced for in terms of a recovery, if the market starts to price for that, what would you change in your strategy?
Well, I think we'd have to change a number of things, if I'm honest. We'd have to reverse our constructive view on the market. I think we'd have to reverse a belief that credit, both investment grade and high yield, can continue to tighten here. I think we'd have to reverse our view that we think, volatility could fall, and I think we'd have to reverse, this idea that we could see expectations for inflation rise, a steeper kind of 5s, 30s curve in the U.S. I think all of those things would be at risk. So, it's a very crucial debate. Obviously, we need to take some view on what shape that will be, and at the moment we're not in that W camp. But we're watching that very closely, and we're working very closely with our healthcare analysts at Morgan Stanley in terms of trying to determine what path we think is most likely for cases and what that could mean for the overall economy.
Very good. Andrew Sheets, thank you so much. We've got much more coming up, of course, here in less than 2 hours. Francine Lacroix's conversation with the governor of the Bank of England. That's without question the interview of the day. But then we move on to a view from the West in California with some really changing dynamics within the pandemic. Bloomberg will speak with Mary Daly of the San Francisco Fed. Futures elevated. Stay with us. This is Bloomberg.
This is Bloomberg Surveillance. I'm Ritika Gupta. Let's get the Bloomberg Business Flash. Telefonica and Liberty Global will create the UK's largest phone and internet operator. Telefonica's O2 and Liberty's Virgin Media will combine. The deal values the new company at $38 billion. It marks another industry-defining merger for the billionaire who controls Liberty, John Malone. The world's largest beer maker warns the second quarter will be much worse than the first. AB InBev says April shipments fell 32%. That's because of bars and restaurants being closed due to the coronavirus outbreak. AB InBev's first quarter shipments were down 9.3%. And Peloton is cashing in on the nationwide lockdown. The maker of fitness equipment and online exercise services says quarterly revenue soared 66%. Peloton also raised its forecast. The coronavirus outbreak has led thousands of Americans to buy the company's stationary bike and work out at home. And that's your Bloomberg Business Flash. Francine, Tom.
Ritika, thank you so much. Let's look at equities, bonds. Equities lift right now, no question about it, with the curve steepening. More evident yesterday, a little bit this morning. I don't want to overplay that. And what I really see, folks, is continued dollar strength and euro weakness. Joining us now in London, Francine Lacroix with a data check. Francine, good morning.
Yeah, with a guest appearance. Good morning, Tom. I decided to show up for work. No, I'm kidding. I was at the Bank of England to talk with Governor Bailey. That interview is a little bit later on, but this is what I'm looking at the market. So if you look at pound, it's had a bit of volatility on the back of what we heard from the Bank of England this morning. If you look at oil, it's pretty much unchanged, but actually pound fluctuating after the BOE held rates but signaled more stimulus to come. Coming up, we speak to the former BOE MPC member. He's Ian McCafferty, and we'll talk to him also about why not move now. The big debate, Tom, is first how you unwind all of this extra stimulus, but basically what the government has been doing is saying we'll have a better plan on the lockdown when that eases by Sunday. And so it seems that the Bank of England really wants to wait to have more news on furloughs when that ends, and also the end of the lockdown to put extra stimulus on the table. So we'll touch on that next. This is Bloomberg. Tom on Francine from London and New York. As always, this is Bloomberg Surveillance. Now, the Bank of England signaled it could expand monetary policy, this probably in June, to help the battered UK economy. Now, they've left rates unchanged and refrained from boosting its bond buying program, but we have a great deal of time with Governor Bailey to try and figure out exactly what it means in terms of growth and lockdowns. He is, the governor, saying that he's committed to taking action when needed. Well, we're delighted to be joined now by Ian McCafferty. He's former BOE MPC member and now Oxford Economics Senior Advisor. Mr. McCafferty, thanks so much for joining us. Why wait until June when they could have acted now?
Well, I think part of the reason will have been that they want to take stock of what's going on. We will have a lot more information about the economy over the course of the next few weeks once the lockdowns start to ease. And that, I think, will be important in terms of how much more stimulus might be required. But I think there's another issue here, which is that, of course, the emergency increase in quantitative easing that was announced a few weeks ago was largely in response to the clear signs of difficulty in the gilt market. And given that the gilt market has stabilized since on the back of that additional QE, and that's in spite of the size of the likely government issuance that we're going to get over the course of the second quarter, I think they now have the ability to wait and see. If the gilt market starts to show signs of indigestion as the government issues new debt, then I think they will step in, but they don't need to immediately.
Ian McCafferty, if you look at the projections, and they don't really have any forecast, but they're expecting in terms of GDP probably a V-shaped, which is basically a big drop-off in 2020 and then a pretty strong recovery in 2021. This seems very different to other central banks. Who has it right?
Well, I think it depends on the assumptions that you make, and their assumptions are that the lockdown is eased relatively quickly over the course of June and into the third quarter, and that by the fourth quarter, much of the supply side of the economy is back to functioning. What they then assume is that there is some lag in terms of pickup in demand as a result of this sort of caution on the part of consumers and business investors, which means that while a good deal of the economy returns to activity relatively quickly, we don't get back to the pre-crisis level of GDP until the middle of 2021. So it's a V shape in the sense that as we open up, quite a lot of activity can start relatively quickly, but we don't get back to where we were before the lockdowns for a little time.
Mr. McCafferty, what will business do in the United Kingdom? Your heritage is to be very sensitive to finance and very sensitive to the business spirit of the nation. What will business do as they react to these economic statistics and the actions of the Bank of England?
Well, I do think that clearly business confidence recently has shown signs of falling quite sharply alongside the falls in consumer confidence we've seen. And that, I think, is in response to the speed of the lockdown and the speed of the transmission of the virus that we've seen so far. But it's also clear that some indicators very recently have suggested that, if anything, activity is stabilized, and that as the lockdown starts to be eased, we should see a resumption of confidence for both businesses and consumers. So I think from that point of view, it's quite likely that activity can be resumed, and that some of the business investment that's clearly been held back as a result of the recent lockdown can be restarted as we go towards the end of the year.
Mr. McCafferty, the media makes a big splash today about a compare and contrast with the time of Queen Anne in 1706. Obviously, that's a little unfair to everybody involved. But what is the character of this economic contraction?
Well, I think we could describe it as a very short but also very sharp contraction. Clearly, the degree of the fall in GDP that we're likely to see in the second quarter is unprecedented in either war or peacetime. The Bank of England suggests that GDP in the second quarter will fall by 25%, and over the first half as a whole by some 30%. That's simply because we have shut down such an amount of the economy that we're now operating at some 65 to 70% of normal levels. So you'd expect that very sharp, very sudden fall in GDP simply as we've shut things down. But at the same time, I think the economy started this lockdown in a better position than we've gone into most previous recessions. We didn't see the imbalances in the economy that we had over the course of the global financial crisis of 2008. And as a result, I do think that with the bridging actions that the government has taken through the protection of jobs, through the furlough scheme and the protection against unnecessary bankruptcies as a result of the business loan schemes, we can see the economy come out of this hibernation. And in the shape of the Bank of England forecast or scenario, we can see quite a good recovery as we go through 2021.
What if it's much worse than we expect? Are there signs out there? Is it negative WTI? Is it trade that makes us nervous? You know, are the assumptions that people that are furloughed now then have their job back wrong?
I think the assumption that the bank has taken, certainly, and judging by the size of the number of people who've taken advantage of the furlough scheme so far, is that a good deal of that employment can be protected as we go back. There are going to be a number of sectors which are not going to go back to pre-lockdown conditions. The airlines, for one, for example, are going to find it a good deal of time before they go back to pre-crisis styles of activity. And I think there will be others in the leisure sector where the recovery will be much more long-lasting, or will take longer than would be for other sectors of the economy. For a good deal of the economy, we can see things come back relatively quickly. And I do think we will see a good number of those jobs therefore protected.
When should we start thinking about how we exit all these extra stimulus?
Well, I think we have to see quite how the economy recovers, to what extent we will see. I think the big unknown in all of this is how people will behave as the lockdowns are eased. I think the supply side of the economy, production, can come back relatively quickly. What we don't know is whether there will be voluntary social distancing thereafter, as consumers remain cautious about going out, about going back to the shops, and about resuming their lives because of the persistence of the virus. So from that point of view, it may well be that demand grows rather more slowly than the resumption of supply, and that would mean that the recovery would be somewhat slower. Once we know that, and I think for the time being it's a big unknown, because while the general view now is that there will be some caution, if we go back to the flu epidemic of 1919, 1920, that was followed by the Roaring Twenties, a great deal of relief and high spirits. So I think there is an argument on both sides as to how long we will see consumer caution remain. But I think once the economy starts to recover, and certainly once inflation starts to move back towards the 2%, which on the bank's forecast is over the course of their 2-year horizon, then I think we can start to see the possibility of easing back on some of this stimulus.
Mr. McCaffrey, with all this shock and the stunning economic statistics, and folks, I really can't convey to you, we've all known it's coming, but just to see the numbers in the U.S., in the United States, and frankly around the world is just extraordinary. We have a changing of the guard at the Bank of England. How will Governor Bailey be different, Mr. McCafferty, from Governor Carney?
I think in some ways we will see some differences, particularly that, of course, when Mark Carney started at the bank was in the process of major structural change. It had been obviously in charge of monetary policy, but it was also taking charge of financial stability through the sister committee to the Monetary Policy Committee, the Financial Policy Committee, and was being handed a good deal more responsibility when it came to bank supervision. So the bank was moving, in the parlance of the governor at the time, from 1 pillar to 3. And a good deal of that structural change of the bank has now been completed. And as a result, I think it's moving into a slightly new era where we need steady progress rather than that structural change. But I do think, Andrew Bailey is an extremely experienced bank old hand, if you like. He spent a good deal of his career at the bank before moving to other pastures before coming back. And as a result, I think there will be a deal of continuity as well.
Thank you so much for joining us. Ian McCafferty, there, a former Bank of England MPC member and Oxford Economic Senior Advisor. Tom, also don't miss, of course, our conversation with the Bank of England Governor, Andrew Bailey. I just stepped out to the Bank of England to do that interview, and then we'll play it out in about 1 hour and 20 minutes. We talked about inflation. We talked, of course, about stimulus. We also talked about the price of oil. So quite timely, given what we just heard from Saudi Arabia, Tom. Brent crude rising as much as 4%, 4.2%, as Saudi actually hiked some of their oil prices to Asia, Tom.
Oh, there's no question about it. To Asia, huge surprise there. And, again, this has been the backstory of the week, folks, to see West Texas Intermediate and particularly Brent crude, the global price, Francine, go out over $30 a barrel is something.
Yeah, it'll be interesting to see exactly what this means in the coming days for Brent and WTI. So let's get straight now to the Bloomberg First Word News in New York City is Ritika Gupta. Hi, Ritika.
Hi, Francine. More signs that Europe is starting to reopen. The UK is set to ease parts of its lockdown. On Monday, there will be more freedom for people to leave their homes, but no major changes are expected yet for businesses. In Germany, restaurants and shops will be allowed to reopen, and the Netherlands will begin a phased reopening of business starting Monday. Auto parts makers in the US now want access to federal loans. They want to resume making the components needed for assembly plants to begin making cars again. Both Democrats and Republicans are urging House leaders to help. Automakers shut down their factories in March because of the coronavirus outbreak. India is looking to lure more than 1,000 US businesses out of China. One of those that's being targeted is medical devices giant Abbott Laboratories. Other businesses in India hopes to attract include food processing units and auto parts makers. The Trump administration has been blaming China for its role in the coronavirus pandemic. And Supreme Court Justice Ruth Bader Ginsburg has been released from the hospital. She was being treated for a benign gallbladder condition. Bader is 87. She's the oldest justice on the court. Earlier yesterday, she took part in 2 telephone arguments from the hospital. Global news 24 hours a day on air and at Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thank you so much. In America, a big focus this morning in this hour on the Bank of England and Francine's conversation coming up with Andrew Bailey. But in America, there is so much going on wrapped around the shock of 16, or as Morgan Stanley says, even 17% unemployment rate. Our David Weston in conversation with the Speaker of the House on her California. Look for that later. This is Bloomberg. Good morning, everyone. Bloomberg Surveillance. I want to tell you about the conversations on Bloomberg today that are going to be just really important for global Wall Street. First of all, Francine Lacroix with Governor Bailey. Look for that in the 7 o'clock hour. I'm thrilled to tell you as well that busy Ms. Lacroix will have a conversation with Christine Lagarde of the ECB, Ms. Georgieva of the International Monetary Fund, and Dr. Frieden of the CDC. This will be really quite something, very pandemic-centric, but Lagarde and Georgieva together will be very, very special as well. I look, Francine, at all that we've got going on today, and right now, I think that we need to look back a little bit at the extraordinary effort of GM yesterday. Here's David Weston with their Chief Financial Officer.
Yeah, inventories are something that we're watching. We are well positioned on most car lines, and as you know, we came out of the strike in later part of last year, and we have had lower, leaner inventories, and it's frankly, it's going to be helpful in a scenario where SAR ramps up slowly. Looking at it, and from a pickup perspective, we do find ourselves in a situation where we have lower inventories. But the good news is the dealers have gotten very experienced in managing through the constraints that they're seeing in the product and how to dig deep into inventory and still maintain sales. So that's the good news. And as we think about the plans returning to work that we're targeting May 18th, that should help us address the shortfall from an inventory standpoint.
GM announced its first quarter earnings today. It also announced that it took down some money from some revolving credit lines, something like $3 billion in the automotive, another $2 billion in GM Financial. That's after already amassing something like $33 billion in automotive liquidity. As you look forward, Divya, what tells you you're going to need that extra money?
So if you think about our liquidity, we've always, in the last several years, said we want to run a very strong investment-grade balance sheet. And that's actually come in handy during these kinds of times. And as you quoted, we did end the first quarter with a very strong liquidity position of $33.4 billion. And David, it's difficult to anticipate what's going to happen, but we are taking steps to protect ourselves, whether it's austerity or, like you mentioned, revolver and suspending dividends and share repurchases as I would say, precautionary measures to make sure we have additional layers of liquidity. We are comfortable with our liquidity position now that will take us well into Q4, even in a scenario with which is pretty onerous of like zero production. And obviously, as we talked about the restart, when we have a restart, our liquidity levels will recover from here. So I would say these actions are precautionary and proactive actions to make sure we have additional liquidity buffers in place. So what we're focused on now is to safely restart the plants and get the production up and running.
So this pandemic comes along at a time when the auto industry and General Motors were going through a transformation, a fundamental one, to autonomous and electric vehicles. You've been investing quite a bit in both of those. Are you changing your investment plan on that? Do you have to put that to the side while you deal with the after effects of the pandemic?
Absolutely not. We are marching ahead in our plans with EVs and AVs. We're committed to an all-electric future, and all the plans that we've outlined recently in our Capital Markets Day, as well as our EV Day, with respect to the products, the exciting products that are going to be rolling out, we see little to no impact on any of these. The capital actions we're taking and the austerity actions will not impact the programs that you just outlined. So we're fully committed to that. And frankly, the balance sheet that we've been maintaining and the financial flexibility we have allows us to continue these investments as we go forward, even in these challenging times.
You raised one last issue, which is the pace of the introduction of new vehicles. Put aside EVs and AVs, just in general. That's one thing that's been a hallmark of CEO Mary Barra while she's been there, having an increased pace of new vehicles. Is that going to slow down?
We are committed to putting products that our customers are very excited about, and you can see the success that we've had recently, even with our trucks, and that's not going to change. And we do put the customer in the center of everything we do, and you will see that continue in the product cadence that comes along here.
Well, that was the General Motors CFO speaking to our very own David Weston. Now, today on Leadership Live with David Rubenstein, the Carlyle co-founder, is speaking with the Qualcomm chief executive. How is this leader in wireless technology faring during the crisis? Well, we'll find out. 4:30 p.m. in New York, 9:30 p.m. in London, and this is Bloomberg.
Good morning, everyone. Bloomberg surveillance from London, from New York. An extraordinary historical moment. You're seeing it in the economic data. You're seeing it in so much in the markets as well, with equities up. And then there's oil. I've lost so much money in oil over the last 2 weeks. I don't even know where to begin. So we begin with Javier Blas, running all of our energy coverage. He's just been fabulous, LinkedIn. Javier, first of all, Saudi Arabia is raising prices to Asia. Are they raising prices to other people as well?
Yeah, there has been a big movement just now by Saudi Aramco, the Saudi state-owned oil company. They are effectively raising the price of most of their crude to every customer in the world, Asia, the Mediterranean, Northwest Europe, and the United States. They are moving to prop up the market. They usually offer big discounts, and you remember that when the price war broke, what the Saudis did was to offer huge discounts for their crude oil, sending prices down. What they are now doing is they are reducing the size of those discounts, effectively increasing the price of their crude. And some of those increases are absolutely spectacular. The Saudi crude for May was sold in Europe at a discount of about $10 per barrel to the benchmark, to Brent. Now for June, the discount is being reduced to $4 per barrel, give it or take a few cents. So that's an indication that the Saudis are moving to prop up the market. They see that the market is recovering, and they're trying to help pushing prices higher.
Javier, how risky is this if it hurts demand?
Well, it's a risky move because obviously the demand is still very fragile. But I think that what the Saudis are here trying to do is to send two signals. One is a political signal. The price war is over. Not only we reach an OPEC plus deal that included Russia, but now we are bringing our pricing structure to what it was normal. So that's a political signal. It's a signal to the market, but it's a signal to everyone else in OPEC plus, saying the Saudis are doing their part. The other one is a signal to the market. They are indicating that they are confident that the demand is there for their crude.
Right. Very interesting. Javier Blas on short notice. Thank you for that brief here as Saudi raises prices to Asia with a nice elevation of Brent crude, now well out over $30 a barrel. We've got so much more coming up. David Page will join us from AXA. And then an hour from now, Francine Lacroix's interview with the Governor Bailey of the Bank of England. Later, Lagarde and Georgieva. This is Bloomberg. Good morning. Good morning, everyone. This morning, it is the worst British economy since 1706 and the War of the Spanish Succession. Governor Bailey and the Bank of England will provide a total and unwavering commitment. The United Kingdom government will offer 41-year gilts. In the colonies, meanwhile, another Thursday of 3 million additional jobless claims. The president, he considers depression-era unemployment. And stocks are bid this morning. Bonds, they sell off, yields higher. After the pandemic, there will be an inflation. Good morning, everyone. This is Bloomberg Surveillance from New York, from London. We welcome all of you today in just an extraordinary set of conversations as Bloomberg News tries to advance the dialogue this morning. We'll do that in Washington. Mary Daly of the San Francisco Fed later in the morning. But Francine, before that, we'll have Christine Lagarde, Madame Georgieva of the International Monetary Fund. In an hour, your conversation with Governor Bailey.
Yeah, Tom, I think if you try and distill exactly what we're trying to do at Bloomberg News, there are three main questions that we need to try answered. First of all, what kind of recession and what kind of recovery we'll get. Second, this inflation versus deflationary debate, but also what is the permanent scarring to the economy. So we'll do that with Governor Bailey, of course, of the Bank of England. We'll also try and do that with the IMF in touching on debt and what countries may have to need some kind of support in the future. Christine Lagarde, also extremely interesting because it will be the first time that we hear from her since that German court decision. So we'll see what she has to say about the legality or not of what they did.
And there's all different opinions, folks, on the complexities of this German court decision and the European Central Bank. George Saravelis at Deutsche Bank out with a blistering note this morning, really wondering if the ECB even will respond to the German court. Right now, we respond in this terrific news flow to our First Word News. Here's Ritika Gupta.
Hi, Tom. Hi, Francine. Top U.S. and China trade negotiators will speak as soon as next week. They'll try to make progress in implementing a Phase 1 deal. President Trump threatened to terminate the agreement if Beijing wasn't sticking to the terms. The trade deal was signed in January, just before the coronavirus outbreak hammered the world's two biggest economies. The World Health Organization is considering a new mission to China. It's looking at what's called an academic trip to find the animal origins of the coronavirus. There's a growing controversy over how the virus started. The Trump administration has said it likely escaped from a laboratory in Wuhan. China has denied that claim. The UK could start easing its lockdown on Monday. Prime Minister Boris Johnson will unveil his plan the day before. Johnson is under pressure to get the British economy moving again without another surge of deaths. More than 30,000 people in the UK have died from the coronavirus. That's the highest number in Europe now.
Order submitted.
BlackRock
Order
CEO
submitted.
Larry Fink has
Order
delivered
submitted.
a grim outlook
Order
for corporate
submitted.
America. He's
Order
foreseeing
submitted.
mass
Order
bankruptcies,
submitted.
empty
Order
planes, and a
submitted.
rise in the corporate
Order
tax rate to
submitted.
as high as
Order
29%.
submitted. Order
Fink
submitted.
was speaking
Order
on a call to
submitted.
clients of a
Order
wealth
submitted.
advisory firm. BlackRock is the world's largest asset manager. Global news 24 hours a day on air and at Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Very good, Ritika. Thank you so much. I really want to go over the data, and I'm going to do this. I do this like once a week, folks. I don't do this twice a week because Francine goes nuts when I do this. The coolest thing is the Bloomberg terminal on your iPhone. I knew it was great, but within the pandemic and working at home as we are, this has become something I'm glued to all day. With the VIX, two big figures in this bull market in stocks, it continues 31.72 on the VIX. Futures up 40, Dow futures up 293 as well. Over in yields, and I did this before, I'm going to do it again. This drives John Farrow nuts, Francine, when I do this. The 2-year yield is pegged. And the longer out yields, the 10 and the 30 are moving up, so the yield curve's steepening as those far out yields curve. No word yet if the U.S. will have a 41-year gilt. I note dollar strength, and I really want to point out some inconsistencies in EM with Brazil, a very difficult day, and Turkish lira just simply moves out to new weakness. Francine?
Yeah, I'm glad you brought up Turkish lira, Tom. I actually spent a bit of time earlier this morning looking at that. I'm looking at pounds. So we heard from Andrew Bailey, the governor of the Bank of England, hinting at stimulus ahead. A pound, we understand from a lot of market traders, at this point needs a little bit more than just comforting words. I'm also looking at that Saudi headline, slashing oil price discounts in a bid to try and prop up the markets. It is having a bit of impact when it comes to Brent and crude. You can see WTI at 25.5 52. So there is quite a lot going on, Tom, in the markets. And then we have this corporate news here in the UK with Virgin Media and O2 to combine to create this $38 billion heavyweight, Tom.
I'm so glad you brought that up, folks. I mentioned this to Andrew Sheets, and I'm going to tell you, folks, I'm not going to mince words on this. The one thing missing in this horrific economic data is what every moment of history tells us, which is you see combinations, just as we see in telecom today within the United Kingdom. You really wonder where America will be on that in the coming months. Terrific news flow on this Thursday. And of course into Friday, we're to come back with some important conversations on economics, finance, and investment. Stay with us. This is Bloomberg.
Order filled. Order submitted. Order submitted. Order filled. Order submitted. Order submitted. Order filled. Order filled. Order filled. Order canceled. Order canceled. Order canceled.
Bloomberg surveillance, Tom and Francine from London and New York. Tom, the Norges Bank delivered an unexpected interest rate cut to zero. Policymakers in Norway reacted to the combined fallout from the COVID-19 crisis and the collapse of oil prices. Well, we are delighted to be joined by the Norges Bank governor. He's Øystein Olsen, and he joins us now. Governor, thank you for joining Bloomberg Surveillance. How worried are you in this juncture in the economy about the weakening krona?
Well, you know, the background for central banks these days, and also Norges Bank to act, is that the activity in the economy has fallen sharply as a result of the corona pandemic. And in our case, the downturn is amplified by very low oil prices. And then that was the background for Norges Bank to act clearly in March. We had a policy rate at 1.5, which was reduced in March.
Order filled. Order filled. Order submitted.
At this juncture,
Order
we
submitted.
took a new
Order submitted. Order
and
submitted.
reduced the
Order
policy rate
filled. Order
to zero.
submitted.
So yes, I
Order
think you should
submitted.
see this policy reaction in our case, where we had a room of maneuver in monetary policy, in the interest rate policy, and we have we have utilized that room of maneuver.
Right. Have you had to intervene
Order
though, in
filled.
FX markets?
Order
You said
submitted.
in the past that you were
Order
ready to.
submitted.
Have
Order
you done
filled.
it so far?
Order
and
submitted.
will you have to?
Order submitted.
Yeah, the answer is yes. Going back to March,
Order
where
filled.
we
Order
were
submitted.
all hit
Order
by
submitted. Order
the
filled.
virus
Order submitted.
and the downturn.
Order submitted.
We reacted
Order filled.
in the
Order
to
submitted.
reduce the policy
Order
rate.
submitted.
We also introduced liquidity measure. We have supplied the market with significant amounts of Norwegian kroner, and we, for the first time, if you go for 20 years, we announced that we were ready to intervene in the currency market to contribute to have the market functioning. And yes, we have done that to a limited extent, and you can find the numbers in the report which we published today.
Governor Olson, thank you so much for joining us today. To have Andrew Bailey with us and then Madame Lagarde and Madame Georgieva with us, and to have you lead that conversation is wonderful. You discovered oil in the North Sea in 1969, and the interdependencies of your central bank effort with the Sovereign Wealth Fund and with oil production is absolutely original and extraordinary. In this pandemic, is that delicate balance at risk? Is there a risk that Norway upsets the prosperity that has been generated since 1969?
Yeah, no, I don't think. My short answer is no, I don't think so. But before continuing, let me stress that, of course, looking forward, it's a challenge for the Norwegian economy if oil prices remain at the present low levels. But if you go back to 1969 and forward, we have actually exploited these opportunities, and we have spent somewhat of the money, but we have saved a lot. So we have that built, as you indicate, a huge sovereign wealth fund, and we benefit from that room of maneuver in fiscal policy these days. So and that room of maneuver remains, and it obviously is a positive feature of our society, and that we have this room of maneuver, unlike a number of other countries.
Right. The Norwegian bank folks, and I don't know how many of you know this out there watching us from Global Wall Street, but Norwegian Central Bank led central banking in clarity of statistics decades ago. And Governor Olson, you came from that division, the statistical division. Can you give us the most efficacious oil price for Norway? Do you have in your head the best price of Brent that advantages Norway in the microeconomics of oil?
And the price of oil which could damage or which we could survive with?
No,
is that the question?
Which would benefit you? Yes. Which price of oil is the best price for you?
That's a very difficult question. Of course, on the one hand we benefit from, say, reasonably high oil prices exceeding average costs, including capital costs, and that's been a case. To be in a crude way, if we have oil prices in the range of, say, $50, $60, my clear view of the cost level and the prospects in on the shelf is that's fine. But in isolated, even higher oil prices could be fine. But then we also have to take into account the effect of very high oil prices on markets, on demand. You have the climate challenge, which is there. So it's a complicated issue. But of course, being an oil nation, having the possibility to remain so for the future, we could hope for, say, oil prices coming back to around, say, $50, $60.
Governor, are there limits to how much monetary policy can actually achieve in a crisis like this? And how would you describe the fiscal response from your country so far?
The fiscal response has been strong, but as I just said, we have this room of maneuver through this huge sovereign wealth fund. Now our estimates of the usage of oil money is in the range of exceeding 4% of the fund capital. That's higher than the fiscal rule, But we assume we expect this going forward. We expect more restrictive fiscal policy in the future as far if the coronavirus sort of goes back, if there's a rebound in the economy as it may seem now.
The government's withdrawals.
So no
this
drama
year
in fiscal
from
policy, and the response is strong, and we have this room of maneuver.
Governor, the government's withdrawal from the Sovereign Wealth Fund this year will, for the first time, actually exceed the fund's own cash flow, forcing it to sell assets. How challenging is this for the Sovereign Wealth Fund?
There's no special circumstances around the features you now indicate. It's part of the system that if you go back, there has been an inflow to the fund. If needed, there could be an outflow, and in this very special situation where we have a dramatic fall in activity, the worst downturn since the Second World War, it's part of the guidelines, in general guidelines, that in such circumstances you could spend more, and there's no practical challenges in the market or in the case of the role of the central bank in that respect.
Governor, thank you so much for joining us today with the Norges
Order
Bank.
filled.
Order we greatly appreciate
Order filled.
your time.
Order
We'll move
filled.
on to a further
Order
discussion
filled.
in this historic
Order
moment.
filled.
Stunning
Order canceled.
economic contraction
Order canceled.
and stunning
Order
labor
canceled.
statistics.
Order
We must
canceled.
speak with
Order
Andrew
canceled.
Bailey of the Bank
Order
of England.
canceled.
Francine will speak with Governor Bailey. You'll see that, I believe, at 7 a.m. New York time. Please stay with us. With equities elevated, this is Bloomberg. Bloomberg Surveillance. Good morning, everyone. From London, from New York, I'm Tom Keene with Francine Lacroix. She's at Queen Victoria Street today. We've got important conversations coming up. Mary Daly of the San Francisco Fed later today, and Andrew Bailey of the Bank of England with Francine. Look for that in a bit. Right now, to bring all of this thinking together in the market impact, David Page joins from AXA, where he handles strategy. David, what is so important right now about the linkage of economics into investment and into finance is the issuance of bonds. What does this gross issuance of bonds mean for our viewers and listeners?
Well, it reflects two things. I mean, firstly, it reflects the extraordinary nature of the government reactions that we've seen across the globe, and that in turn obviously reflects the sort of stark shock that we're seeing to the economies. But also it does suggest a material transformation in the way that government bond markets have to operate. And we're seeing, therefore, central banks coming in to provide some easing in that. Now, we all know that central banks are very keen to suggest they're not taking part in monetary financing. But what they are doing is absorbing this huge increase in government issuance. In the UK, it seems relatively small beer, but very large. 180 billion over the next 3 months. In the US, 3 trillion over the second quarter. But the expansion of central banks' balance sheets is something that's allowing that absorption for markets to take place.
Nicely explained.
Order filled. Order filled.
It sounds
Order
like
filled.
a free lunch.
Order canceled.
There's
Order
no such
canceled.
thing as a free
Order
lunch.
canceled.
What are the ramifications of central banks taking all that stuff onto their balance sheets?
Well, the risk, obviously, is who pays for it and when they pay for it. And what the central banks are doing is providing some scope for markets to absorb this at the moment. But ultimately, and particularly when we think about the operation of the central banks in the UK and in the US, there's interest on excess reserves. So ultimately, this isn't a free lunch. At some point in the future, interest rates will rise again. And at some point, those massive balance sheets that the central banks now carry will start to have to pay interest on those excess reserves. So what you'll be seeing is a massive fiscal transfer from taxpayers to commercial banks via the central banks. And that's going to be desperately unpopular at the time. But that is paying down the debt. So what we're doing is an intertemporal shift. We're changing the pinch point at when we start to pay for this. And of course, we're pushing it into the future. That's what monetary policy does. We're pushing that pinch point into the future. But it's still out there. And at some point, we are going to have to consider how we pay this down. Now, that's not something we're likely to think about over the next 6 to 9 months. It's not something that probably, because of the central bank action, that we'll have to think about for the next 2 to 3 years. But over the coming decades, that is what we're going to have to think about. And the impact on markets in the medium to long term is that we're going to see more this increased debt level pushing interest rates lower and keeping rates lower for longer.
David, when you look at the unintended consequence of all of this, do markets get nervous when we start to unwind all of this extra stimulus?
Sorry, do they get nervous when we unwind
all of this extra stimulus, all of the everything put in place?
If we unwind all of this, markets, yes, would get nervous. But I think, we're looking at a very long play list of how this goes through. If we think about, for example, the Bank of Japan, to take another central bank, they've expanded their balance sheet massively. There's absolutely no hint whatsoever that their balance sheet is likely to come in anytime soon. Government debt continues to rise. Now, obviously, the Federal Reserve was one central bank that did run up its balance sheet and then started to unwind it a little bit. So we would expect stimulus to come off at some point. But the broad breadth of stimulus that's come through, the broad onboarding of debt, is something that's going to be with us for a long time. And I don't think markets need to worry about that unwind for some time. What we will see in the short term is the level of support the government's providing starting to fade back a little bit. So hopefully as the economies reopen, as labour markets start to improve significantly, we would hope in the second half, then the support the government is providing to the economy can be scaled back. But that should be led by improvements in the economy and therefore isn't something that markets are going to worry about too much.
David, thank you so much. David Page there of AXA Investment Managers. Now coming up, don't miss our conversation with the Bank of England Governor Andrew Bailey, that's at 7 a.m. in New York. That's at 12 p.m. in London. Now, we discussed the price of oil. We discussed, of course, some of the things that they've announced today, which is basically a pledge of support. The next time the Bank of England meets will be in June, with Governor Bailey hinting at extra stimulus. Officials urging more QE, and a reminder to everyone, 2 of the Bank of England's 9 policymakers already wanted to immediately increase bond purchases. So, of course, we'll try and figure out exactly why they've decided to hold off for now and not do it today. This is Bloomberg. This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, we're talking about the Bank of England and some of the inflation forecasts out there. Let's get straight back to David Page of AXA Investment Managers. David, when you look at the timeline for this, so for example, the Bank of England seems to be a lot more optimistic about a recovery in 2021 than some of his other counterparts, including the ECB. What is the right way of looking at this sequence? Is it ugly 2020 and then a recovery, or could this be a decade of misery?
Obviously, it could be either, and I think what the Bank of England would stress is the fact that they're not providing a forecast here. What they're suggesting is a possible path, what they describe as a plausible scenario. So clearly, we are definitively going to get an ugly 2020, and that's going to be typified by a very sharp contraction in economic activity in the second quarter. And then really the question is, how much of a rebound do we get coming through from there, starting in the second half of this year? Part of that is on the absolute unknown of what path the virus takes, and that's where many of the assumptions sort of start from. But we also have some more economic assumptions to consider. How do labour markets react? How do businesses react as they come out of this much more indebted? And, of course, what ongoing policy stimulus is there likely to be? And all of those are going to shape the speed of the recovery that comes through thereafter. To our minds, we're a little bit more cautious than the plausible scenario than the Bank of England have put in place. We think there are more persistent headwinds that are likely to come through. That's not to suggest we don't get a very sharp pickup in growth in the second half, but I think it takes just a little bit longer to recover the ground that the MPC is suggesting. But, you know, at the moment, it looks a relatively bold call to say what's going to happen with any certainty over the next couple of quarters, let alone over the next couple of years. And these are very difficult times for looking into the future.
David, when you look at what, you know, with the price of oil and the fact that we had a negative WTI, meant half of the economists we were speaking to said, look, this is a huge deal because it's either something really wrong with the economy or could also point to a potential financial crisis. Is the fact that Saudi are now changing their pricing for Asia give you a little bit more confidence that it won't be worst case scenario?
Yeah, I think so. I mean, obviously, what we're seeing in broad terms is oil being a very special case of the global demand glut the global supply glut, the big fall in global demand that we expect to be coming through. And I think the pace with which demand fell back so aggressively, you know, thinking just even of airlines, but of transport as well, the pace of that drop in demand caught suppliers out. And I think that's why we had such a significant bottleneck of oil coming through. That's why in the WTI context we ran out of storage for that, because suppliers just didn't have the time to address their supply production quickly enough. And I think, you know, looking at future months contracts, that problem looks like it was quite acute there and has moved on. So we don't think that it points to the complete financial collapse that perhaps negative oil pricing would otherwise suggest, although there are clearly risks to that. But I think, you know, the broader context that we're seeing oil prices at levels that we've not seen for a couple of decades now is clearly evident of the massive demand shock that we see coming through.
David, the space under any given line on a chart is called the integrand. And when you do an integrand study of an economic contraction, it folds back to what percent of GDP support does any given nation need? How is the U.S. doing on that? What percent of GDP of combined monetary and fiscal support are we doing, and is it enough?
We think it falls probably short of that being, you know, that integrand type study. So, you know, clearly what we're seeing at the moment is fiscal stimulus of about 12.5% of GDP. It's difficult to calculate what the equivalent is coming through from monetary policy because the Fed's got an open-ended policy. By definition, it could go on for some time. But what we see at the moment is a fiscal impulse coming from the monetary policy side that probably adds somewhere in the order of magnitude of 2 percentage points to GDP in 2021 and about 1% in 2022. So by and large, you're looking at somewhere around 15% of GDP. Now, we would suggest that what we have at the moment is just short of seeing that come through. So if we do our forecasts, then when we get to the end of 2021, we see the US economy somewhere between 1 to 2% below where it would have been had you extrapolated the end of 2019 level going further forwards. So I think there's still more space to come, and I suspect we'll see more fiscal stimulus come through, but it becomes increasingly difficult here because clearly the metrics are going to look very difficult for government debt dynamics, and Congress is going to worry about the huge level of deficit that we see in 2020. And as the economy seems to rebound, then the argument to see more fiscal stimulus is going to be harder to make.
This has been hugely valuable. David Page of AXA, thank you so much. Greatly appreciated this morning. We're in important conversations here as we see this double-digit meltdown of economic growth. That'll be led by Francine Lacroix's conversation with Governor Bailey, Andrew Bailey of the Bank of England. Look for that in the next hour. Worldwide, this is Bloomberg.
This is Bloomberg Surveillance. I'm Ritika Gupta. Let's get the first word news. More signs that Europe is starting to reopen. The UK is set to ease part of its lockdown. On Monday, there will be more freedom for people to leave their homes, but no major changes are expected yet for businesses. In Germany, restaurants and shops will be allowed to reopen, and the Netherlands will begin a phased reopening of business starting Monday. Auto parts makers in the US now want access to federal loans. They want to resume making the components needed for assembly plants to begin making cars again. Both Democrats and Republicans are urging House leaders to help automakers shut down their factories in March because of the coronavirus outbreak. And India is looking to lure more than 1,000 US businesses out of China. One of those that's being targeted is medical devices giant Abbott Laboratories. Other businesses India hopes to attract include food processing units and auto parts makers. The Trump administration has been blaming China for its role in the coronavirus pandemic. And Supreme Court Justice Ruth Bader Ginsburg has been released from the hospital. She was being treated for a benign gallbladder condition. Bader is 87. She's the oldest justice on the court. Earlier yesterday, she took part in 2 telephone arguments from the hospital. Global news 24 hours a day on air and a quick take on by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine Tom.
Ritika Gupta, thank you so much. If you get lucky out of college, you get one of the most interesting jobs at the time in America, and that was working for the car czar. Haley Stevens was chief of staff for Steve Ratner as we tried to save the auto industry of her Michigan. She's moved on to be the congresswoman, the Democrat congresswoman from what forever has been a Republican district, and she is absolutely on the cusp of that 51%, 49% conundrum of close Democratic and Republican politics. This is northwest of Detroit. We welcome Congresswoman Stevens today to Bloomberg Surveillance. Congresswoman, what a fascinating time to be in, except there's a lot of pain, a lot of suffering in your Michigan. What do you need from Speaker Pelosi? What do you need from the U.S. Senate?
Well, thank you for the kind words, Tom, and the accurate description of my region politically. Economically and medically right now, it's a double whammy in Michigan. Livonia, Michigan is the highest per capita fatality rate in the country. This is a community of about 100,000 people and home to a lot of automotive suppliers. It's right there connected into this Detroit ecosystem for automotive that we have. And the other side of this coin is an economic crisis. There's no other way to say it. It's double-digit unemployment. Our auto industry has been halted. The big three went into hibernation, and with that, all the suppliers saw their production orders fall to zero. Now we're starting to look at coming back online. As we go forward into future coronavirus legislation, this is what I need our entire, legislative operation to be focused on. And I'm certainly not the only one saying this. There's many colleagues throughout the Michigan delegation and in the Midwest, but we need to be focused on what manufacturing means with a recognition for its complexity.
Congresswoman, just because of time, I want to get to this, and I know General Motors sold a lot of pickup trucks yesterday, which is great, but Congresswoman,
yes, they did.
I want to know how Vice President Biden shifts towards Connor Lamb, shifts towards Haley Stevens. How does Vice President Biden bring the liberal part of the Democratic Party over to people like you who are going to lose if he's too liberal?
Well, look, here's the situation in Michigan, is that automotive isn't anything other than our economic reality. And when you champion manufacturing like Joe Biden has done, that resonates. That's what Haley Stevens did when she was campaigning in 2018. That's what speaks to the heart of the issues here. We're talking about the middle class. And when we talk about growing the middle class, we're talking about lifting people out of poverty. We're talking about these policy ideas that provide that on-ramp to that opportunity. And so when we're looking right now at some of these inequities that exist, healthcare inequities, racial inequities, that's what's on people's minds, certainly. And then they're also saying, hey, how do we make sure we've got an economic agenda? You know, the Democrats come into the House of Representatives and they inherit a Republican supermajority's government shutdown. They inherit utter dysfunction. What have we done? We've passed a budget in a record time. We've put forward economic policies for the people, by the people, that don't speak for special corporate interests. Everybody knows this big tax bill that was passed, you know, that saddles us $1.5 trillion debt over the next 10 years deficit.
Congresswoman,
so,
let me bring in my colleague from London, Francine Lacroix. Francine?
Congresswoman, yeah, and we try and, of course, always keep in mind the human aspect, Congresswoman, and this is, I'm sure, extremely, concerning when you're in charge of Michigan and try to figure out exactly what comes next. Will this COVID-19 change the social contract of what people in Michigan expect from their representatives?
Look, that's a very fair question. There's certainly no playbook. What there is there's science and there's fact. I happen to be the subcommittee chair of the House Science, Research, and Technology Committee. Part of the coaching here is we've got to be patient. We've got to wait for the research. We've got to be vigilant. The other side of this is I have told my constituents since this pandemic was announced, I will not let you fail, that you are not allowed to fail economically or medically. So you look at the packages that we've put into place, standing up for the American worker, protecting their wages, securing the critical industrial assets of this nation. You've got to make planes. You've got to make cars. You've got to have a supply chain for those things. We've got to protect small businesses. You know, you can start to define small businesses, operations with 250 employees or less, and on down. In suburbia, you're representing small downtowns full of sole proprietors. Those were the hardest hit coming out of the recession. In droves, we lost small businesses. And we'll be damned to see that happen again. I'm sorry to say that word on your show, but it's just the truth here. That we have got to say to everybody, you are not allowed to fail. And the policies that we are putting into place are securing the economic success of our middle class and hardworking people.
Yep. But Congresswoman, how does that depend?
I come from a family of small business owners. So,
how much does that depend on the phases? How much does it depend on phase 2, phase 3, and phase 4? And what will be the lasting legacy or the lasting scar of this economic crisis?
Well, everyone's looking into their crystal ball on that matter. I think we've got to pay attention not only to our manufacturing sector. Look, this is the saying in Detroit, that Detroit hustles harder. You know, our auto industry has dealt with a different crisis before that it has some similarities to today's and a lot of differences. Capital-intensive industries, lots of innovation, major commitment to move forward. The whole world's watching us in terms of autonomous vehicles, energy-efficient vehicles, all that stuff. That's great. That's going to continue to go forward here. We're going to continue to employ a lot of people. There's another side to this, which is what employs about a quarter of the jobs, if not more, is in these service sectors, in the retail sectors, child care. I mean, I'm home to one of the nation's largest child care providers. You know, they've been shuttered. You tell me how we come back online without daycare centers. We've got to resolve some of these outstanding revenue and liquidity issues. Not that I can feign revenue for small businesses and restaurants and beauty parlors and even our clothing shops, right, which are a segment of our economy. I can't feign that, but I can't have empty storefronts in my downtown.
Congresswoman, I got time for one more question, and I can't talk Michigan State hockey, or the state of the Detroit Tigers. What I want to know is the Democratic Party going to move to the Stevens, Hubert Humphrey, Scoop Jackson middle, or is your party still going to be shown as a progressive, liberal, dominant urban party that has trouble speaking to Northwest Detroit.
I'll tell you, I'm focused on a Democratic Party that's in the 21st century, and that is building and moving the agenda of the worker, the middle class, the suburban mom, and that is focused on not only what we're just a few short years away from, which is the quarter 21st century, and then as we move into the mid 21st century, look, you look at the post 9/11 economic narrative, proliferating the gig economy, all came out of the United States, very much tied into autos. We've got billions of dollars of data, we've got data streaming at a high rate through vehicles, right? All the Internet of Things technology that has been propagated and proliferated just in the last 20 years, transforming over and over again. Even the manufacturing process here.
Congresswoman,
so
we've
got to build that economic vision. Yeah.
Okay.
Go ahead. Thanks.
Congresswoman, we got to go because I got to go out and buy a GM pickup truck. Haley Stevens from Detroit, thank you so much for being with us today. Please stay with us worldwide. This is Bloomberg. Good morning. Good morning, everyone. Bloomberg surveillance from New York and London again. Coming up in a bit, Francine Lacroix's conversation with the governor of the Bank of England. Without question, our conversation of the day. Right now, with glimmers of hope in this pandemic, we speak with Dr. Farley of the Johns Hopkins University School of Nursing, and we do this in the week of nursing, a nursing week, a nursing celebration within this horrific pandemic. I saw, Dr. Farley, the Boston Red Sox mowing yesterday on the lawn of Fenway Park in tribute to the nurses. And of course, we saw the president in the Oval Office in tribute to the nurses. Forget about the tribute. Give us an update on the reality at JHU for nurses.
Well, so like you opened your segment, we are seeing glimmers of hope. Where inpatient bed capacity is stable. We have a wonderful field hospital started by our governor, who is helping to unpack the hospital from those who have less acute illness and who need to convalesce in a controlled environment. And our ventilator capacity is holding strong. So all of those metrics are glimmers of hope that we see at our health system.
Jason Farley, do genetics play a very big role in who dies from COVID-19?
You know, I think that's an important question, and we're currently investigating a variety of different types of genetic analyses. So there's very important differences in viral genetics. So are there differences in strains? We've heard lots about strains that come from China, strains that came from Europe. So pathogenicity of the virus itself is under investigation, and those viral genetics. But more importantly is our host genetics. We as humans, what do our genes and how does our immune system respond? And so what we're seeing are evidence of individuals that may have some form of weakened immunity, may have what we call a less of a strong cytokine storm, meaning the immune system doesn't respond as briskly, and therefore they may become ill, but as a result of their immune system not responding as briskly, they actually are the ones somewhat protected in moving forward into the need for mechanical ventilation. Because when the immune system doesn't act as briskly, you're not as overwhelmed by its response. So remember, it's not the virus that actually does the bad thing, it's your immune system's response to how it responds to the virus.
But Jason, are there also disparities because of gender and race? And if there are, how can we protect the people most at risk?
Yeah, well, when we think about from a gender perspective, we are seeing data that men are at greater risk than women in terms of bad outcome. We have to pay very close attention related to there are increased cardiovascular and respiratory diseases in general. The prevalence is higher in men versus women. The same when you look at race. This has nothing to do genetically that we know of right now. This is to do with access to care, poverty, health disparities between populations. And so if you live in a community across any part of the world that in which your community hospital, for example, is a low-resource hospital, it's more of a district non-academic hospital, you may have less available intensive care beds, you may have less available ventilator capacity, you may have less options of accessing a primary care provider, and that may mean you present later to care for evaluation. And so there are many things in that question that need to be unpacked in relation to things that may influence differences in both gender and racial disparities that we are seeing with this virus.
Thank you so much, Jason Farley there of Johns Hopkins University. Now be sure to check out VRUS Go on your Bloomberg terminal also for the latest information, and tune in every day for our exclusive conversation with Johns Hopkins experts for an inside look at battling COVID-19. Now coming up, our interview with Andrew Bailey after the Bank of England described what could be the deepest recession on record. This is Bloomberg.
He leads the company that operates 4 of the most popular cable channels for women, producing a wealth of content distributed around the world. After helping to create MSNBC and CNBC, David Zaslav took the helm at Discovery in 2007, where he moved quickly to streamline the company and relaunch channels so he could take it public all within the span of a year. Since then, Discovery's market cap has quadrupled. And now, Discovery is coming to terms with a new world, one where viewers increasingly turn to streaming services for their programming and are moving away from Discovery's core business of traditional cable channels, leading Zaslav to make the biggest deal of his life, betting once again on content. On this edition of Bloomberg Big Decisions, David Zaslav.
David Zaslav, thank you for joining us. Great to have you.
Great to see you.
So you've just completed the biggest deal of your career, I believe, $12 billion for Scripps. Why did you do it?
Well, it's interesting. There's a financial reason, and there's also a strategic drive that we think could really work for us. Here, we're in the cable and free-to-air business. Scripps is in the cable and free-to-air business. And so we both do the same thing. It's what we do for a living. It's what we know how to do. It's what we do every day when we come to work. And so we feel that we're quite comfortable in putting these two companies together. And the synergy gives us the opportunity to, we think, have a target of doubling our free cash flow. So we generate about $1.4 billion in free cash flow. Scripps generates about $8 billion. And we think we can get to 2, 8, or 3 through revenue synergies by coming up with a lot of cost synergy, mostly cost synergy. And so in a turbulent time, if we can emerge with almost $3 billion of cash, it creates like a moat in a turbulent time. We're different than most media companies in the world, and there are a lot of great companies. But whether it's Disney or whether it's Rupert or Comcast, NBC, CBS, they're mostly in the scripted and movie business. Netflix, Amazon, that whole side of the business is focusing on, as if it was a soccer field, the ball is scripted series and scripted movies. So it's very crowded. It's getting very disrupted. And you know, the number of scripted series have gone from 200 to over 500. And Apple and Amazon and Netflix alone are spending almost $20 billion on top of these companies. So we look at that and we say that we're not that. We're on the other side of the business. The other side of the business is we own all of our content. It's real-life entertainment. We see ourselves as a global IP company, whether it's with Oprah, with Discovery, with Animal Planet, with ID and crime or science or cars. And with Scripps having food and HG and cooking and travel, we put it all together now, and we're on a different area of the field. And so we say very good luck to them. I think there's a lot of great companies. It's going to be very disrupted. And our game is to take those great brands around the world, and as people over the next few years look to pull content onto devices and phones, we think the functional value of food, home, cooking, science, cars, that we'll do better, or we have a chance to do better, than if we were, if somebody was going to pay to watch The Crown on a mobile phone. So a lot of it is about owning IP and figuring out a way to get to mobile where people will pull your content.
Well, let's talk about getting to mobile, because that's the big disruption everybody in media is talking about as a practical matter. How will this help you get to scale, as it were?
Well, we're about 20% of the viewership in the U.S. at any given time. And we have 4 of the top 6 or 7 cable channels for women with HG, Food, ID, TLC, and then we have OWN that's #1 for African American women. I think we have a great menu to offer to an advertiser. Discovery is in 220 countries. We have an average of 10 channels in every country in the world. So we're kind of a factory machine of driving IP all around the world. And so we could do what very few media companies could do. We could do a global offering of food. We could do a global offering of all of our content.
In this new world of streaming, will viewers be watching for platforms like HGTV or Discovery, or will they be looking for programs like The Crown, like Game of Thrones?
Well, it's hard to tell behaviorally exactly what people are going to do. But by doing this deal and generating free cash flow and taking a look at the assets that we have, by owning science globally, by owning every piece of IP that we own effectively, except for sports, we're long IP. We've spent a lot of money to own it on all platforms. And that gives us the opportunity. If Amazon said, I'd like to do an offering globally, the only other media company that could do that would be Disney, and it would be in the kids space. And so we would raise our hand and say, terrific, we have a great family offering. And so for us, it's about the long tail. And we think in the end, people that love food are going to pull it. We're not sure exactly how it's going to work, but we think the fact that we own all of our content and we have passionate viewers that they love us like they love a sports team. They'll come home and they put on HG all day long, or they'll put on food. And so we have a sustainable growth business with our synergy. And then we have all this IP that we could take direct to consumer, and we've started to do it.
Can you win in streaming without going through the bundlers? I mean, do you have to be on Hulu? Do you have to be on YouTube? Or can you do it directly? Is your product strong enough?
We don't know. Everywhere else in the world, we're on almost every skinny bundle. Here in the U.S., we're in most of them. We're not on Hulu, and we're not on YouTube, but we're on most of the others. And people love our channels. And so, one, we think that over time we'll get on those skinny bundles. We hope to. We'd like to partner with our distributors because they helped us build our business. And in many cases we are. We're partnering with AT&T on DirecTV Now. We partner with Brian on Comcast on his offerings, with Charter. So that's the best way to do it, kind of regionally. But there is an opportunity for us to go direct to consumer ourselves, which we're already doing in a number of areas, in cars and in sports. But we could also go to those big companies. If you take a look at what NBC, ABC, CBS, and Fox spent 3 years ago, and how much is being spent by Amazon, Netflix, Apple, and Google, there's a massive amount of share shift that's going on there. And these are real global companies, the likes of which we've never seen before. So if any one of those companies wanted to offer for $5.99 a compelling family-friendly service, we would either be most of it, we would argue we'd like to be most of it, or we could be all of it and see how it goes. Because anywhere you go in the world and you say Discovery or Animal Planet or ID or Oprah, people know our brands and they value them.
How will you make that decision about whether you go direct to consumer or you go through middlemen, essentially? How do you make that decision as CEO?
Well, look, right now it's not a fair fight because the direct-to-consumer businesses, the Netflix, the Amazons, we in media used to trade at about a 14 multiple because the view was that this great dual revenue stream cable and free-to-air business would go on forever. And the view now is that it's getting disrupted by some of these direct-to-consumer platforms that are global. There's a question of who's going to emerge and be the winner. We think, looking now, it's only the second or third inning, but we've carved out a very compelling spot of quality brands that people love, that we can offer globally, and we could offer them ourselves.
You stepped up big time on sports. That was a variation from what people had expected from you. Why does that make sense for you? talk about disruption in media. There was a time not too long ago when you were the disruptor in chief, in some sense. I watched you from Capital Cities ABC across the street as you created MSNBC and NBC. You created CNBC. How does this compare with that disruption when you disrupted broadcast? Basic cable came in and really disrupted it. How does it compare? What did you learn from that experience you can apply now?
Patience. In that case, Jack Welch and Bob Wright were committed to try and take the broadcast business into cable. For people that were around at that time, it was pretty unusual. And it's important because the business that you think you're going to launch that's going to work is never the business that works. The audience is always going to tell you what they get nourished by. And that's what our business is about. That's what most businesses are about. When we launched with Oprah, the Oprah Winfrey Network, we had a dream, Oprah and I, that it was going to be about living your best life. And we looked strategically at the space and said, we can do this. But when we went out with the content, Super Soul Sunday worked terrific, but a lot of the other stuff was too earnest and the audience went away. And we had to figure out, what are they going to come back for? And it took us a lot of years, but we started to listen, what do you like? That's what our business is about. We don't want everyone to watch, but the Oprah Winfrey Network now is the #1 network for African American women. So for us now, we've broken our company in half, essentially. We got half the company that's about growing our channels, doing what we believe we can do as well or better than anyone in the world. Then there's a whole group that has to figure out, okay, how do I get over the top? What do people want when they consume content over the top, you know? And I think you have to be willing to recognize failure and use it kind of optimistically. Good, we know that now.
And you can do it without the blockbusters.
The way people watch our channels, they don't. It is hit driven if you're a broadcast network. The way people watch our channels, they come home and HG gets me. Discovery is my channel. TLC in Middle America is the channel that I love. I love Oprah. That's the channel that I watch. That's how they curate. Where do I get nourished? That's the business that we're in. We think that's going to be sustainable, and we think that ultimately they could either pull one of those really big, expensive platforms, or when they're looking to pull something that they want that's family friendly, with brands they know, characters they know, everywhere in the world, for a lot less than they would have to pay for that, we look different. And we got to, over time, we'll see if it's an aggregated offering, if it's an individual offering, but I think we got a game. But the first thing we got to do is execute on this.
You stepped up big time on sports. That was a variation from what people had expected from you. Why does that make sense for you?
Well, first, we're in every country. So when I say we're in every country, we have a sales team, we have a distribution team, we have creative people, we have marketing people, and we have strategic people. So we kind of know each country. And so when we looked at sports, Eurosport was not being individually fed into every country across Europe. So when we bought Eurosport several years ago, we looked and said, we can use our sales infrastructure. We could use our distribution infrastructure to drive more carriage. We could use our sales and marketing people. And it was a little bit of a leap, but it was driven by the idea that content used to be about getting inside of the television box, that rectangle. And even if you had content that was just okay, second or third choice, you did okay. When we launched our direct-to-consumer sports player 3 years ago in Europe, so we reach across 750 million people in Europe. We have the tennis, we have the cycling, we have the winter sports, we have summer sports, we have the Olympics. So we figured we have a great offering, 750 million people, $8, we should be able to do terrific. And we wrote 10 things that we thought we knew for sure. 8 of them were wrong. And the users told us. They said, okay, you know, we tuned in for the French Open, but we didn't want to watch Tour de France. We love tennis. Or they told us that maybe the most interesting takeaway that we applied to the Olympics is that when people consume content on a device, they expect to hit the device when they get up in the morning and see content. And then they expect a few hours later to hit that device. You need to multiple publish. So if speed skating is starting at 2 o'clock in the afternoon, the people that love speed skating have to get up in the morning and see a 1-minute video or 2 one-minute videos or some information about, and we downloaded 700 pieces of short-form content in 21 languages every day to our Olympic player. And that's one of the reasons why we were able to aggregate about 500,000 subscribers. They love the sports IP, But they really, when people look at content on a device, they expect to be entertained and nourished whenever they hit it. And if you hit it and nothing is new, you're disappointed.
Can you do that and not step up into the really high-priced sports projects? Because that, to some extent, sounds a little bit like ESPN in the United States in the early days. They had lesser sports, and then they had to get into the NFL, they had to get in the NBA, and that, as you know, costs enormous amounts of money. Can you have a strategy that stops short of that?
Well, opportunistically, we have taken football. But we haven't taken football where we get in a bidding war with anyone. If you want to offer your content on a pan-European basis, there's only one place to do it, us. Or if you're a federation, if you're the Speed Skating Federation, you could sell it in every country. And the difference between the U.S. and Europe is in the U.S., it's one culture, one language, and everybody likes the same four sports, essentially. 90% of viewing, 80% of viewing is football, baseball, basketball, hockey. In Europe, there's a lot of sports that are number one in Northern Europe that are number 10 in Southern Europe. And if you're a federation, we're the one stop. And we've been very effective about getting a lot of content. And all the sports content we have with Eurosport, we've, as much as we can, we've gotten it long term, and we own it on all platforms.
You have scripts, as you say, you need to execute on that now. But is that enough for Discovery? Are you on the outlook for further acquisitions?
This is news, but not as you know it. This is TikTok by Bloomberg, the first and only global news network built for Twitter. 24/7 news streaming live on Twitter.
have scripts, as you say, you need to execute on that now. But is that enough for Discovery? Are you on the outlook for further acquisitions? Do you need to get bigger scale?
Well, look, as I said earlier, we're in a different place of the soccer field than everyone else. So we think if we could execute on this, own all those passion brands globally. Scripps never took food and HG and cooking and travel around the world. So we have an opportunity to take all that IP, we'll convert it into 48 languages, and we'll start to spread it around. So that'll be a revenue synergy if viewership increases, and we think it will. In Latin America, we've bought some of their content. But I like our hand here. We got some work to do. We got to pay down some debt. We got to prove out that we're going to generate that free cash flow and that we really did build a moat. But at the same time, we're going to be working really hard about learning how consumers consume content on devices. And we're talking to every distributor, because we're better off if somebody that's already in business with you and you're already paying a $100 bill can then have a chance to check a box and pick us. Today in the U.S., there's probably 25 or 30 million subscribers that are broadband only. The one service that's being marketed to them heavily is Netflix. And the industry built us, we built them, and together I think we're going to come up with something that's going to be pretty compelling in terms of a skinny bundle, because it's not sensible to have Netflix have all that field without us on it.
You said you need to pay down some debt, because you do have more debt on your balance sheet than a lot of other media companies do. You said you're going to save $350 million a year on Scripps. How are you going to do that? That's a lot of money, as you and I both know, to save in an operation.
Well, look, as we've looked at putting these businesses together, and it's early days, it's only been 5 weeks, but we've been working on it very hard for 6 months going up to it. We think that's rather conservative. These are one-over-one companies. We have 12 channels in the U.S., they have 6. So we're in the same business. We have 220 research people, they have 140 research people. We have 650 salespeople, they have 550 salespeople. And their people are really good. We put some of their people in charge in our new structure. And the idea is, who are the best and the brightest? Because when we looked at it, we said when it comes to nonfiction, who are the best 2 producers of nonfiction content, and who is best at monetizing it? And we looked and we said, in some areas they're better than us, in some areas we're better than them. We put these 2 together, and we will spend $3.5 billion on content, maybe growing to more than that. This is a hard business. We're in the business of creating stories and characters and getting people to turn on their TV and love it.
You've referred a couple of times to John Malone, who's a shareholder, doesn't control your company by any means, but you know him well. What is it like to have John Malone as somebody you can call up and say, should we do this, should we do that? What do you think about what's going on?
Well, I think about my last 30 years in this business, and it's sort of like what you want for your children. You are who you hang out with. And it really helps define you, the narratives that you hear, the questions that you hear. And so I look back over the last 30 years and 15 years listening to why Jack didn't want to do an acquisition that we brought him, or what we need to do with cable, how we need to do it. Bob Wright, one of the most successful guys running NBC, the Newhouse family, Donald and Cy Newhouse, and Bob Myron, who's a genius and has been in the cable business and built Bright House, and John Malone. And so when I think about where people should be spending their time, yes, you'd like to get the right job. Yes, you'd like to think that you're going to make some money. But I took a 50% pay cut to go to NBC from a law firm, because I thought I can get to hang out with the guys at the Peacock, and maybe someday I'll get to meet Jack. And a lot of the way I see the world, I still talk to Jack all the time. So I'm hearing Jack's voice, I'm hearing Bob Myron and Donald Newhouse's voice, and I'm hearing John's voice. And so for that alone, I'm one of the luckiest guys.
It strikes me that you're now running Discovery, which really appeals in the United States to a lot of the middle of the country. People that the President of the United States probably wouldn't object to. In fact, I understand the President of the United States is a fan of Shark Week. Actually, I read that someplace.
I hope he's a fan of a lot of our stuff. I think, I hope.
You helped create MSNBC. That is a channel in a very different place. What do you think about the media landscape today in the United States in terms of politics? Because it seems to become much more polarized.
Well, I can just say that the business changed. When we launched MSNBC, Brokaw and I and Andy Lack and Tom Rogers, there was a group of us, and Jack said, we're going to launch the best news network in America, and we're going to use the #1 news division in the world to do it. We had this amazing library. We structured a deal with Microsoft to get them in. They wanted the library at the time, and that was our ambition. I'm not going to game out the different news networks in America, but we have to be practical and recognize that at least some of them are following that model, because you on the one hand you want to do the best journalism possible. On the other hand, you want people to watch you, and you want them to watch you for as long as possible. And part of the way we as human beings determine our success is, are we in third place? Are we in second place? How many people are watching us? How many people love us? And so I think that's the journey. And luckily, I'm not going to be one of the guys to figure that out.
Well, but let's talk about how you keep score. That leads us exactly to a great conclusion here. How do you keep score? I mean, I see that now you've jumped up in the rankings, actually, including broadcast and cable. Big step up with Scripps. Is that the way you keep score? Is that how you just tell whether you, David Zaslav, are succeeding?
No, because there's lots of books that have been written about, more scale tips you over. So we're staying in our lane. And what's going to be successful for us, and we've made this decision. On every one of our channels, we've said, if you don't love us, if you're not one of the passionate viewers that loves survival, if you're not one of the people that love science or that love crime, go find some other channels that you love. When we're creating content for our channels, we want global audiences that really affiliate and have a passion for our characters and our message. And a big piece of that is we're not going for the best rating. We're going for the most potent audience that says, they get me. When I go there, I see something that I love. And if we put something on any of these channels that looks like we're going for ratings, they'll immediately say, what's this doing on here? And so they're quite clever, and you just got to continue. This is what we do for a living. Figure them out on TV and try and figure them out in terms of the devices as to what they're going to love and what they're going to pay for.
David Zaslav, thank you so much for spending time with us today.
Thanks, David. Good to see you.
Coca-Cola, a 130-year-old iconic brand and a dominant force in the $800 billion soft drink industry. Synonymous with globalization, Coca-Cola operates in over 200 countries worldwide. The beverage behemoth now has a new CEO. James Quincy spent the last 2 decades rising through the ranks at Coca-Cola. Now, as head of the company, Quincy aims to win over a new generation that shuns sugar, and to show the world that he takes the environment seriously, even as he adapts to a new world of technology. James Quincy sat down with us for an extended conversation. We wanted to understand how he plans to use innovation to transform every aspect of Coca-Cola, attempting to change its culture while managing a global checkerboard of regulations and tax regimes.
Coca-Cola operates in a lot of different countries, which means there's a lot of different regulatory systems, a lot of different legal schemes you have to really adapt to. Let's talk about a couple of those. First of all, the United States. The tax cuts, how does it affect Coca-Cola?
Yeah, we're still working through the numbers. I mean, our tax rate last year effectively was about 24%, so it's not the biggest change to us. Because we're an international company, the absolute rate hasn't affected us as much as perhaps some of the more domestically focused enterprises. But we're positive on moving the territorial system. So we think the simplification is positive in the long run. To the extent that it helped create more demand, that will be good news too. We're still working through the numbers that we'll lay out on our earnings call. Of course, we're part of having some of the money overseas, but in the end, if it generates more economic growth, that will lift all the boats.
Does the expensing of capital investment affect you at all?
Not in a great amount. I mean, it will make some difference. We'll lay that out, but that's not the biggest moving piece for us.
And if there is significant incremental cash available to Coca-Cola, have you decided yet, does it go into capital investment? Does it go into buybacks of shares? Does it go into dividends?
I mean, we weren't short of cash at the end of the day, so we've been a successful company. We've got the resources we need to invest in the marketplace. We're still working through exactly how the puts and takes work, because obviously you've got to pay tax on the cash first, or in addition. So we're looking at how we use all that and how we make the right capital allocations.
One of the really big issues for the United States right now is the so-called dreamers. These are the young people who were brought here as children. And the question is, do they get to stay as adults, essentially? Do you have at Coca-Cola people who are really uncertain about whether they can stay or not? There are about 700,000, more or less, nationwide.
Yeah, we have some people in our company and in our bottling partners who fall under the Dreamers or the Dakar program. We would love government to find a way to make proper underlying immigration reform, and including finding a solution for the Dreamers so that it's not so disruptive and then they can stay. So hopefully they'll find a path to that. Of course, partial solutions may be necessary, but we would love to see fundamental reform.
You ran Mexico for Coca-Cola at one point, so you have seen this issue on both sides of at least our southern border. Do you see a path forward, a constructive path forward on immigration?
I think there's a path forward, but I think it also is connected, and it can't be completely disassociated when you think about long-term fundamental reform from getting both economies to grow. In the end, part of what drives the informal immigration is the disparity in the economic outlook. So having a community of North America where all the economies are growing actually helps solve that problem too. So I think leadership from the United States to drive growth will help solve some of these other issues too.
You've also seen NAFTA from both sides of the border. You've seen that issue, which is another hot issue right now in the United States. Has NAFTA overall been good or bad for the United States?
My view would be that free trade deals are good overall for all participants, and I think it's been good for North America and all the countries in it. Doesn't mean it's perfect. Very few free trade deals are perfect. So can it be made better? Yes, I hope they can make it better. But I don't think we should start deconstructing global trade. I think it's been a powerful engine for lifting all boats. It doesn't mean it solved all problems. There are questions of income inequality. There are questions of not all the rules were perfect and need to be improved. But let's go forward, not backwards.
So when President Trump first came in, he was very closely allied with many people in business. He consulted and he had panels that he talked with as well. Do you get to talk, either President Trump or the administration, about things like NAFTA? I mean, do they consult you, or do you make your views known to them?
When there are things where we have a view or it affects our business, we make our views known either directly to the administration or through many of the business forums, like the Business Roundtable. There are enough points of intersection collectively and individually with the administration that they know what we think.
So from that, do you have any sense of where we're headed with NAFTA? Because there's conflicting reports. I mean, the Canadians seem to be preparing for actually U.S. withdrawal. There are a lot of people in Washington saying, no, we're not going to withdraw. Do you have any sense from your point of view of where we're headed?
My view on negotiations is you've got to let the negotiations negotiate. And if you're not in the room, you don't know what the answer is until it comes out. So I think the important thing for those that aren't in the room is to keep saying what they believe to be true, what they believe to be the areas where things can be made better. And then the negotiators have got to get in the room and thrash it out. And trying to work out what color the smoke is coming from the room doesn't lead you anywhere until they come out and tell you what the answer is.
Your native country has voted in a referendum to leave the EU. And I won't ask you what you think about that, but tell us how that's developing. I mean, is there a soft landing there that you can see? How would we get to it?
It does a bit go back to my point about negotiations. You're never really sure until the cake is cooked. I think the logic of the economics is a softer rather than a harder Brexit. I think in the end, whilst it won't be a catastrophe one way or the other, life will be better. There'll be more economic growth if it's a softer Brexit, but there's a lot of details and a lot of different points of view to work out, because in the end, the referendum wasn't between do you want this or that. It's like, do you want this or not want this? It wasn't a referendum around the version of the exit, which is kind of where we're trapped at the moment. And of course, there's a lot of negotiations going on. It's very important to get it right for the UK and to some extent for Europe as well.
Whether it's Brexit or whether it's NAFTA, how do these trade issues affect Coca-Cola's business?
I think one of the great benefits of the Coca-Cola system is we're global, but we're extremely local. I mean, we manufacture in every country virtually that we sell in. Virtually everything that's sold in the US is made in the US. Virtually everything that's sold in Mexico is made in Mexico. Virtually everything that's sold in the UK or France is made in that individual country. So the global trade restrictions or openings don't tend to affect us heavily in the moment. To the extent that they reduce or increase total economic growth, that's what matters to us. And so I think philosophically, we're pro global free trade because it drives economic growth. Therefore, let's focus on making those deals better because it will provide the wealth to then solve a lot of society's problems.
You came in and took over Coca-Cola and really trumpeted innovation as critical to your future. I believe you have a chief innovation officer, but maybe you're the chief innovation officer in some sense. How do you innovate in a 130-year-old company that's so well known around the world, has been there for so long, has such an entrenched perception in people's views?
It's hard. I mean, any institution that's been around a long time, whether it's a company or a government or any organization, it's going to be very hard. So I think from my point of view, if I'm not the chief innovator, I'm certainly the chief agitator for innovation. And what that means is, driving the culture to try and do a few things upon top of everything else we do. Stay curious. If we're not curious about the outside world, about the consumers, about the customer, about what's changing, how will we innovate? But curiosity just leads you to an insight. It's very passive. You need to drive empowerment so people feel they can go and do something, that they're not waiting for head office to make the decision, that they can get up in the morning and go and do something. And I think the next thing is you've got to be inclusive. You've got to try and connect the pieces because we've got a tremendous global knowledge and tremendous global system. Sometimes your idea has already been tried somewhere else. So connect to the other parts of the system. And lastly, we probably fell into the trap of trying to make things perfect before we did anything in the past. No, we need to learn from some of the software companies, have version 1.0, 2.0, 3.0. That gets us both innovation and speed. And if we keep pushing those four things, I think we'll make progress.
And how do you know? How does James Quincy know whether you're getting the innovation job done? And I mean that in the sense you're sitting atop a very large organization, a lot of people spread around the world. How do you judge whether the word's getting down and people are already changing their behavior?
It's hard to know, but the only way forward is to look for multiple signals. No, there's no one number or one metric that's going to give it. Yeah, so we have employee surveys where we ask people. We can look at the sales number and measure the success rate or the number and the success rate of the things we put into the marketplace. We can look at what our research and development pipeline is generating, and are we really getting new patents? Are we really making progress? So I think one has to have a dashboard to look across and say, is there progress?
How is technology changing the way you do business, and for that matter, your workforce?
This is news, but not as you know it. This is is TikTok by Bloomberg, the first and only global news network built for Twitter. Objective reporting that you can trust. Curated comments that provide insight. TikTok by Bloomberg. 24/7 news streaming live on Twitter.
Technology. It's disrupting just about every company that we know of today. How is it affecting Coca-Cola? And first, talk about how it's affecting your relationship with your consumer. How you deliver to your consumer, things like e-commerce, how you market to your consumer.
Yeah, I mean, we kind of look at it in three buckets. How we engage with consumers, you know, there used to be TV advertising, now there's social media. The ways of engaging with the consumer are changing rapidly. Who the customer is and how the shopping actually happens is changing rapidly. And of course, internally, it's changing rapidly. With the consumer, around the world, you know, TV is still the biggest vehicle, maybe less so in some of the developed economies, but around the world, it's still the biggest vehicle. But a lot of it's going into social media. We work closely a lot with a lot of the new tech companies in social media, trying to find ways to, you know, continue to have a brand role. I mean, in the end, someone's got to pay for the content to be developed, whether that's through advertising or sponsorship. So I think there's a lot of change going on. We're adapting. I think we feel we're kind of towards the front end, but what I'm totally clear of is going to be different in 5 years, and it's going to be very different in 10 years. And we're going to have to keep investing in innovation and keep evolving to stay close to the consumers.
As you look around the world, which markets do you see the fastest innovation when it comes to e-commerce? When you just sort of get on your app and you order something up, it gets delivered, for example. Is it China? Is it the United States? Is it Europe?
I actually think that places like Shanghai and some parts of Western Europe are on the cutting edge, along with some of the bits of the U.S., but really at a par. I mean, you know, the U.S. in many respects, there's a lot of advanced e-commerce, but I can tell you it's very advanced in places like Shanghai and Western Europe as well, and the penetration of e-commerce in aggregate is even higher in some of those places than even the U.S. So, you know, when you want to learn what's going on, I would be just as tempted to tell you go to Shanghai as stay in New York.
And how do you market in that circumstance? I mean, we're used to going to a fast food restaurant, for example, and there's a Coca-Cola there. It's on the menu. Yeah. So let's have that Coke or that Diet Coke. Yeah. You don't have that when you're on your app.
No, but you have to get it. I mean, you know, if you went back even 2 or 3 years in China, for example, when a lot of the apps and the mobile payment systems came in, we weren't on the menu. Actually, even worse, we were trying to sell perhaps a returnable glass bottle to the restaurant, which had no way of being in the delivery system. So we've had to re-engineer our business system very quickly to both be present on the app. So what's the virtual representation of what you'd normally see in the store? And how do we change the packaging portfolio so that we can be part of the delivery system? And you have a lot of places in Shanghai where food ordered on apps and delivered is 30–50% of the restaurant sales.
That's the relationship with the consumer. Talk about Coca-Cola as Coca-Cola. How is technology changing the way you do business, and for that matter, your workforce?
It's changing it in lots of profound ways. I mean, in simple terms, you know, you go back 10, 20 years, we were a large company and we're one of the few that could afford to invest in expensive IT systems and do our own stuff, our own programs, our own server farms. You wind forward to today, that's no longer the model. We've had to move to the cloud. We've had to move to standard programs that whole industries use, and we had to use the mobile. The one thing I always say to the IT department is, just put it on the phone. Everything can be done on the phone. Let's just move everything to mobile on the phone. The old days of IT had training budgets. Why? Everyone knows how to use the apps on the phone. So it's profoundly changing the way that we work, and I think it's going to continue to flow through the organization. We have a big program of digitizing the company.
Does that translate into fewer employees as a practical matter because of the efficiencies from digital?
I think for sure it changes into a different profile. I mean, people are having to adapt to doing things in a different way. We've actually made a lot of changes in our IT departments to move to a different skill set. So it's certainly changing the nature of employment and the sorts of profiles you want. Whether we buy the services ourselves or we buy the services or do it ourselves makes a difference as to where the employees are. But net, more employment's being generated in the economies.
So can Coca-Cola compete with Silicon Valley and the digital startups when you're trying to recruit the young computer scientists?
Well, Atlanta is a very fast-growing economy. The state of Georgia has been ranked, you know, top 1 or 2 of place to do business in the U.S. for many years in a row. The local political system has done a great job. So has the city. So it's a very competitive economy there, and we do very well in it. We're happy to see Atlanta and Georgia growing, and they've done a lot to invest in tech startups and the media industry in and near Atlanta, and it's being very successful.
As you look toward really substantial growth in these new beverage categories, are you looking at acquisitions? Are you looking at organic growth? I mean, you have been inclined, I believe, to look for smaller brands, startup brands, bringing them along. Is that the future path to a significant degree for Coca-Cola?
I think it's going to be both. I mean, we have grown organically, but we have made these bolt-on acquisitions, as we call them, the little small ones, the niche brands. I think where we see that something is a really good idea, we invest in them. Sometimes we buy them, sometimes we just invest with them. But there's a quid pro quo. They get the capital that we inject, yet we can introduce them to the globe, not just the country that they've launched in. And that's helped us double the number of billion-dollar brands that we sell around the world. So I think it's going to be an and strategy rather than one or the other.
It's interesting. It's a total beverage company. It's not a food company. I mean, there are some competitors who said, let's become a food company, at least in part. Why did you make that decision? And does it make you any more vulnerable, forgive me for saying, but even to acquisition? I mean, you're what, $200 billion market cap? It's a pretty big acquisition. But there are some pretty big consolidations in the food industry out there.
I think firstly, you know, we're focused on beverages because that's where the greatest synergy and the greatest application of our know-how and our fabulous global bottling distribution system is. It's the thing that can be most synergistic with what we've already got. And the market for beverages is one of the best growing markets in the whole of the supermarket or in the other stores. So it's a great market. We have a good position. We can create a lot of synergy. So it's a question of choices. I sometimes say never say never, which then causes confusion because people say you haven't ruled anything out. I say no, it's a question of what's most logical. And beverages are the most logical thing for us to do first because we stick to our knitting. In terms of how we think about the consolidation, in the end of the day, I'm pretty convinced that investors, gold star goes to those that grow with expanding margins. Growth is the name of the game. If the category's got no growth, then optimize the margin. Okay, but that's still silver prize largely over the long term. So I'm pretty clear. If we focus on driving top-line growth, which we believe we can with our strategy of total beverages, we will attract an investor base that will be very happy with us over the long run.
By 2030, you want to be getting a bottle back for every one you put out there. That's a lot of bottles for Coca-Cola. How are you going to attract all that plastic? World without waste. Great goal. You have a big new packaging announcement. Why is it important to Coca-Cola, not just as a corporate citizen, but as a business?
You know, it's important to us for a very core part of our values. We've always believed that to have a healthy business, you need to be operating in a healthy community. And one of today's biggest problems is packaging waste. We've done a lot on making things recyclable. We've actually invested a lot of R&D making progress on reusing it. What we need to do is collect it. So this announcement is about the big missing piece in generating a world without waste, which is collecting back the plastic and creating a market economy for that collected plastic. And I think that's going to do great things to help us grow into the future without creating waste, which is good for us and it's great for communities.
How are you going to attract all that plastic? By 2030, you want to be getting a bottle back for every one you put out there. That's a lot of bottles for Coca-Cola. How are you going to attract all that plastic?
Well, to give you an idea of the dimension, we need to bring back, every person in the world, if they bring back 2 bottles a month, we bring back all our bottles. That's our objective. 2 bottles a month for every person. We collect every bottle we put out. How are we going to do it? Well, there'll be different systems in different countries. You know, every country needs a solution, but it won't be the same everywhere. There are kind of places where it's reasonably advanced in Europe to more informal economies where the collection happens. So there's going to be different solutions everywhere. We're going to have to work with NGOs, other industrial companies and governments to put in place these solutions. But it's absolutely doable. And I think that's what's exciting about setting the objective.
We're very conscious of this in the United States, but what about in other places, like China, for example?
Yeah, look, I think the emerging and the developed countries are where more of the problem is than the US or Europe, which is probably at the leading edge. So we need to do more there. But recognize that in a lot of these countries, there is some informal collection system already going on across a wide range of waste. What we need to create is the circular economy. We need to create value for that. So often in the case, and we did this in Mexico, for example, you go back a little more than 10 years, it was less than 10% of the plastic was recycled. Now it's 60%. How? The informal economy was collecting the waste, but there was no market for it. No one wanted to buy it. So we went into the marketplace and bought the plastic, invested in factories to recycle that and reuse it in our bottles. So I think there's a model there for the Chinas and other parts of the world on how to create value out of plastic and get it reused.
You've laid out a bold strategic vision for your company called Total Beverage Company that includes things beyond Coca-Cola and even beyond Diet Coke. It goes on beyond that to these 5 categories. What's driving that? Is that basically to get away a bit from sugar drinks?
Actually, we're following the consumer. when you look at what's happening around the world, as the world is urbanizing, as people have got more disposable income, they're spending more money on a range of things, including beverages. So what's important within that growing market of beverages is they want more choice. Different people want different things. So if we really want to be able to serve the customer, serve the consumer, we've got to follow them. We've got to get into more categories. Coke is likely to remain the heart and soul of the company. It's the world's biggest fast-moving consumer good brand. But we need more. We need to offer consumers what they want all day long. We have to offer choice. And I think that's what's going to guide us forward. And in a way, it goes back to where we started. If we pay a lot of attention to what the consumer wants, they will take us to where the business needs to grow. And then it ultimately ends up in growth for the business.
I understand that on average around the world, people consume about 8 ounces of a beverage per day. And Coca-Cola, I was told, is about a half an ounce. What is your goal? How much of the market share of total beverage can you really take globally?
I mean, I don't think there's a end of history moment when we reach nirvana. I think what we're looking to do is gain share every year. I mean, it's a competitive marketplace. We have a lot of well-funded competitors doing a lot of exciting things. So we're focused on is can we serve the consumers and gain a little bit of share each year and generate a growing business system that our objective is to create value for everyone who touches that business system, whether it be the economics of the people who are in the value chain like the customer, or even society with initiatives like the packaging one, you know, which I think builds on our heritage of creating shared value in the world. You know, 10 years ago or so, we set ourselves the objective of being water neutral by 2020, and we achieved it a few years early. So we return to the environment all the water we use, which is one of the things that gives us confidence that we can achieve this packaging objective. So we get business growth and doing it in the right way for society.
Okay, thanks very much. We're wrapping up there. This was terrific. Thank you so much. That was really fun.
Thank you.
Welcome to Bloomberg Daybreak Americas on this Thursday, May 7th. I'm Alex Steele. Here's everything you need to know at this hour. Let's take it right from the top.
We're not ruling anything out at the moment because it would be unwise of us to rule anything out in terms of responses.
The Bank of England holds its key rate at 0.1% while saying it stands ready to ease further if needed. The central bank sees growth falling 14% in 2020, but then expects the economy to grow 15% in 2021.
They recognise that the monetary policy is not the big game in town at the moment, that it's really the fiscal support for the economy that is doing the heavy lifting right now.
The BOE's promise comes as other central banks around the world slash rates. Norway cuts rates to 0 in a surprise move, and Brazil cuts its rate to a record low of 3%. German industrial production plunges 9.2% in March, the latest read on terrible economic data. ECB Vice President Luis de Guindos reaffirms the central bank stands ready to act.
Should we see that the scale of the stimulus is falling short of what is needed?
I think the ECB will have to do more. If you compare their purchase programs to that we've seen from the Fed or indeed the Bank of England, they look significantly smaller.
Global economic data continues to redefine the word unprecedented. India's service industry has crashed in April, falling over 40 points.
Now they have to buy, and if they don't buy, we'll terminate the deal.
President Donald Trump threatens to terminate the trade deal with China if Beijing isn't adhering to the terms. Top Chinese and U.S. trade negotiators will speak as soon as next week to monitor progress. This comes as White House officials continue to place the blame on China for the coronavirus.
It is pretty clear that at the front end of this, the Chinese Communist Party misled the world.
Sources tell us it will be the first time Chinese Vice Premier Liu He and U.S. Trade Representative Robert Lighthizer have spoken since January.
President Trump has threatened more tariffs as punishment.
Yet despite all of that, we're seeing a rally really building here within the equity market. If you take a look at European equities, they're around the highs of the session. S&P futures were right around the highs of the session. It's seriously like a straight arrow up. A little bit of selling in some of the bond markets, but nothing really to write home about. It was all about a bear steepener yesterday after the issuance announcement from the Treasury Department, but now we're kind of calming down there as well. Crude underway with a nice rally. Something to do with Saudi Arabia and setting their oil price higher for Asia, Europe, and the U.S. could signal more demand. It plays into the recovery story. When we open up, will things actually get better? Well, for more on the markets, joining me now is Chris Watling, Longview Economics CEO and Chief Market Strategist. Chris, I have more nuanced questions for you about inflation and growth, etc. But the first one truly is why are we rallying?
Yeah, what a great question. Well, I think we're still on this sort of sugar high and the good news feeding into the market, the idea of opening up of these economies and the infection rates peaking and so on. But the reality is, if you look at it, I mean, the S&P has actually been in a range for the last 2 weeks. It feels like we're rallying, but in reality, we've been kind of flat as the market's been pondering what next. I mean, I think the rally from the lows March 23rd through mid-April was really pricing in the good news that we're now seeing come out in terms of infection rates and so on. But I think the real question is what happens beyond Q3, because once we open up the global economy, we're clearly going to get an economic bounce. But really, the Q4 is what we're interested in 2021, what we really call the reckoning and how that plays out, because I think there's an awful lot to worry about out there.
Right, so let's get to it. There are multiple narratives about what happens after Q3 and in 2021. What's your base case?
I think it's very troubling. I think what we've had in Q2 is clearly a highly unusual economic shock. It's supply-side shock. It's pandemic-induced. It's self-inflicted, if you like, as governments choose to shut down economies. What's really interesting is how that then feeds into the global economy and how companies react. I thought it's fascinating the paper the Fed put out over the last couple of days on looking at the conference calls in Q2 or Q1 earnings from the S&P 500 and broader number of companies, and measuring how much they're cutting investment, how much they're cutting buybacks and dividends and so on. And all those numbers were considerably above the worst numbers in 2008. So I think what's interesting about that is it creates the feedback into the global economy. It's a sort of negative feedback loop. And I think that sort of negative feedback loop we're going to start seeing once we get beyond that sugar rush in Q3. So I'm pretty nervous about the medium-term outlook. I think there's an awful lot of challenges out there, and the consensus is really far too optimistic, in my opinion.
On the one hand, predicting things like inflation, higher yields, etc. That was all supposed to happen after 2008, 2009, when central banks came in with unprecedented stimulus. And here we are again with the words unprecedented stimulus and an unprecedented crisis. Why is it going to be different? Why is this different than 2008?
Well, this is different for a couple of reasons. I think, first of all, we've got deflation and bankruptcies over the next sort of 6, 9 or so months and a bear market. But beyond that, I think we do have inflation because this is different from 08, 09 and after that. Because after 08, 09, it was about austerity and it was about printing money to shore up banks' balance sheets and to ensure that shrinking of banks that we saw in 09, 10, 11, 12 didn't turn into deflation. So this time it's more about printing money to fund government deficits. I mean, I think the consensus in markets is very much right in this respect, that governments are not going to go for austerity. There's too many populist politicians. There's too much desire to keep spending on the government side. So I think it's going to continue. I think central bank money creation is going to be funding fiscal deficits. And added to that, as that sort of monetary side of things, monetary financing of deficits, you've also got this idea that really there's going to be very significant damage to the supply side of the global economy. I think the supply side support is not nearly as good as it seems on the tin. It sounds good in practice, but actually it's not getting through to all the places it's supposed to. So there's going to be a lot of bankruptcies, a lot of damage to the supply side, and therefore you've got your sort of demand coming back without supply being there to deliver to it. And that creates your sort of economics 101 type inflation as well. So there's a lot of inflation risk once you get beyond the deflation. But I think, first of all, you've got bankruptcies and deflation to come.
So if that's the view, how do you structure a portfolio for that view and then not miss out on any sort of short-term returns in the meantime?
Well, you've got to be nimble. You've certainly got to trade the bear market rallies, which is what I think we're in. But, I mean, primarily you've got to be underweight risk assets and underweight equities and equivalents, high-yield debt and so on, because and defensive, because I think we're in a sustained bear market. It's very interesting to me. I mean, it's very easy to be bullied by the rallies and the price as a short and as a sort of a believer in a bear market. One gets bullied by it. But if you think back to the last two big bear markets, after the initial high from the end of the bull market, both times we retested, whether you're looking at sort of July 2007 and then October 2007, a retest of that high again, or even if you look in March 2000 and then, of course, once again in September 2000, that high was pretty much retested. So this is kind of normal, evolving into a bear market type behavior. And we'll see how it plays out from here. But I mean, I think you've got to be underweight, you've got to be cautious, and you've got to be defensive, in my opinion.
On the flip side, the rhetoric is, at least, or the narrative for the Fed is like, look, central banks, they know how to deal with inflation. So let's just throw all the money that you can at this crisis. If inflation hits, they know what to do, and they'll be able to dial it back. Why do you see that narrative basically not playing out?
Because I think once you get beyond this recession and bear market, central banks have got to continue to finance the government's deficits. Otherwise, we're going to have government funding crises. So if you look at the U.S. sort of interest rate profile from government spending, it picks up quite sharply on the CBO forecast from January, pre-pandemic, even if you assume that bond yields kept capped. But if you get an inflation into the system and bond yield backs up, the interest spending really starts to bite into government spending. So they need to cap it. You need yield curve control. You need what we had post World War II, and that's why I think you're going to get that situation playing out and continued money creation the other side of it. So it becomes a different ballgame.
When you take a look on the corporate level, what do corporations look like? Like, what are some of the bigger changes that we're going to see in certain sectors that disrupt a traditional thesis? And that, hey, when we get a recovery, go buy cyclicals. I feel like that's something very common that I hear on the program. How is this going to look and act differently on a sector basis?
Well, it's a great question, isn't it? I mean, I think in the near term, people are way too optimistic on technology. There's become this narrative that tech is the great savior at times like this. We're all working from home, we're all doing Zoom calls and so on, and the tech companies are more resilient. But I think once we get into a more traditional bear market and recession, that'll be exposed for what it is, a falsehood, and I think tech will struggle as well. So I think the next leg down in this bear market will be led by tech. And interesting, if you look on a sort of 50-year view, if you take the really, really long view, as we like to do sometimes, and look at value versus growth, you'll see that on a relative price performance, we're at an extreme of growth relative to value, and that's been accentuated by this last few months and this sell-off that we saw into March and the way the markets rallied as well. So growth is at an extreme relative to value, equivalent to what we saw at the TMT peak, and also equivalent to what we saw at the Nifty 50 peak. So, I think if inflation comes back, that favors value. Value might be banks, it might be cyclicals, and so on. So once we get beyond this deflationary bear market, then I think that's an interesting 5, 10, 15-year trade, secular trade, and certainly completely contrary, I think, to how the market's thinking at the moment.
100%. That's why I wanted to get you on to talk about it. Chris, I super appreciate it. Chris Watling of Longview Economics. Well, coming up, staying on the theme, what comes next as economies start opening up? We're going to speak to the CEO of Blue Apron on just how consumer behavior and preferences are evolving through the pandemic. And if they stay that way or change, this is Bloomberg.
Order submitted. Order submitted. Order submitted. Order submitted. Order submitted. Order submitted. Order filled. Order submitted. Order submitted. Order filled. Order submitted. Order submitted. Order filled. Order filled. Order canceled. Order canceled.
Well, lockdowns and restaurant closures boosted shares of the meal kit service Blue Apron earlier this year. And as the governments take steps to reopen economies, what do we see in terms of consumer behavior? Well, joining me now is Blue Apron CEO Linda Kozlowski joins me now. Linda, good to chat with you. The rhetoric in the beginning of the crisis, this was going to be great for you guys. Then it felt like investors were disappointed with results that you didn't have good enough sales. Sales weren't higher. What do you want to say to that?
Well, I think we were actually happy that in Q1 we did what we said we were going to do, which is we grew sequential quarter-over-quarter customers as well as revenue based on our strategy for returning to sustainable growth in 2020. So obviously this demand came very, very sharply at the end of Q1 and moved into Q2. And what we're seeing in Q2 is a significant increase in demand, but we are also still focused on how do we build and serve that demand as safely as possible. and scale into something that makes sense for the long term of the company as well.
So does that imply that, I guess the question is, when does it pivot? So when do you wind up investing enough that you can pivot so the sales can really accelerate?
Well, so we've actually already done quite a bit to meet new demand. We're in a unique position in that we have the physical capacity in order to meet significantly higher demand over time. It's really about scaling the labor force. And so we started hiring in mid-March and really started building up that team to make sure that we could meet the initial demand and then also meet the sustained demand. In the meantime, we made a few modifications to our product and service to try to streamline to deliver on that sort of 27% month-over-month spike that we saw from the first, if you compare the 3 weeks of March, the first 3 weeks of March to the first 3 weeks of April, we saw about a 27% spike in demand, and we needed to ramp up into that very quickly. And that's when we put forward the guidance that we would actually see year-over-year growth earlier than expected. We're going to see year-over-year growth in Q2 rather than the later half of the year, and we will go cash and EBITDA positive. But we are still doing that in a way that we know we can sustain, and we know that we can manage all the ebbs and flows of demand that we're going to see for the rest of this year.
So then just pivot off of that. What kind of people are you hiring? Can you give me some numbers behind that? And how hard or easy is it to hire now than it might have been 6 months ago?
So we started with hiring about 300 people across our 2 fulfillment centers in Richmond, California, and in Linden, New Jersey. We also have a 3rd fulfillment center in Arlington, Texas. And so those have been working together to continue to meet this demand. So we started with about 300 people that we were focused on, but then we built in the flexibility to be able to hire more as we see more demand in the future. By implementing some new remote processes, new orientation processes that could help us bring people in safely into those production facilities. In the meantime, we're looking at how we actually develop the product and scale that product over time into getting back healthier options and variety so that we can retain those customers long term.
So what happens, though, when people go back to work, when the economy reopens? What do you have to do to woo them to keep them?
So for us, it's a little bit of, we're already seeing our customers who are coming in actually have very similar characteristics to a lot of the existing loyal customers in the base. So we're attracting customers that might have not tried a meal kit before, and this will be the first experience with it, or maybe customers who have always been interested but just didn't quite understand, what to think about it. And so we are seeing behaviors and reactions from those customers that are very encouraging when it comes to how they engage and understand that this is something, it's less about, am I going to the grocery store or not going to the grocery store? It's more about, how do I actually take the stress out of meal planning? I think there's a myth that people are less busy at home now that they're working from home. I think most people who are juggling kids and everything else are actually just as busy as they were when they were going into the office. And they still need solutions that reduce waste, that taste great, that remove a lot of that mental load. That all being said, what we're seeing from the data is that the expectation across a bunch of different third-party research, as well as what we're seeing from our own customers, is they intend to continue to cook from home in larger numbers than they were before this actually started, even after things start to open up again. It's going to take a while for people to get comfortable with going to restaurants and going out again.
Yeah, I can definitely say I'm more exhausted working from home with a 5-year-old than I am at work working 14-hour days, for sure. So what we are seeing, though, in the job market, and the potential concern is that a second round of layoffs. So the first is going to be retail, restaurants, bars, etc. And then we're going to wind up seeing some more white-collar jobs that presumably are those who are your customers, who can afford to pay more for food. How do you manage that?
Well, we're actually seeing a very interesting dynamic in our customer base because right around the same time that this started, we had actually launched our premium offering, which is a higher priced offering with more complicated techniques and more interesting protein sort of combinations. And we were a little concerned about how that would actually work in this process. And one of the things that we've seen is people are looking at meal kits in some ways, not just as a how do I provide meals at home, but also I can't go out, or it is less expensive than necessarily going out to dinner. And so they're appreciating having a variety of price points that they can approach and say, this might be a night out versus this is actually just my normal meal that I might have on a night in as far as the breadth within a meal kit. So I think you're going to see some of that behavior continue. We were already seeing some trends towards people staying at home before coronavirus started and wanting to spend more time with their family, entertain at home. And so we see some of that continuing as people will go out, but as economic impacts kind of continue to roll forward, we just want to make sure that we're providing the right value in our kits for a variety of situations where your behaviors will have changed, not only after coronavirus, but in a new economy.
Order submitted. Order filled.
And
Order
then just to
canceled.
pivot off of something you said earlier about when you're going to be profitable, et cetera, can you give me a sense of sort of your current cash burn, if you're going to need more funding? What are some of the plans that you're focused on?
Order filled.
If this doesn't
Order
happen, then we're going to need to raise more
Order
money, kind of thing?
submitted. Order filled.
So
Order
we actually
submitted.
announced earlier
Order
this
submitted.
year that we were looking at strategic alternatives that could bolster the strength of the business for a long-term growth strategy, including deeper investment in marketing through some of these strategic alternatives going forward. And we are still on that path, and we're still focused, as we were before, on the strategy that we laid out last year and in the beginning of this year. So none of that really actually changes for us, except for the fact that we are now in a different position as far as having a lot more flexibility as we go to adjusted EBITDA positive and cash positive in Q2.
All right, Linda, thank you so much. It was really good to catch up with you. Appreciate you coming on. Linda Kozlowski, Blue Apron CEO. And for more on how executives are navigating this new business environment, tune in later today for Leadership Live with David Rubenstein. He'll be speaking with the CEO of Qualcomm. That's coming up at 4:30 p.m. Eastern Time in New York. This is Bloomberg.
This is Bloomberg Daybreak. I'm Ritika Gupta with your Bloomberg Business Flash. Telefonica and Liberty Global will create the UK's largest phone and internet operator. Telefonica's O2 and Liberty's Virgin Media will combine. The deal values the new company at $38 billion. It marks another industry-defining merger for the billionaire who controls Liberty, John Malone. Agriculture Secretary Sonny Perdue expects U.S. meatpacking plants to fully resume operations within 10 days. More than half of workers at some American meat plants tested positive for coronavirus. That has slowed production even as some plants reopen, and shortages have forced some grocery chains to limit meat purchases. The world's largest beer maker warns the second quarter will be much worse than the first. AB InBev says April shipments fell 32%. That's because of bars and restaurants being closed due to the coronavirus outbreak. AB InBev's first quarter shipments were down 9.3%. And that's your Bloomberg Business Flash, Alex.
Thanks so much, Ritika. So I want to stay on earnings for a second. Here's how worried corporate executives actually are if you listen to the earnings call. So as the S&P 500 fell, that's that red line there, executives actually talked more about payout cuts, investment cuts, and credit line drawdowns, and those are the other lines. The Fed researchers found that about 42% of non-financial public companies are talking about cutting investments. At the peak of last recession, that was only 25%. The researchers say that's based on trends in 2008, that sentiment won't actually normalize for a year. Another way of sort of looking into the window of corporate America to see how they actually deal with these long-term effects. Coming up, talking about some long-term effects, another estimated 3 million Americans could file for unemployment claims last week. We're going to break down those initial jobless claim numbers with Tiffany Wilding, PIMCO CEO economist, will be joining there with her. This is Bloomberg.
Order filled, order filled, order filled, order canceled, order canceled, order canceled, order filled, order filled, order filled, order canceled, order canceled, order canceled. Order filled, order filled, order filled, order canceled, order canceled, order canceled.
Welcome to Bloomberg Daybreak Americas. I'm Alex Steele. So we get initial jobless claims and productivity coming in just a few seconds. Quick check-in here, though, on the markets. S&P futures around the highs of the session, up 42 points. It is risk on, really a straight arrow higher. And if you switch up the board, it's a relatively similar space in different areas. You have a mixed dollar story in the G10 space, and Norwegian krona outperforming, the cable rate trying to outperform as well. All of that on some central bank rate decisions. And here you're seeing a little bit of a flattener now. You saw a bear steepener after the issuance came down. All right, those numbers are out right now. So initial jobless claims for last week coming in 3.1 million. So that is worse than estimated, but the number is still coming down on a sequential basis. Unit labor cost coming in much higher for the first quarter on a preliminary basis, 4.8%, as productivity is down by 2.5%. That is better than estimated, but nonetheless an insight into what we're going to see for tomorrow in terms of wages and hours worked, etc. That productivity number coming in down 2.5%. Jobless claims 3.1 million. Joining me now is Michael McKee, Bloomberg International Economics and Policy correspondent. Also Tiffany Wilding, PIMCO U.S. economist. Mike, it's a really hard day when you say that 3.1 million people filed for initial jobless claims last week, and it sort of rolls off your back because it's less bad than before, but it feels like nonetheless that's where we are.
Well, it is a tribute, I guess, to economists that they're getting pretty close to the forecast right now each week, but there is a lot of people, there have been a lot of people who were still stuck in the system because they couldn't get processed quickly enough, and that appears to be part of the reason we're still seeing this big backlog, because of course many people were just laid off immediately when the various states closed down. One interesting aspect of this is if you take a look at the number of non-seasonally adjusted claims, that's 2.8 million, and they've been steadily lower. And the New York Fed is out with a note this morning that says if you're trying to compute what claims mean for the payroll report tomorrow, you should be using the unadjusted numbers, because the seasonal adjustment is based on normal patterns, and this is not a normal pattern and would not account for an accurate count of the number of people who are actually jobless. And so they're suggesting that the number of people who are unemployed tomorrow could be 2 million lower than the figure that comes in if you use the unadjusted figures. Maybe that's just nerd talk for economists, and you can ask Tiffany about it. But it is something to keep in mind when we start forecasting 21 million jobs lost tomorrow.
No, it's a fair point. So let's ask Tiffany, is that just nerd talk, or are we going to be in a situation where the underlying numbers may not be as bad as we might expect?
Well, I mean, I don't know about the nerd talk because, I mean, you live and breathe this stuff. But I think the New York Fed is right in terms of the seasonal adjustment in that it probably isn't doing a great job right now because we aren't really in normal times. And seasonal adjustments are usually more helpful when you kind of have more normal times. But in terms of the New York Fed's conclusions that things might not be as bad, I think that there's actually some other evidence on the other side of that. And that's exactly what Michael McKee suggested, in that you've had an increase in backlog. So some of these, just the volume of claims that many of the states have been getting have made it more difficult for them to process all of them. So the numbers that we could be seeing in initial jobless claims could actually understate the amount of people who actually lost their jobs during the survey period. And I thought there was an interesting bit of research on that came out from some academic researchers from the Virginia Commonwealth as well as Arizona State universities, and they basically estimate through an interim labor market survey. So they're trying to replicate the household and the establishment surveys. They found that maybe 34 million people, which is much higher than the 24 million people that are in the unadjusted claims, could actually have lost their jobs in April. So, I think there's a broad range of outcomes here. I actually think that the consensus right now on Bloomberg, which I think is 21 million, maybe a little bit lower than what we're likely to get. But of course, we'll see with the data tomorrow.
Tiffany, I'm also interested in sort of second and third round effects. So we know sort of the initial furlough and the initial people that were laid off. But as we restart the economy, do you expect those furloughed workers to then be officially laid off for longer term? I mean, how do you see the second round playing out now?
Yeah, and I think that's what's key for markets these days. I think it's not necessarily the kind of depth of the recession that we're getting, but I think it's really about the recovery once you start to have some of these mandated business closures removed. And of course, we're starting to see some states do that. But really, to me, the extent to which people get rehired is really a question about, the extent to which you have bankruptcies or companies that are going out of business because of this kind of extended period of no revenues. But also, I think there's another question here. It's not only when we lift the business closure mandates, how quickly will consumers actually start to rebound and go back to their quote normal activities? And I think one of the things that we worry about, because we are reopening the economy without many of the testing and tracing programs in place, and without some of the surge capacity at hospitals that many of the experts recommend, that you're not actually going to have consumers that are really rebounding a lot, as we as we officially reopen. So that matters for small and mid-sized companies in particular, because they tend to be more fragile. So if they have revenue disruption kind of long after that reopening, you could start to see bankruptcies, which will impact the labor market on a longer-term basis, and that's the scenario that we worry about.
Alex, let me throw another thought in here about the numbers tomorrow, and then that'll lead me to a question for Tiffany. The unemployment rate may also be somewhat misleading, because the Labor Department said that what should have been done last time is anybody who was out of work and not being paid because of the coronavirus should have been classified as not working, unemployed, but on temporary layoff. And there's been a question about whether those people would be considered not in the labor force because they weren't looking for jobs. The Labor Department says they should be considered in the labor force. There were mistakes made in the last issue, the last report because of this. And so the question is, can we really consider any of these numbers particularly accurate given all the statistical problems with them? Which leads me to the question to Tiffany. They may be off. So what is it you would look for in tomorrow's report that would really tell you anything of use, particularly about the labor market going forward?
Yeah, I think that's a great question, and it's a great point. So really here, I think what this boils down to is that the unemployment rate rise that we see tomorrow might be less just because people are leaving the labor market, or at least they're reported on the survey as leaving the labor market, so the participation rate falls. So I think when you have the combination of those two things that could be noisy, really the metric that you want to look at is the employment to population ratio. And that will give you, I think, a better sense of how many people are actually, how many people have moved from from employment to something else. And we think that what we call EPOP ratio, I guess in a nerd language, is we think that could rise by 10 percentage points. So regardless of the unemployment rate where it comes, I think that's the thing that we'll be looking at. Now if the consensus is right for how many jobs that are lost, and you don't have any rise in the participation rate, the unemployment rate could be over 20% tomorrow.
Wow, that would be really staggering. And then in which case, I would like to dig a little deeper, Tiffany, into what you're expecting from wages and hours worked. I mean, the productivity number was pretty dismal for the first quarter, labor costs obviously as well. How do we get out of, where are we with productivity, and how do we get out of all this?
Yeah, so the productivity numbers were negative today, and really I think it's interesting to contrast that, which is the speed and scope of the labor market disruption that we've seen. So, I think as everybody knows, productivity numbers are calculated by looking at just the output in the first quarter, and then looking at how many hours it took people to create that output. So really what the negative productivity number suggests is that although companies were racing to I guess fire workers, even if it was temporary, they couldn't do it fast enough, just given the massive decline in revenues and output that they were seeing. So, those productivity numbers, they're pretty bad. They're not as bad as they could have been. Tomorrow, I think you will see hours worked certainly decline within the labor market survey. Now, on the average hourly earnings, again, I think you have to be a little bit careful because of the way the statistics are created. So it's an average across all industries. And what we're seeing, though, I think, is a change in the composition of the underlying employment base. And that's because many of the people that are now unemployed are lower wage jobs. So you actually could see a better average hourly earnings number tomorrow because of that composition shift towards the people that are still working, are those people that are at the higher end of the wage spectrum. And I think you're probably seeing some of that as well today in the unit labor costs, which were a bit higher.
Really interesting dynamic there. All right, Tiffany Wilding of PIMCO, thank you so much. Pleasure to chat with you. Bloomberg's Michael McKee, thank you so much as always. And tune in to Mike's interview later on today with Mary Daly, San Francisco Fed President. That's coming up at 11 a.m. Here in New York. And still on jobs. So the pandemic appears to be hurting some groups of employees more heavily than others. Check this one out. The unemployment rates for Black Americans and Hispanics fell to historic lows during a record-long economic expansion. And now that's changed. Now, historically, minority workers have been penalized by a last hired, first fired dynamic. Now, the question is whether that will hold true when the jobs actually come back. Nonetheless, a staggering chart as we delve into this complicated jobs picture. 3.2 million unemployed filing for initial jobless claims last week. All right, now let's give you an update on what's making headlines outside the business world. Here is Ritika Gupta with First Word News. Ritika?
Thanks, Alex. Top U.S. and China trade negotiators will speak as soon as next week. They'll try to make progress in implementing a Phase 1 deal. President Trump threatened to terminate the agreement if Beijing wasn't sticking to the terms. The trade deal was signed in January, just before the coronavirus outbreak hammered the world's two biggest economies. The World Health Organization is considering a new mission to China. It's looking at what's called an academic trip to find the animal origins of the coronavirus. There's a growing controversy over how the virus started. The Trump administration has said it likely escaped from a laboratory in Wuhan. China has denied that claim. And the UK could start easing its lockdown on Monday. Prime Minister Boris Johnson will unveil his plan the day before. Johnson is under pressure to get the British economy moving again without another surge of deaths. More than 30,000 people in the UK have died from the coronavirus. That's the highest number in Europe. Global news, 24 hours a day, on air and at Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Alex?
All right, thanks so much, Ritika. So crude is spiking this morning. Saudi Arabia actually raises prices for refiners in Asia, Europe, as well as the U.S. We're going to break it all down with Janine Wei, Barclays senior U.S. integrated oil and E&P analyst. That's coming up next in today's Bottom Line. And plus, if you want to check out any charts that we use throughout the show, just go right to GTV Go on your terminal. You can save them and check them out at GTV Go. This is Bloomberg.
Order submitted. 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 Order submitted.
This is Bloomberg Daybreak. I'm Ritika Gupta with your Bloomberg Business Flash. Peloton is cashing in on the nationwide shutdown. The maker of fitness equipment and online exercise services says quarterly revenue soared 66%. Peloton also raised its forecast. The coronavirus outbreak has led thousands of Americans to buy the company's stationary bike and work out at home. And the price of oil rose after Saudi Arabia raised prices for refiners. Brent crude went above $31 a barrel. Earlier this year, the Saudis started a price war by offering massive discounts. Now they and their OPEC Plus partners are promising sharp production cuts to try to rebalance a glutted market. I'm Ritika Gupta, and that's your Bloomberg Business Flash. Alex?
Thanks so much, Ritika. Time now for Bottom Line. We take a look at some companies and sectors worth watching this morning, and we're going to stay on oil and look at the E&P industry. Joining me now is Janine Wei, Barclays Senior U.S. Integrated Oil and E&P Analyst. Janine, always great to have you on the program. When you see a rally underway, Brent over 30, WTI 25, when do producers say, forget this production cut thing, I'm going to go back and produce oil? What's the magic number we've been hearing on these earnings calls?
Thanks for having me on, Alex. Yeah, this is a question, and the oil price is a number that everybody keeps watching as a trigger. It just wasn't too long ago that we were at minus $38, but in terms of the price that E&Ps are getting back to work, it's tricky. It's not just about the absolute price signal to us. It's about stability, because we still have continued concerns on kind of hitting tank tops with storage. We still don't know the duration of demand destruction from COVID-19. And so we think there could be more volatility going forward on oil prices and not less. And it's just not efficient for E&Ps to live activity up and down and up and down. So, we've heard this high 20s, low 30s number, but we really think that it's about stability and to get back to actual growth versus the anemic kind of activity levels we're at now. It's going to take something closer to a sustained 40 or 45.
Oh, wow. Okay. That's a far cry off from where we are. So based on that, we're really in the midst of E&P earnings season in the U.S. Who's going to make it? Like, who are the good ones?
Well, this earnings season has been exciting. We're in the throes of it right now. We've had a few good earnings prints where we see some winners. Execution still really matters in the space. The companies really need to hit their numbers in order to instill confidence from investors. And so in that case, we highlight Devon, who this week, they reported very strong numbers. They beat all around on cash flow, CapEx, oil production, and they continue to show a really good track record of execution. Also, oil prices are still very low, and cash is king, and specifically free cash flow is king in the current environment. And we'd probably highlight this week that Parsley announced another CapEx reduction, and now the company expects to generate over $300 billion of free cash flow at $20 to $30 TI for the rest of the year, which is pretty impressive. And so we think there should be some follow through on that.
Who doesn't make it?
Well, in terms of not making it and bankruptcies and all of that, after selling a bunch of assets and repositioning portfolios on our large cap E&P side, we have decent balance sheets. And so we don't see a lot of near-term risk for bankruptcies. And what we've been seeing also is that some companies are able to successfully tap the debt market recently. But, with that said, the more highly levered names with near-term debt maturities, we're watching those names because they could be more exposed, depending on if oil prices remain challenged and if the markets are actually closed to them. So, for example, Oxy has above average leverage, and they've got $6.4 billion of debt coming due next year and $12 billion coming due over the next 3 years. So that's a name that we're going to watch just on how oil prices do. But, that company, like others, they still have options, and they continue to work asset sales. They're lowering costs. They're lowering CapEx. They're trying to preserve the cash. But really, they just need higher oil prices.
Right. So let's make that distinction. Like, who can restructure their debt? Who's going to be able to declare Chapter 11? And who's doing Chapter 7? Like, total, here are the keys, I'm walking away.
Yeah, we just don't see very much of that on the large cap side. In terms of the companies that are able to restructure debt, we saw EOG come to the market successfully. We saw Exxon come to the market successfully. So we still think that the debt markets are going to be open for the high quality companies. Equity is a whole other story, but there's still options.
Fair point. Are there any other levers that companies can pull in terms of cost cutting, wringing out services costs? Is there anything else they can do on like an SG&A basis that will help them survive?
Yes, we are seeing tremendous OPEX savings in addition to the CAPEX cuts that gets a lot more of the press. The companies are squeezing every single efficiency that they can just because oil prices are so low. And so we've had surprises to the upside on companies being able to reduce not only G&A, but operating expenses going forward. So that's one thing that they can do that we're seeing a lot of.
And as we go forward, a lot of companies are also drilling but not completing. They're called DUCs. They're drilling uncompleted wells. So basically when oil prices go high enough, they just complete it, boom, the oil hits the market. What are we seeing in terms of that? That was an overhang in the last downturn in 2015.
True. It's kind of funny how things change. This idea about building the DUCs that you're talking about, Alex, that's a huge theme so far that we've seen out of earnings. Essentially, these DUCs that they're building, it's going to be a juicer, a big tailwind on capital efficiency for 2021, and that's going to be a direct benefit to cash flow for the producers. And we can argue from a balance sheet perspective whether it's a good idea or not to kind of drill the wells, spend the CAPEX, and not bring them online. But either way, it's going to be a positive for 2021. And so we're calling 2021 the year of the duck and saying stay tuned.
I love it. All right, Janine Wei, Barclays, thank you so much. Love chatting with you. And for more of oil's volatility in the wake of the pandemic, tune in to my oil special this weekend called Crude in Crisis. That's coming up tomorrow night at 9 p.m. right here in New York. And coming up right now on this program, the trend is your friend. That's when it comes to gold and Bitcoin. That's coming up next in today's Technically Speaking. This is Bloomberg. All right, time for Technically Speaking. Joining me now, Mike McGlone, Bloomberg Intelligence commodity strategist. Mike, good to chat with you. You're looking at the trend in gold.
Hello, Alex. Yes, looking at the trend in gold in a market that's more likely to continue appreciating on the back of significant Federal Reserve easing. So what you see in the first chart is the Fed's balance sheet as a percentage of GDP just jumped to an all-time new high, above 30%. overlaid with gold. This is a monthly chart of gold. The big difference from the last time we started quantitative easing, gold had just made an all-time new high around 1,000. This time it's well below the all-time new high, so it looks to me like it's just a matter of time that takes out that high at 1,900.
That's such a good point. So walk me through then what that means then for the S&P as well as Bitcoin.
Well, the next chart is I want to let's focus on the simple technical trends. 50-week average, basically a year. They're higher for Bitcoin and gold, continuing to trend higher, look pretty strong, yet they've turned down in the S&P 500, but also note the levels. S&P 500 just around 3,000. We're still below that level, yet Bitcoin and gold trending higher, and markets are both above those levels. So what you're supposed to do is buy dips around that 50-week average, and markets are trending higher, and sell rallies like S&P 500 near that 50-week average, which is trending down.
As we just see, it's a grind higher today. All right, great stuff, Mike McGlone. Thanks very much, Bloomberg Intelligence. And that does it for me here at Bloomberg Daybreak Americas. Coming up on the Open with John Farrow, Julian Emanuel, BTIG Chief Equity and Derivatives Strategist. In the market, though, you still have the rally underway within S&P futures. A touch of buying, though, in the Treasury market, I should point out, even though you had initial jobless claims coming in 3.2 million just for last week as productivity tanks and unit labor costs surge. This is Bloomberg.
Order filled. Order submitted. Order submitted. Order filled. Order canceled.
From New York City for our audience worldwide, good morning, good morning. The countdown to the open starts right now. Here is your Thursday morning price action after yesterday's mild losses on the S&P 500. Equity futures are positive going into the cash open, up by 1.52% on the S&P 500, positive 43 points. That is your price action. Your price action, a screen, a chart that looks like nothing's happened in the last 30 minutes, but something has. That's our top issue. 33.5 million jobless claims in just 7 weeks. Perhaps you've become desensitized to some of these numbers. Markets may well even have become somewhat comfortable with them. I can tell you for the people behind this statistic, there is nothing comfortable about this moment. As we reopen this economy, we need to focus on many things. But one of the most important things right now for me in this economy is just this one question. How long will it take for this labour market to heal?
The bulk of the layoffs are behind us. Luckily, in some sectors, again, technology being one of them, there probably won't be the need for a lot of layoffs.
We have the ability to come back to our offices fully intact as an organization. For those people who have let go of people or who are experiencing a need now to rehire, I hope that the government in the second phase gives companies incentives to rehire aggressively.
As we get back to the levels we were at before, we should see the level of employment approximate the same place.
Fortunately for us, this is a ramp-up phase for us. So, our employee count is factored into our model, and as long as we remain on track, I think we feel really good about our ability to keep everyone working.
We're still hiring.
That's the view from the C-suite. We can turn now to Michael McKee for the latest on the data ahead of a brutal payrolls report in 24 hours' time. Good morning to you, Mike.
Good morning to you, John. Again, another one of those charts that you just can't believe. You shake your head at. Number of jobless claims, 3.1 million again this week. And we still continue to see high numbers, in part because so many people are trying to get through the unemployment registration process, and it's taking a long time in some of the bigger states. Texas, one of the biggest states this week, and it has had problems with its unemployment system. So the question is, how long does this continue? Ian Shepherdson of Pantheon suggests we won't see numbers below 1 million until the middle of June. The other issue I see, John, when you look at the numbers forecast for tomorrow and you put together those people that you were just talking to, those CEOs, it reminds me of the old saying about forecasting. Don't make both a point forecast and a time forecast at the same time. We'll get back to the levels of employment that we were having before, but it's going to take years. It's not going to happen right away. If you lose 21 million people, as the numbers, the Bloomberg consensus suggests, that's going to keep people off work for a very long time. Not going to hire that many people back right away. The unemployment rate, 16% is the Bloomberg consensus, but there are so many problems with the unemployment rate right now that it could be much higher than that or even a little bit lower. Watch hours worked, that was the third number on there, because it'll tell you how many people had their hours cut, maybe still on payroll, but aren't really working all that much. I would just close, John, with this chart, if we have it, that shows the forecast in blue there. The white line is the number of jobs lost or gained each month. And you can see the major job loss last month, 701,000, barely even registers. The forecast totally destroys the y-axis here. Another wow kind of chart.
Michael McKee on the data. Just incredible charts, incredible data in this labour market. Mike, I appreciate your time this morning. We'll catch up with you a little bit later. It has taken just a couple of months to destroy what took a decade to build. How long will it take to rebuild it? It's a key question for all of us as we work our way through this reopening and this long road towards normalisation. Here's an optimistic president of the United States.
We're going to have a great economy very soon, much sooner than people think. This was artificially induced. This was an artificially induced unemployment.
The President of the United States weighing in on the shutdown. It was a policy choice, a tough policy choice as well. And I think that's what he's referring to when he says it's artificial. Is it as simple, though, as just turning on the lights and the jobs come back? Let's turn now to a great guest, a good friend of ours, Bob Michael of JP Morgan Asset Management. Bob, walk me through that. Is it that simple? Reopen and the jobs come back as quickly as the jobs left?
No, it's not that simple. And I agree with Mike. It's going to take years or longer to get back to where we are or where we were. And it just seems like 2 months ago, we were looking at 3.5% unemployment, and every tenth was an enormous debate. Now everyone's estimating 15 to 20% unemployment. It's a multiple of 50 times the error we were looking for just 2 months ago. Here are two observation points that we're focused on. One is when you look at the Congressional Budget Office forecast for the end of 2021, they have unemployment at 9%. So sure, materially better than where we're going to peak in the high teens. But during the peak of the financial crisis, unemployment hit 10%. So even looking out a year and a half from now, we're still going to be roughly where we were at the peak of the financial crisis. The other thing we're focused on is what happens when people return and the PPP programs run out. Our business is going to find that their customers aren't returning the way they were pre-crisis, and are they going to end up starting a round of layoffs that nobody's anticipated?
So, Bob, a couple of things to work through here. Let's pick up on the first point, the length of time it will take to recover because of the damage done. It makes me wonder why week after week, every single Thursday, when we see these numbers, this market essentially ignores them. Why are we looking through this data?
That's a good question. I think it just comes
Order
back
filled.
to
Order
confidence
submitted.
in the
Order
policy
submitted.
response. Everyone talks about we've never seen this volume of policy response before. One of the things we did is to just project a downdraft in the second quarter somewhere around 10%, so call it 38 to 40% annualized, and say that's the trough, and then start this journey back up to the long-term trend rate to catch up
Order
to
filled.
the long-term
Order
trend
submitted.
rate that's
Order
been in place,
submitted.
call it
Order filled.
1.5%
Order
pre-crisis.
submitted.
To fill
Order
that
submitted.
output gap, we estimate will take 10 to 12 years. Now, that's a long time, but is it unrealistic? No. After the financial crisis, it took about 8.5 years to catch up to the long-term trend line. So I think there's a lot of optimism. There's a lot of liquidity in place. It's going into asset prices. We don't share all that confidence.
Well, let's talk about the confidence in policy then, Bob. Share something that you do share at the moment and have done over the last couple of months is the confidence in the policymaker. The sequencing of policy is really quite important. I think it's been a mistake to call what we've seen over the last couple of months stimulus when it's been aid. You don't try and stimulate an economy when it's shut down. When we reopen, though, don't we have to recalibrate the policy tools that are being deployed? And when you think about that, what kind of policy tools do you think will be deployed in the months to come?
Well, that's a very good point, John. I have for a while said this is aid, assistance, support. This is not stimulus. This is just trying to replace what's lost to some degree, not accelerating the pre-crisis economy. I think as we start to come out on the other side and the weight of debt that will be taken on by every level of government, by businesses and consumers will be massive, you're going to need the central banks in here ensuring that the cost of funding doesn't escalate out of control. So out of the Fed, I don't know if it's going to be implicit or explicit yield curve control, but you're going to see that. We've already got credit ease in place. Maybe there's even some degree of credit curve control underway. One of the things I would like to see is actual stimulus. So on the other side of this, what about $1 trillion infrastructure spend instead of spread out over 10 years, maybe spread out over 4 or 5 years? Something out there that creates new aggregate demand while we recover.
Well, let's talk about capital allocation to round things out as well, Bob. Just listening to you in the last 5 minutes, it's going to take 10 years to recover what has taken 2 months to destroy and took 10 years to build previously. We're going to see a high debt world, a low growth world. How do you allocate capital for the years ahead?
Well, I think we're starting to see some of that. You have to be very careful about anything that buys back stock or raises dividends or how companies compensate themselves, because everything's going to have to go into ensuring that your employees are taken care of, that their balance sheets repaired to the extent that they can consume again, and that's ultimately what's good for corporate America. I think from a federal level, you just have to ensure that that debt keeps rolling over at an affordable rate and nothing falls through the cracks. So we're going to be living with policy stimulus or policy support and stimulus for a long period of time. I think people forget that also coming out of the financial crisis, it took the Fed 7 years to raise rates from zero. So these forecasts that we're only here for a year or two are nonsense.
Bob, just on the debt, just a final point on this. We've seen so much issuance in the last couple of months. I think we've had north of $600 billion in 2 months in US investment grade issuance. We've seen a lot come from the Treasury and a lot more still to come. I've heard a lot more of the following phrase in the last couple of weeks: crowding out, competing for the same capital in the market, in investment grade in the United States against treasuries. Are you thinking about that kind of dynamic at the moment, Bob?
Of course we are. And of course we think the Fed needs to be in there supporting these markets so that the cost of the debt is affordable. What's interesting to us is the way the Treasury is looking at managing that right now with, say, $20 billion in 20-year securities. So it feels like the front intermediate part of the yield curve will be supported, but they're going to leave the longer end untethered to a degree, leaving it for pension funds and insurance companies that need the higher yield to defease liabilities. I think it's a smart plan.
Bob Michael of JP Morgan Asset Management. Bob, I hope you and the family are doing well. Fantastic to catch up with you, as always, and appreciate the reality check on several issues. Bob Michael there weighing in on the labour market, the economy and financial markets as well. Up next on this programme, 19 minutes away from an opening bell, with equity futures seemingly shaking everything off, up 42 points on the S&P 500, 1.48% higher. Looking at that screen, it feels like any other morning. There is nothing normal about this. Don't forget that. This is Bloomberg.
We've made a very strong commitment. This is more and faster than the Bank of England has ever done before. We're keeping more option open. Two of my colleagues on the committee voted to do more QE now. Other members of the committee thought that it was a sensible decision to take in our next meeting. We're not ruling anything out at the moment because it would be unwise of us to rule anything out in terms of responses. So I don't want to say we're nearer to negative rates, but we're not ruling anything out.
Governor Andrew Bailey of the Bank of England speaking to Bloomberg's Francine Lacqua a little bit earlier on this morning. A brilliant interview focusing on the road ahead. This morning, the Bank of England leaving policy unchanged. 2 voters looking for more stimulus. Many people expecting that to happen, given that the current bond buying programme tops out probably around July. They'll meet again in June and maybe have a month of data behind them or several weeks of an economy that is slowly reopened. What does that economy look like and how much stimulus will they need to deploy for the months ahead? That's a big question for them as they reconvene in the next several weeks. The big question for us is, why is the answer to the question, what do we need to do, always more? Why does central bank, is it always more QE? And does more actually make a difference? Let's turn now to Mithra Warrior of TD Securities. So Mithra, let's talk about that. Whenever these central banks come up against anything, the answer is always more. Will more help this time around?
Hi, John. Great to be here. I think the question in this instance is, will more help people come back? Will more help demand come back? And I don't know that that's something that monetary policy can solve for. Monetary policy and the stimulus have held up asset prices. And I think one of the reasons you're seeing this divergence between stock valuations and the fundamentals of the economy is because of monetary policy. But until you solve for the fundamentals of the economy and demand coming back, what's more really going to do?
And Mithra, I think this is absolutely key, that what we've seen over the last couple of months, our policymakers actually doing a pretty good job, a decent job of keeping the balls up in the air, providing a bridge to get to the other side. And they've been rewarded, if you're in this market, if you've got access to that liquidity. As we come out the other side, Mithra, it's got to be about the fundamentals and the recovery and the trajectory of the recovery. We caught up with Bob Michael of JP Morgan just 10 minutes ago, who basically painted a pretty brutal picture. And I think it was a brush of reality as well as he painted that picture. How long it would take to recover what we've destroyed in just 2 months. How long do you think it will take? Because he's looking at 10 years.
In speaking to our clients, this is going to be a protracted time in which things come back to where they were. I think you'll see a bifurcation where certain sectors of the economy and certain parts of demand come back sooner. So if there is fiscal spending, maybe infrastructure comes back sooner. If maybe travel returns back in slow ways, at least essential travel or business travel might return back. But if you're a retailer, for example, that was struggling before this happened, then what's it going to take for you to recover? So, when we speak to all of our clients, it's not something that in 6 months or a year is going to come back. I think the consensus is it's going to be years, whether it's 5, 10, we don't really know, but it's going to be years before we come back to full tilt.
Just in terms of the job cuts and the complexion of the job cuts, where they've come from in the last couple of months, do you expect that to change in the months to come? Quite clearly, for many companies who just haven't been able to open, with workers that cannot work from home, they've had to shut down. They're the job losses that we see on the screen every Thursday. In the months to come, there will be multinationals with people working from home currently, which in the months to come may have to cut because of a weaker demand profile for the years to come. How are you thinking about that dynamic, the job loss we've seen and the job losses we may well see in the future?
So one thing, this is where the policy effect comes into play a little bit. One of the questions is all of the policy actions propping up bad companies? Are there companies that, regardless of the pandemic, that might have failed, and are they being kept up because of this? So that's one question. There may be companies that are able to avoid layoffs because they've taken on so much of the stimulus effects. But I think the other question is, what happens after September, after PPP runs out? And what happens without guidance? What's concerning to us and our clients is how many companies have pulled their forward guidance, right? So I think the question is, layoffs are, if you don't have any guidance on how you're going to do and how your earnings are going to be, how can you project that you can keep all your employees or not? So that's another question we're really focused on.
Yeah, I think 1/5 of large companies, according to Bank of America, have cut their guidance so far. I'm surprised there are still that many companies out there providing any guidance for the future, given the limited visibility we have. Speaking of visibility, the visibility on the bond market improves just a little bit. We found out just yesterday where the Treasury will be issuing that extra debt. It will be the longer end of the curve, 10s, 30s, 20s too. I'm just wondering, when you speak to your clients, when you speak internally to the likes of your colleagues, Priya Misra over at TD, how you're thinking about the evolution of the shape of the yield curve in America.
I think, people are certainly concerned that with all the stimulus right now, everyone agrees that the governments are doing what they need to do in order to prop up economies, or at least try to prop up and do so. But there is a cost to that, and there is issuance, and then there is inflation. So I think people are certainly thinking about there's open questions on what does this do to inflation, what does this do to the yield curve, and how long can the government keep doing this and keep propping up economies, especially if we see that recovery is going to be protracted. So I think there's still a lot more open questions than answers on this point, John.
Are they constructive on the future around growth and inflation? Have you seen that improve as we've started to see an economy slowly reopen in certain places around the world? Have you seen the change in tone?
One of the things that everyone that we talk to says about inflation is that it is going to come, but it's going to be 3 to 5 years out. One of the things is there's obviously the amount of debt and the issuance that's going to lead to inflation, but there's also what does this do to supply chains? If supply chains come back locally and prices go up, what does that do to inflation? So the talk about inflation is certainly one that's further out the curve, but also one that may be more supply-driven than necessarily consumer-driven. So it's sort of an interesting pivot to how people are thinking about the inflation argument.
Mithra, appreciate your time this morning on some really important topics, and appreciate the visibility you give us about your conversation with clients too. Mithra Warrior of TD weighing in on the situation in the bond market and with central bank stimulus. Mithra touched on something really important, and that's supply chains and the future of supply chains. Quite clearly, we've got to follow the politics here. There is some real tension between the West and China over this pandemic, and there's a big call to repatriate supply chains. Why are we so vulnerable for production of key industries in an overwhelming way in one country? Why is it so concentrated in China? That's a question that politicians are grappling with. And it's one of the big issues in Washington right now, where there is bipartisan support, a harder stance on China, and a bigger push to repatriate those supply chains. A little bit later in this program, we'll catch up with Nouriel Roubini to get his thoughts on that situation. We'll catch up with Kevin Cerulli down in Washington as well to get the latest on the trade situation. As we look ahead next week, according to our colleagues here at Bloomberg, for a call between trade officials from China and the United States on the road ahead. From New York this morning, good morning. Next up on this program, I'll get you some morning calls, the analyst calls on Wall Street. We'll get you some more price action as well, with equity futures up 1.5%, positive 42 points. From New York, this is Bloomberg TV. 5 minutes away from the opening bell in New York City this morning. Good morning to you all. Let's get you a little bit of price action. We are up by 41 points on the S&P 500. We are positive by 1.43% on the S&P. Just for a brief moment in time, for about several days last week, there were some big calls about the end of mega cap dominance. Perhaps the mega caps taking a back seat to the more cyclical areas of the market, the small caps. Lasted about 5 minutes. The mega caps and tech back on top in yesterday's session, and a bit of follow through this morning. Apparently, for a lot of people out there, a bit of follow through for the year ahead as well. That'll be a big debate a little bit later in this program. We'll catch up with Julian Emmanuel of BTIG, and we'll talk to him about that. Will we get a reopening rotation or not? It's a big question for you all out there, I know. Let me take the opportunity to get you some morning calls. 3 quick calls from the analyst community on Wall Street to get you up to speed on some of the moves out there. We begin first up with a move from Deutsche Bank, upgrading GM to a buy with a $30 price target. The analyst saying the automaker is best positioned to weather a challenging second quarter after management's proactive adjustments. The numbers yesterday, I think, surprised a lot of people. Your second call, next up from Gordon Haskett, cutting its General Electric price target down to just $5 a share. The analyst citing a collapsing aerospace industry and headwinds to generating free cash flow. And your third and final call this morning comes from JP Morgan, raising its price target on Peloton to a street high $58 a share following earnings. The analyst expecting product offerings to improve, along with additional content, instructors and software enhancements, as many people, including a few of you at home, are forced to work out and not be able to go to the gym. From New York, much more still to come on those brutal job numbers. 33.5 million initial jobless claims processed in just 7 weeks. This is Bloomberg. 25 seconds away from the opening bow this Thursday morning. Here is your price action in New York City. Equity futures near session highs going into the cash open. We're up by 1.42%, positive 40 points. On the bond market, the story yesterday, yields higher, the curve steeper as the Treasury announces more funding at the long end of the curve. Today, not much price action to speak of, very little follow through. Your yield on a 10-year comes in a single basis point, just south of 70 basis points. In foreign exchange, all eyes on sterling as the Bank of England meets and seemingly tees up another move in June, potentially more QE, not a rate cut. We're at the effective lower bound in the minds of many officials in the UK. Sterling weaker by a third of 1%. Euro dollar going absolutely nowhere. And in commodities to round things out for you, Saudi upping their selling prices. What a mistake they made a couple of months ago. Total 180. It means Brent is now higher to $31.50. And WTI crude is up by around about 9 percentage points to $26.21. That's your cross-asset story. Let's get to the market desk with your movers. It's Kelly Lyons.
Well, a number of earnings-related movers for you, John, and many of them moving to the upside by double digits, including Viacom. It's benefiting from people staying at home, streaming more. That means subscribers are up 50%, even though advertising revenue did fall by 19%. You also have Teva up by double digits, reaffirmed its outlook because people are still buying drugs amid this pandemic. And Moderna, another big mover. The market really just focused on that potential coronavirus vaccine. The company's planning on starting a phase 2 study for that. That is a stock, John, trading at 343 times trailing 12-month revenue. Just putting that out there for you. And JetBlue up nearly 2% now. Yes, it lost more than expected, but the company is going to cut its daily cash burn to $10 million to try to weather this storm for airlines. Now, with these, there is about 80% of companies now in the S&P 500 that have reported so far. On average, earnings down by about 8.2%. They are beating on both the top and bottom line marginally, but we know analysts went into this earnings season basically flying blind, so how much those estimates really matter is a question. Really what it's all about is what the picture looks like going forward. And frankly, companies are pretty scared about what that's going to look like. Some researchers at the Federal Reserve put together a new study, went through more than 600 earnings calls from last month, and what they found was companies' financing concerns amid this COVID-19 pandemic are even more severe than during the financial crisis. 42% of public companies are slashing their investments. That's the blue line we're looking at here on this chart. Back in 2008, only 25% of them were doing that. You also have 27 of them talking about equity payouts, 17 drawing down lines of credit. Those numbers are more than double what they were during the last crisis. What that all means, John, the researchers at the Fed say things aren't going to normalize for about a year.
A lot of people feel like it might take a whole lot longer. Kelly Lyons, appreciate your time this morning. Thank you. 2.5 minutes into the session, equities advanced 1.36% on the S&P 500. Kelly Lyons picking up on a really important story for the months and years ahead. Business spending, a really important variable right now. They have very limited visibility on the future. We caught up with Bank of America's Jared Woodard in the last 24 hours, who pointed out 1/5 of the companies, the big companies in America who have reported earnings, have actually had to drop their guidance. And also 1/5 of companies that have reported in America have either had to suspend buybacks or cut the dividend as well. What does it mean for CapEx, investment, business spending more generally in the months to come? Let's catch up with Julian Emmanuel of BTIG. Julian, always great to get your thoughts on this show, sir. Fantastic to have you with us. Let's just start there. Business spending, the outlook for the C-suite. Does confidence improve as this economy reopens?
Well, this is a process, and this is a lengthy process, and I think you hit it a few moments ago. This is not just a year. This is a multi-year process. But what's really critical now is getting to that stage where you can actually evaluate confidence increasing. And to us, what you've seen during earnings season, and you see it in the markets, is that the companies that tell you that they have sufficient cash to weather 6 months, 12 months, or even perhaps beyond are the ones that are being rewarded, whereas the ones that have been stressed borrowers, where there is doubt, and who are particularly convex to the speed of the economic reopening, that's where the risk is, and that's where you're seeing underperformance. But it is a very long process, and we need to be sort of cognizant of that.
Julian, I think a lot of people struggle with this market, not just people on Wall Street, but particularly more broadly outside of Wall Street, who might be stuck at home now watching a program like this and thinking, why is the market higher? The Nasdaq is up by 1.43%. For 2020, we've just erased the loss for the year on the Nasdaq. Julian, what do you tell people when they say to you, does that make sense? Does it make sense that on the year in 2020, the Nasdaq's flat?
Look, it is really a challenge to reconcile, the unbelievable tragedy of what's happened to the economy. But at the same time, there is this expectation that we are nearing the trough. Obviously, the data this morning tells you that the trough is still a ways away. But when you think about the fiscal and monetary stimulus now approaching 50% of U.S. GDP, that explains why stocks are here now. For us, the next step is where do we go from here? And that is very much, in our view, dependent on the medicine. To us, the reason that the market is strong this morning is because Dr. Fauci has blessed, this phase 2 trial. And so we're just going to have to see how things develop, because what we already know is that the economic reopening is going to be very slow and very gradual, and there will be fits and starts.
Slow, gradual, and incredibly uncertain. That's the future. And with that in mind, Julian, if the mega caps have done well, and let's be clear, one of the big reasons this Nasdaq has held up so well through 2020 is because the big 5 tech companies have held up so well just in terms of their business and their revenue streams. Are people really going to rotate away from those big success stories at a time of maximum uncertainty as we reopen this economy?
And the other thing that you didn't mention, the massive amounts of cash that they're generating and the massive amounts of cash on their balance sheet. But if you think about it, John, from the bigger picture, the success of reopening is contingent upon small business starting to do better. It's contingent upon, other measures of economic activity, a more stable oil price, potentially higher interest rates as we deal with all these refundings. And from our point of view, when you look at the valuation differentials and the concentration in these big names, we do think that as more people come back to work and sort of these shelter-in-place themes start to recede a little bit, you're going to get rotation to the more cyclical, more beaten-down areas that once this bear market fully transitions into a new bull market, sort of work as they have in the past.
Julian, I love catching up with you for a whole variety of reasons. We've been close over the years. We've known each other a long time. I know that you are a market historian as well. And I also know that you've been looking at the past paradigms, the volatility paradigms that are similar, the parallels to now and 1929 and 1987. Are there lessons to be learned from those periods that can be applied in a world like this in such an unprecedented moment?
Well, for an equity investor, the lesson is very clear. You cannot allow your emotions to get control of you, okay? Fear and greed. And if you look at 1929 and 1987, 1929, you actually had a 48% rally in the 5 months following the crash. Greed got in the way of people. And in fact, if you look at the monetary policy response, it was the opposite of what we're having now. And in a lot of ways, that precipitated the Great Depression. People thought the worst was over. It clearly wasn't. Whereas in 1987, you actually had fear of a reprise of 1929. A lot of people sold their holdings as we retested the lows several months off the crash. And, lo and behold, the economy stayed in there and the stock market recovered. So the message we would have is you just have to have discipline and understand your risk tolerance. If you cannot envision yourself being a buyer of stocks down 20 to 25%, we used to say that down 10 to 15%, but this is a new volatility environment, then you have too much exposure. But ultimately, our view is you're going to have medicine, whether it's this year or next, and you're going to have an eventual return to earnings. But it requires patience and it requires perseverance.
Well, neither of us are scientists and neither of us are doctors, but I think what we both share, Julian, is a hope, an optimism, a real hope that we do get that science, that improvement in the next 12, 18 months. Julian, fantastic to catch up with you, sir. Send my best to the family. Julian Emmanuel of BTIG weighing in on this market. 9 minutes into this session, equities, the rally continues and big tech continues to dominate. Let's get you the latest with Taylor Riggs.
John, I have to break down some of the earnings. Peloton, one that I'm following, as they reported better than expected revenue, raised their revenue guidance, and finally said that they're going to be adjusted EBITDA positive. Remember, this is a company whose CEO at the IPO and through subsequent quarters said that they were sort of a growth at any cost company. They could be profitable, but they didn't really want to be. They really wanted to reinvest in the company. It looks like COVID-19 has fundamentally changed that income statement. They're now going to be full year adjusted EBITDA gain now of $30 to $40 million versus a loss of about $100 million or so. Lyft as well, jumping 16%. They're posting moderate sales growth despite the virus, but narrowing that loss on the bottom line. Remember that Uber and Lyft had goals to be positive towards the end of the year, and so in response to that, Lyft is going to be promising some aggressive cost cutting as ridership drops. Finally, PayPal and Grubhub are some other ones that we're following. PayPal, of course, seeing an improvement this quarter as more people are doing business online while sheltering in place. Grubhub, there's been a lot of focus on food delivery services given the demand at home. First quarter revenue coming in slightly ahead of estimates, but remember, food delivery service is a cash-intensive and very competitive space. That's what's weighing on the shares this morning, John.
Taylor Riggs, thank you very much. Around about 11 minutes into this session, equities advance up 1.4% on the S&P 500. The Nasdaq up by 1.34% and are raising the losses for the year, for 2020, even after the massive rout and a global pandemic. From New York this morning, up next on this program, Nouriel Roubini on the decade ahead. Prepare for what he's got to say. This is Bloomberg. "13 minutes into the session in New York City. Here's the price action. Equities advanced by 1.5%. Once again, the tech story dominates. The Nasdaq up by a similar amount, driven by the big tech names you are all familiar with. They have been driving the gains big time and driving the recovery. The Nasdaq erasing the losses for 2020. Unbelievable. That's the story in the equity market. Let's talk about the story with trade. What is the future of China's relationship with the United States? What is the future of the trade deal that China and the United States signed just a couple of months back? Take a listen to the President of the United States.
They're buying a lot of farm product, but are they buying to the level that they were supposed to? You know, they were going to buy $50 billion worth. The most they ever did was 15 or 16, and now they're going to 50. Anywhere between 40 and 50 in terms of farm. It's about time. but I'll be able to report in about a week or two.
President Donald Trump on the road ahead. In a week, as soon as a week, according to our reporting here at Bloomberg, we may have a call between Lighthizer and Leo He. Let's catch up with Kevin Cerulli down in Washington, D.C. to get the latest. Those trade talks, Kevin, what have we learned? What's on the agenda?
Well, in terms of trade, agriculture, and of course, just this broader notion of technology, I think that could also come up. But we've seen how the Chinese have penetrated agricultural markets during pre-COVID times, particularly because they recognize that that could politically hurt the president. But this is really, you can't separate the national security concerns from what's going on with trade. Take a listen to what Secretary of State Mike Pompeo said about the tough questions that China has to answer for its handling or mishandling of the pandemic as a whole. Here he is.
It is pretty clear that at the front end of this, the Chinese Communist Party misled the world. That is, they knew more, and they didn't share that. And they had an obligation to do so under the international health regulations that they are required to adhere to under World Health Organization's rule set.
So that's Secretary of State Mike Pompeo. Meanwhile, lawmakers on Capitol Hill in both parties are also asking for some more answers to questions that they feel China has not been transparent on. I can tell you, based upon my own reporting, that you can anticipate hearings in the Senate and in the House as it relates to China, as it relates to the World Health Organization. So there's two competing storylines right now. One is the trade narrative, and the other is the national security concerns. And I think that the latter is going to be dramatically reshaped over the long term. Jonathan?
Kevin, appreciate it. Stay close, won't you? A lot still to come, especially next week on this trade situation. Really pleased to say that joining us on the phone now on trade and the decade ahead for the global economy, Nouriel Roubini joins us of Roubini Macro Associates. Nouriel, always fantastic to catch up with you. We were talking just yesterday about the large numbers we're seeing come through in the labour market, and I'm sitting here wondering just how much worse this will get and how long it will take for things to get better. I know that you're thinking about the next decade ahead. I just want to start by thinking about a psychological question. Why it's so difficult to conceptualize numbers this large. Nouriel, you've studied this field for a long time. How do you answer that question?
Well, in my view, the markets are ignoring these numbers that are really awful because they're still of the view that while we are still in the middle of this severe recession, there'll be a V-shaped recovery starting in the third quarter of this year. Therefore, they're totally dismissive of the fact that right now we're still in a free fall because they expect this V-shaped recovery. And if you look at earnings expectations, being of a year where 170 for S&P 500 earnings per share, they're falling only 20%, and people expect that by Q4 they're going to go back to what they were at the beginning of the year, 170. I think it's totally far-fetched. The economy is going to go through a U-shaped recovery. Earnings are going to fall from 70 to 100. We're lucky if they're going to be back to 140 next year. So these valuations don't make sense because the market is pricing in a V-shaped recovery while the economy, with the deleveraging that's going to occur both in the corporate sector and the household sector, everybody has to save more and do less capex and less investment to repair balance sheets. Saving more means reducing spending, consumption for households, labor costs for the firm sector, and less investment means less capex by the corporate sector and less residential investment by household sector. That's a recipe for a U-shaped recovery. Therefore, I don't know how you get a V. Second argument people make in the market is, well, with zero policy rates and 10-year bond yields at 0.6, you can have much higher P ratios even if the economy is lousy. It's just liquidity. But, liquidity can sustain markets only for a while once they have gravitational forces fundamentals. But even if you look at liquidity, if you look at the, say, 12-month forward earnings yield for S&P 500 firms, right now is only 400 basis points above 10-year treasuries. During the global financial crisis, the number was 600-700. So you're not even compensated given the uncertainties. There's no even guidance about profits and earnings. There's huge uncertainty, and you're supposed to having P ratios of 23 right now. This doesn't make any sense. I think that market is driven just by essentially delusion about the shape of the recovery, by liquidity, and a bit of FOMO. I mean, all these unemployed millennials and folks, what they've been doing for last month, creating new accounts by the millions on online brokers and trying to bet on the market. So there's a bit of FOMO as well, but it's not fundamental.
Well, I'm not sure how many unemployed people have actually been participating in this market, Nouriel, but I take your point about the shape of the recovery. So let's spend a little bit of time talking about that. What is the policy initiative that could come from Washington that would make you more hopeful about the future?
Well, we've had already massive monetary stimulus, massive fiscal stimulus. Most of it, in my view, is priced in. We're going to go and have maybe a fourth round of fiscal stimulus and so on. But I think that, even the policy mix is somehow biased towards Wall Street and not as much towards Main Street, where the people are suffering. They're households, workers, small and medium-sized enterprises. What's Wall Street is large corporations, large banks, and large financial institutions. If you look at, for example, what the Fed has done, a lot of the backstop is backstop of spread instruments that were highly risky, right? High yield, high grade, commercial paper, all the initiatives to backstop large corporations. So again, we have a bailout of Wall Street while the money is going to Main Street is small. And in some sense, the stock market doesn't reflect the real economy. How the firms are going to be surviving and thriving by slashing labor costs. We already have 40 million people have lost their jobs. So their savings rate is going to go up. They're going to improve their balance sheet. They're going to improve their P&L, but they're going to do it at the cost of workers. Already a decade ago, after the global financial crisis, firms stopped hiring people full-time with good jobs, good wages, and good benefits. Because everything is gig workers, part-time workers, hourly workers, contractors, freelancers, you name it. The same thing is going to happen. Massive loss of jobs, and then not much of a recovery. So the S&P 500 can go back even to the levels of earlier this year, but it doesn't mean the economy is doing well. It's at the expense of workers and of millions of small and medium-sized enterprises going to disappear. The big are going to get bigger, and the small are going to be wiped out. That's what's going to happen. So it's not a symptom of the real economy, what's happening to the S&P 500. The real economy is suffering at the expense of, and the stock market is gaining at the expense of the real economy. It's mainstream against Wall Street. And Wall Street right now is winning against Main Street.
Nouriel, that is the problem. And I think you've touched on the heart of it. In the 60 seconds we have left with you, and we'll continue this conversation in the weeks to come, the wealth disparity, the inequality. The years after the financial crisis, we learned this lesson. If you held assets, assets would be stimulated, asset prices would rise, and wealth inequality widened. Why have central banks not learned that lesson? Or have they recognized that, but recognized that is the evil worth paying to get out of a deep economic hole? What is the answer to that very complex question?
Well, the rhetoric was we have to save Wall Street in order to save Main Street, but the reality was there was massive asset inflation. We bailed out the bankers, the traders, and this time around, we're bailing out even high-yield bond funds. We're going deep into the junk bond territory. I mean, pretty much the entire Wall Street, banks, non-banks, asset managers, ETF bond funds have been bailed out across the board. We've never had something like this even during the global financial crisis. So again, Wall Street is going to win at the expense of Main Street. The package of the Fed and of the Treasury don't give enough to workers, households, poor employees, and to small and medium-sized enterprises. So it's going to be, again, Wall Street winning again at the expense of Main Street.
Yeah. Nouriel, it's a conversation that you and I need to continue. We'll look forward to catching up in the weeks to come, and we'll talk about that backlash in society as well. From New York, Nouriel Roubini of Roubini Macro Associates. Next up, your day ahead and a brutal jobs report still to come. This is Bloomberg. 25 minutes into this session, equities positive by 1.6% on the S&P 500. Positive on a day where we had brutal jobs numbers. That's your price action. Tomorrow, we'll get another jobs report. Here's a final word from me. The recovery will not be as simple as just turning the lights back on. Rebuilding takes real effort and humility. It takes unity too. As history has shown time and time again, unfortunately, after a crisis fades, the collective will goes with it. And what we need right now is collective will. For the future, it is much harder to rebuild than it is to destroy. And that's a lesson that you learn as a child. It's something that you endure as an adult as well. And it's a lesson that Washington needs to recognize too. It's true of the labor market. We will need unity. We will need effort. I've been impressed over the last several months about the unity in Washington, D.C. and their ability to do more. And I hope as this economy reopens, we recognize that it won't be easy to rebuild this labor market. It will take effort, humility. It will take unity. From New York, this is Bloomberg.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food, they're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of in life happens. You know, I'm here by myself. So ¿dónde vive acá? En la parte de This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji like you use the most to send to each other?
So there's a bear which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue, and it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry Citi?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname
Pocahontas.
Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
Okay. In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you.
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Order submitted. 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 Order filled. Order submitted. Order submitted. Order filled. Order submitted. Order submitted. Order filled. Order filled. Order submitted. Order submitted. Order submitted. Order submitted. Order filled. Order submitted. Order submitted.
Sadiq Khan, the Mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
Our
message to Donald Trump and his team is that your views of Islam are ignorant.
Order submitted. Order
He's
submitted.
the first Muslim mayor of a major Western capital and proud of it.
Order submitted. Order
This is how
submitted.
Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the Mayor of London.
Order filled.
Khan's parents
Order
emigrated
filled.
from
Order
Pakistan.
submitted.
His father
Order
was a bus
filled.
driver, his
Order
mother a
submitted.
stay-at-home
Order
seamstress.
filled. Order cancelled.
The 10-strong Khan family squeezed into a three-bedroom flat in South London.
Canceled.
He
Order
wanted to be a
submitted.
dentist,
Order
but TV
filled.
in the
Order
1980s
submitted.
convinced him
Order
otherwise.
submitted. Order filled. Order submitted. Order submitted.
LA law with
Order
its swagger and
canceled.
ill-fitting suits
canceled.
caught
Order
Khan's eye.
canceled.
He
Order
graduated
canceled.
in
Order
1991
canceled.
with a degree
Order
in law from
canceled.
North London
Order
University
submitted.
and
Order
joined a
filled.
human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
And there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for Mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate order filled. Order cancelled. Order cancelled.
The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
Order cancelled.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and he was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning, who used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough
Order submitted. Order submitted. Order submitted.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flop.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
When people think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then, this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends.
But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start. From that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way.
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart. He still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it was widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, in his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia
a regional power.
Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
Even though Putin denies any wrongdoing,
U.S. elections.
Yes.
The U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Order submitted. Order filled. Order filled. Order submitted. Order submitted. Order submitted. Order submitted. Order filled. Order filled. Order filled. Order canceled. Order canceled. Order canceled. Order filled. Order filled. Order canceled. Order canceled.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world, yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC came to China, come to us, say, 24 people went for the job. 23 people accepted. I was the only one guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
Order submitted.
I searched the first word of beer.
Submitted. Order submitted. Order submitted.
I don't know why, because it's easy to spell.
Order submitted.
And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages,
Order
a yellow
filled.
pages-like
Order
website,
submitted.
but it didn't take
Order
off.
submitted.
Then Ma joined
Order
a government
filled.
agency in
Order
Beijing to help
submitted.
set up a
Order
website.
submitted. Order filled. Order filled. Order canceled.
By 1999,
Order canceled.
the internet stock boom had gripped Wall Street. And back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强就强它的硬件，强就强它的系统基础，这方面确实比你早。但是玩信息玩软的，中国人的脑袋绝不比你们长。我们在座的所有人的脑袋绝不比你们长。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma's an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker, and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it's served him well.
Peter Thiel is a walking contradiction. He got his bachelor's and Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission
and several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different?
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, Value-Ag, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You have a very special guy.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions and different jobs within the administration.
But it turns out, Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
Two 2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree. Global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The US was primed to play a lead role in climate change, but Trump's Energy Independence Executive Order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the US commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and U.S. states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. Origins of the creative content of a lot of the work at Lightbright comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with an Adobe Illustrator file, and we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I learn so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it, and we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality.
Order canceled.
To me, it is this insight into the inner workings of the universe.
Order canceled.
It's
Order
a way
canceled.
of looking
Order
at
canceled.
what is surrounding
Order
us in the
canceled.
cosmos in a new light.
It's a bit like an addiction. You've got to make something, you have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. spend cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle. And it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured at Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker. So when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect a pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. You've got to practice, you've got to be able to judge material temperatures, you've got to just look at it and you just get a feel for it. It's the stage where your tubes start to look a bit like a bicycle. My father's a jeweller. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes, you can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to a teapot, so we can get that scanned and we can match that, or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components, and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we build bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives. So we just want to make sure they get the right thing.
Order submitted.
I think the bike for me was the first time I had some freedom. So as soon as I had one, I was off. A lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something that just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
If you ever saw a wooden surfboard, it was probably hanging in somebody's house or underneath the deck. But kind of in the last 10 or 15 years, wood has made a big comeback. They surf wonderfully. It's beautiful and it feels great to be on one of them. I always had a love for wood and kind of passionate about things that went in the water. I've kind of been around wooden boats most of my life. There's just so much character. The way they're built, the stories that come with them, a lot of that has translated over to why we build surfboards the way we do. When we first started thinking about building surfboards, wood was the natural material we chose. They have a very high strength to weight ratio. Wooden surfboards have the longest history of use in the surf world than any other material. People have been surfing wooden surfboards since kind of the first documented history of people riding waves. The board starts in CAD, where we take a 3D model, break down the shape, and kind of create frames and templates and all the inner parts of the board that we get cut on a CNC machine. We take those frames and we just pop them out, assemble the frame into kind of a skeleton. We go out to our lumber shed, pick a bunch of cedar, and bring them into our mill shop, put glue along the edges, clamp it all together into a panel. Everything's book matched, you have symmetry in the colors and texture of the wood. Cut your outline. take our assembled frame, gently put it down right on top of the plank. Once that foundation is started, you're basically building up the three-dimensional shape, the outside part of the board, using lots of strips that kind of interlock and fit together. Every piece of wood is going to be different, and it's all going to react differently. There are frustrations with it, but I think that's one of the things that keeps it challenging. You learn to read the kind of what the grain lines are doing and what the color of the wood is telling you. Once those rails are cleaned up, we put our top planks on. It's a little bit like putting a lid on a box. It's like, this is it. Whatever's inside that board is staying inside that board. And by tensioning some rope, you can clamp the two together. It's like a time capsule. What makes our boards unique are they are built right here in York. They're built using material that grows right here in the state of Maine. They're built 100% by hand by local craftspeople and surfers. There's a lot of time that goes into these boards, between 40 and 60 hours, start to finish. We wanted to build surfboards that were as hollow as they could be, but still be strong enough to work well. Too light and they don't surf well, but too heavy and they don't surf well. So there's a balance point there, and that's where we try to be. Taking the board off the rocker table once the top has gone on, that is by far one of my top favorite parts. It's just you and a shaping stand, a board, and a hand plane. Everything else is out of your view. It's simple, it's pleasurable, it's quiet. You can be with your thoughts and you can just kind of be present. There's something about taking a nice sharp edge tool to a beautiful piece of wood and feeling the curls coming off and knowing that every pass that you're making, you're kind of getting it closer and closer to what you have in mind. Once we've shaped it down and the board's looking like it's supposed to look like, it's time for it to go into the glassing room. 4-ounce fiberglass, laying it over the board, draping it over the edges, cutting it, applying epoxy, and on the board. Once both sides are lamb coated, it's time to put in the hardware. Drill and router and install the fin box. And on the other side, we drill and put in the leash plug and a vent. There's a lot of air just naturally inside the board, and that air wants to expand and contract with temperature changes. And that vent has a little piece of Gore-Tex fabric in it, and it allows air to kind of breathe both ways, but it doesn't allow water to get in. Once all that hardware is put in, it goes back into the glassing room. We brush a nice, beautiful, thick coat of epoxy over the whole surface, and that we call a gloss coat. That's supposed to look beautiful and glossy and shiny and flawless. You get to see that board come to life. Whatever the colors in the wood, they really come out. It just makes it look like candy. You just want to touch it and run your hands down it, and it's just kind of the icing on the cake. Once everything is hard, we put it into what we call the oven, get that epoxy to cure, really kind of bake it, and just get it to harden. Put in the fin, screw in the vent, and ship it out. We just love the idea of building something that's sustainable and long-lasting and made by hand. Kind of gives you a deeper connection to the product over something you might buy on a shelf. When a customer gets the board, they feel it. They 100% feel the amount of work and the amount of passion that went into the board. So I'm not really looking at hours and efficiency. We're looking at like doing it right and enjoying it as we go.
Ma Baoli, better known as Gang La, is one of the 4 Grand Marshals leading New York's Pride Parade this year. But in the country he comes from, being gay is still a social taboo. The CEO of a Beijing-based internet company is on a mission to improve the lives of millions of gay men in China.
对于每一个 LGBT 人群来说，即使这个国家不允许你跟同性爱人结婚，但是你仍然要勇敢地去选择你自己的生活，你仍然应该拥有幸福生活的权利。
Ma's company Blue City runs an app and a website specifically for gay men. Blued is one of the biggest gay social networking apps in the world, with an estimated 30 million registered users. Unlike most other apps, Blued is more than just dating or hookups.
大家可以在我们这个软件里面找他自己的情感，然后可以阅读相关的内容，然后可以进行一些娱乐，比如玩游戏啊，比如看直播啊等等。
Back in 2000, when Ma studied at a police school in northern China, he realized he didn't feel like everyone else.
因为他们都找女朋友，然后谈恋爱，但是我对长得好看的同性的男生，我反而觉得对我更有吸引力。所以那个时候我就到互联网上去找这样的一些资料，然后希望能够告诉我自己，我到底是谁。互联网上所有的信息都是负面的，都是错的，就是说同性恋要电击疗法，要被治疗，然后要吃药等等。
After visiting some foreign websites with different attitudes to homosexuality, Ma created his own site for a Chinese audience, encouraging people that
他们也是正常的，他们不用自卑，然后也不用自杀。
Even though attitudes towards homosexuals are slowly changing in China, it's still a social stigma. The virtual world of Blued, where members can be open about their sexuality, is for most a striking contrast to their real lives. This is live streaming, a function added to Blued in late 2015, right as the internet craze was starting to take off in China. Many self-made stars like Jin make decent amounts of money by receiving audiences' virtual currencies and gifts.
我们不是彼此的初恋，初恋这种事儿都不靠谱。
For Kyle and Klaus, a couple who have come out, live streaming on Blued means something different.
其实我经常会收到很多粉丝的一些互动的留言，就是类似就是说你们让我们看到了同志情侣之间的一些希望啊，我看到这样的留言我是很欣慰。
The government's rules for acceptable content online may shift quickly in China, with LGBT material in a grey area. Many companies feel the chill of the recent internet crackdown, but Blue City still runs as usual. Ma has won the Chinese government's trust by helping with HIV prevention among gay men. A third of the company's staff are dedicated to screening pornographic and politically sensitive content.
我不太多的愿意去对抗，我更多的愿意去对话，去改变他们的想法。我觉得这个可能在中国来说是更有效的。
In the past 5 years, Blue City has grown from a team of 7 people to a promising business with about 250 staff. Ma said the company earned over $15 million last year, mainly through advertising and selling virtual currencies to live streaming audiences. Now the company is expanding overseas.
我希望吧，通过我们的努力，布鲁蒂能够成为全球第一家在美国纳斯达克或者是纽交所上市的这样的同质互联网公司。
This is Rich Chiga. He's a Chinese rapper by way of Indonesia, and he's very popular on the internet. This is Joji. He's a Japanese-Australian singer, and he's also very popular on the internet. Plus, Joji invented the Harlem Shake meme. Let me say that again. This guy, Joji, in the blood bathtub, invented the Harlem Shake meme. But we'll come back to that. So Rich and Joji are both signed to 88 Rising, an entertainment company hoping to build a lasting global brand that will outlive singular moments of virality. They primarily create content combining Asian culture and hip-hop, a formula that apparently pleases the internet gods greatly. They've only been around for 18 months, but they're already putting up major label numbers.
I think that we have an unprecedented collective of talent, a group of predominantly Asian artists, really making waves globally, which from an independent point of view as well.
88's founder, Sean Miyashiro, cut his teeth launching Vice's electronic music channel, Thump. But quickly, Sean became interested in life beyond dance music.
I knew that after launching a whole content platform that I have kind of the ability and the know-how to do it again, but for what was the question.
So Sean moved to the Bronx to start over and figure it out. He couldn't afford an office space, so he worked out of his car at the top of a grimy parking garage.
Everything kind of started here. If you look around, this is my environment. This is my serenity, really. 88 Rising was built here. Built on the grounds of LA Fitness, residence in a parking garage. I was living in the Bronx. I'm just like, damn, where the hell do I go? So I just come up here and I just kind of figure things out every single day. Being like, okay, what the hell is this thing? Coming here was kind of like my own kind of private office, basically. To be honest, I would even go to the bathroom here. I would take pisses here, you know what I mean? It was it's just too far to go back down there. When I need Wi-Fi, I'd spend a good part of the day at Dunkin' Donuts. Hi, how are you? Can I get a chicken snack wrap?
Before 88 Rising officially launched, Sean caught a surprise break in the form of a Twitter friendship with a funny 16-year-old kid from Indonesia named Brian, who taught himself English by watching Rubik's Cube tutorial videos on YouTube. Seriously, that's true.
I thought his Twitter was genius, from the future, just crazy, and just the shit that he was saying, the memes he was making. But I didn't know that he rapped or anything like that. I really didn't, and he came up with that stick 2 weeks later.
Dat Stick was Brian's first ever attempt at making a rap song, and it immediately went viral.
Everything was great about it, but the one thing that I noticed is the song was hard as hell. Just everything about it, man. Just it was menacing, bro.
Soon after the video dropped, Brian signed with 88 Rising.
I'll FaceTime with Rich. Sorry for calling you Rich Chiga on my phone, Rich. Brian, he gets super pissed off that he's saved in my phone as Rich Chiga. He's like, dude, am I not a human to you? What's good, bro?
What's good, brother?
How you doing?
Doing great. I just did sound check.
How was it?
It was tight.
So, Brian could definitely rap, but some viewers understandably took offense at a Chinese kid satirizing rap cliches and calling himself Rich Chiga. But if a group of well-known rappers saw the video and genuinely liked it, that could at least help validate Brian as a legit hip-hop artist. Plus, it could be really funny.
It was just kind of an idea that I just had on the spot. Everything that rappers say is better and funnier and smarter and wittier. And it's just more entertaining. We just edit it as tight as possible, put it up, and it really worked.
Yo, this nigga got a pouch on a Reebok pouch.
This is the hardest nigga of all time.
You said when you come for a trigger like me. That was dope.
Like, it's just lit, and I think people will take it as a joke at first, but it's like if he ran with that and kept doing more videos like that, it's just lit.
You know, I'd never been to America before, and like all of a sudden, it's like I see like all the rappers that I listen to just like reacting to my stuff, and I was like, what? How did this happen?
The reaction video also went viral, and even led to a remix of Dat Stick featuring Wu-Tang's Ghostface.
I'll get on that track. You know what I'm saying? Yeah.
Really, on the remix?
Yeah. Oh, you know him?
And yeah, the remix went viral too. Brian has since acknowledged the misstep in his name and claims he may change it. But for the time being, he's still Rich Chiga to his fans. An ever-growing global audience, hungry for more releases from emerging talent around the world.
I didn't know that it was gonna be this impactful and this important to people, and I'm very thankful and blessed that it has. And every day now that I wake up, it's like it's just like a new mission every day.
A major part of that mission involves Joji. Remember the bloody bath guy? He's a former YouTube personality in the middle of a career transition.
The sound of this song, Will He, it's like a trap song that you can like slow dance to. Awkward prom shit, you know what I mean? I used to do crazy episodic internet videos. It was going well, and one day it was me and a few friends just in a room. We were casually chilling, and then someone plays the song, and it's brand new at the time.
Order canceled.
I happened to have a lot of costumes laying around, so I told the other guys, I was like, get in these costumes and let's just dance to it, like who cares? We were like, okay, let's just go crazy at the drop. So that video goes up, I go to sleep, and the next morning, everyone's doing it, like next morning. That taught me a lot about the internet, how people want to just be a part of something. And from that point on, something changed, and I was a little better at understanding demographics and people and what they want to see and what they want to hear. I was friends with a couple other artists who were affiliated with 88, and then I also started to realize that 88 is the bridge between Western and Asian entertainment, and I really wanted to be a part of that.
Joji just released the In Tongues EP, his first project as a serious artist.
Joji's In Tongues record came out a couple weeks ago. It's #2 on Billboard on the R&B charts, which is crazy for, independent release, and he's like a brand new artist.
And the success is even more impressive, knowing he went from creating something like this,
It's just Taco Bell. What could possibly go wrong?
to creating something like this, the newest music video for his song Demons. Tonight, Rich Chiga has a show in New York City. Tickets sold out in an hour.
I came here, I'm first online. I was here at 1. I was the third person online.
So why'd you get here so early?
Because I want to see Rich Chiga. I want to touch him.
What do you guys think of Joji?
Oh my God!
That's my dad, son.
Did you guys cop the new EP or like?
Yeah. I woke up at 6 in the morning just to cop that shit. And then I listened to it, and that shit started making me cry.
This is actually kind of exciting. Every time, this never gets old. Like, you live online and social media, but like, there's nothing like just being with the people.
More often than not, viral success happens by accident. And then after an appearance on Ellen or Jimmy Kimmel, the creator's star power fizzles out. But Idiot Rising has figured out how to turn potential gimmicks into brands with an actual following that keeps coming back for the next thing.
Oh, shit!
So keep an eye out for Idiot's next move. But more than likely, it won't be covered on network television or terrestrial radio. Although, as they've already proven, nowadays that really doesn't matter.
Online retailer Farfetch is betting it can shape the future. This is its concept store, showcasing the latest in retail tech.
How do you capture all of that fantastic information that you gather in store when customers touch and feel products? And we created a concept called the connected rail. And this is using a combination of RFID and ultrasound. The RFID signal recognizes the product, and the ultrasound recognizes the movement. Take the product off, and then you'll start to see your products appear. And essentially, it's like online browsing behavior. Whichever products you touch and pick up in the store are automatically sent to your app. This is effectively what you've created is your in-store wish list. In the middle, you'll see essentially a hologram of the product. What the customer sees, they control the experience on a touch device. What this allows the customer to do is take elements of products and then add their own style to it. Right, so this is the connected mirror. So in this example, I see my products. I select a coat, and that's tried it, and it's slightly too big for me. So what I can do is choose an alternative size and send a request to the sales associate, and they'll bring that size to me in the fitting room mirror. You'll also see that we've got some product recommendations here. Crucially, the sales associate's able to push items into the mirror from their device. If you wanted to, you could simply use the mirror and pay and go. Your items would then be packed and dispatched to you afterwards.
Do you want me to turn you so you're looking outwards? Yes, please. How about there? First time we came out with B, Jade said, "It feels like I've been released from prison." Do you want these, Mrs?
Definitely.
Definitely. Right.
Yeah.
And she could say hello to everybody, people she hadn't seen for months.
It's
Hi, it's
Jade.
Jade.
Oh. So you can talk to Jade through this.
Hi, Katie. She's there. Hi.
Every time anyone's seen her, they want to know why she's there. And it's kind of the opposite of when you're in a wheelchair and people see you and they kind of go, oh, should I look? I don't know what the right protocol is. When there's a tiny robot with its bright little eyes going around just looking happy everywhere, it really opens you up for conversation.
You've got some friends here, look.
Hiya! When I saw her for the first time, I remember thinking, this is going to change things. This is one of those points where if this was a book, this would be the cliffhanger. have a condition called Ehlers-Danlos syndrome, which means that I have a lot of dislocations, there's a lot of pain, and a lot of seizures and whatnot. So I can end up on my own in my room for long periods of time. A lot of the time with a condition like my own, of course there's the pain, and the pain is bad, and the dislocations are bad, and the seizures and being in paralysis and never knowing whether you're going to be able to wake up properly tomorrow, that's bad. But what's worse still is being able to count the number of people you see a day on one hand. Are you ready? Sure am, I'm just hoping the connection's going to stay.
Yeah, me too. Alright, here we go.
When you're used to just the same little metre by metre and a half window every day, and you've been there for months, being able to just see the sky from somewhere else, or the tops of trees, or a sign, is incredible. Or being able to have that kind of chat in the car that most people would probably take for granted.
I'm going to go past Grandma and Grandad so you can give them a wave. Now, if Jade is particularly seizure-y, she can still take part. And that's brilliant, really, because before she would just be left in a bed or in a house with just her carers. It's quite a small world, that.
Right, so there's one of her. Here, this costume I'm busy making at the moment. When I'm not on bed rest and I'm not just wearing pyjamas all the time, I enjoy being able to dress as different characters and go to Comic Cons and that kind of thing, because it just lets me show a different side of myself, and it's a bit of fun. If you can't go out that often, you've got to enjoy it when you do. Was that? Good. It's one of those weird things where I want to not have to use B because I want to be well enough to be able to go to those places myself. Like, it really makes a big difference to me to be able to go into school. But the thing is, with my condition fluctuating all of the time, I can't go into school reliably. He's written it out bigger on the board, thank you. Today's the first day that I've been in school via B, and so far it's interesting. There's still a few little things that we need to work out, but for the most part I think it's going fairly well. And it's brilliant because I can really tell the difference between today and yesterday. How yesterday I forced myself to go into school when I wasn't very well, and I was really tired afterwards and ended up having loads of seizures, whereas today I've been able to do all of the work, I've been able to keep a clear head and not be ill, which means I'm able to be more focused on my schoolwork.
So there is my first step of working, is to simplify Route 8. The algebra test is next week.
Now I'm trying to make friendships which I'll be able to maintain with B. Before that, I end up letting people down quite often. B gives me hope, yeah. She's just always there. And if I can't do something, she can. And if I need sort of assistance to be able to make commitments, then she's there, and she means that I feel like a more valuable person because I'm more reliable.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
The cubicle represents a tyranny. It confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Good, thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with two hands and rotate the thing. I can stretch it. I can throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Mayron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic wild. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So, why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now...
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
This is Hatsune Miku, Japan's sensational virtual pop star. She's released over 100,000 songs in multiple languages and performed sold-out concerts around the world. Her image has appeared in games, on TV, in car races, and is even etched on the side of a Japanese space rocket.
I came from Hatsune Miku, Carlos.
She's Lady Gaga's favorite digital pop star and opened shows for her in the US 3 years ago. Tens of thousands of fans attended her exhibition and live shows near Tokyo recently.
理想のアイドルっていうと、どの曲でもミクはすごい綺麗に歌ってくれる。
他没有缺点啊，没有任何让我们感到不开心的一些新闻。
She's everything to everybody. That's probably why she's so popular.
Miku's creator Hiroyuki Ito and his Sapporo-based company have been developing the virtual diva for over 10 years.
初音ミクとは、キャラクターとしてすごく、YouTube とかで検索すると、たくさんの初音ミクが出てくるんですけども、元々の、初音ミクのその原点は歌声を合成する、ソフトウェアなんです。
Both the software and character are named Hatsune Miku, meaning the first sound of the future. Originally based on Yamaha's Vocaloid technology, Miku the software has a sound bank containing voice samples and a huge array of tools. You input the melody and lyrics, then Miku the character sings them. To date, Krypton has sold 120,000 software licenses at $200 each to fans around the world who use it to create numerous songs and share them online. Some of the fan-created songs are chosen to be part of Miku's concerts, for which they're paid a royalty fee.
もともと初音ミクっていうその、存在自体がそのボトムアップって言いますか、中にはアマチュアクリエイターじゃなくて今もうすでに、プロになって活躍している方もいらっしゃるんですけども。
The company also has other revenue streams. It makes money from merchandising, licensing deals, and concert ticket sales. According to the real-life musicians who perform with Hatsune Miku, the virtual pop star is interesting and surprising.
今年で3年ぐらい、ちょうど3年ぐらいやってきて、ライブも数十本、数百本やった。そういうことが演奏によって起こせるためのそういう器みたいな感じになってきて。初音ミクらしさって僕はあんまりない。初音ミクって何だってあり。
For Ito, Miku has the potential to change the way we think about music.
そういう新しいそのテクノロジーによって新しい音楽のあり方っていうものを模索していきたいと思っていました。
And for her fans, it goes even further.
初音ミクって魂がないので、だからみんな魂を作り上げるために存在する。
Now, there are a lot of fitness gadgets out there. In my quest to get fit, I tested 17 of them over the last few months.
Order submitted.
At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the Bowflex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in Zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, and my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the Move HR Burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer, but humans, they're expensive. For the rest of us, this $60 gadget is all you need.
what does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hack emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped at the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
I'm about to expose everything you won't admit. And action! This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh, But to fans all over the world, she's the YouTube star Superwoman.
What up, everyone? It's your girl, Superwoman. I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada, was like, Canada, is your daughter making videos? And my mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're gonna go to school and then graduate and then get married and then get a job and then have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010 and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, where the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe this should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She started a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
order filled, order filled, order filled, order canceled, order canceled, order canceled.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope, and so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals, there's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was in his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did, and should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left the Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level what we're trying to, we only hire superstars, and we're looking for those superstars.
Order submitted. 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 Order filled. Order submitted. Order submitted. Order filled. Order submitted. Order submitted.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. and their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Order filled. Order filled. Order filled. Order filled. Order filled. Order filled. Order canceled. Order canceled. Order canceled. Order filled. Order filled. Order filled. Order canceled. Order canceled. Order canceled. Order canceled. Order canceled. Order canceled.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now, so we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere.
at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well,
peanuts by the standards of...
Profits would help. So at some point, we absolutely have to become profitable, and that's part of the plan.
But do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire. And I think as a company, we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
But some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, you know, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in
means to a layman like me? Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
listen, I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week he said that Uber should focus on repairing its market share in the US and on key European markets rather than going going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you
a
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for
everyone.
everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward, and 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy, and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question: do you think that you have solved that part of the culture? But secondly, do you think that is this time this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers, the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous, because they have followership within the company, because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem, because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else, because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and you know, it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company. And to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in the space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So, because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Live from New York and live from New Jersey, streaming on YouTube. It is Thursday, May 7th, 2020. Carol Masser along with Jason Kelly. And once again, Jason, the divergence between Main Street and Wall Street front and center. Stocks are up the most in a week. You got the Nasdaq. You pointed this out on our planning team, or planning call earlier. It's positive for the year, but we've got some really miserable data again.
Yeah, completely miserable data. So many people out of work. And if you were to just sort of bubble yourself and look at the WEI screen on the Bloomberg, you would think, okay, cool, but great. Tech stocks on the rise, and generally market sentiment pretty good, even amidst all that we know about earnings right now, with companies essentially saying, we don't know what's going to happen next.
Right. And we have millions and millions out of work. And we know Nancy Pelosi addressed that in an interview with David Weston. We're going to hear from her a little bit later on. Let's get you going, though, on this Thursday with a check on that trading day. Here is Charlie Pellet.
Hi, thank you very much. Happy Thursday to you both. Let's begin with the year-to-date column on Nasdaq. As you guys mentioned, so far this year, Nasdaq up now by 0.3%. The number of new claimants for unemployment benefits surging by about 3.2 million, though a bad number was expected by investors. The market taking it in stride. Of course, we'll have more on the jobless data coming up right here on Bloomberg Business Week. Your equity numbers green on the screen, close to session highs. S&P up 43, up by 1.5%. Nasdaq up 141, up 1.6%, and the Dow Jones Industrial Average up 324, up by 1.4%. Also optimism about trade helping give U.S. markets a lift. The 10-year up 21/32, the yield now 0.64%. Gold up 2.1%, 17.20 the ounce, and West Texas Intermediate crude up 1.3%, 24.31 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thanks a lot. We'll be checking in with you throughout the afternoon, keeping an eye on that trade, and always headlines breaking after the close as well. We count on Charlie Pellet to bring all of it to us and to you. Carol, as you mentioned, Nancy Pelosi, the Speaker of the House, she spoke with David Weston earlier. We're going to hear a part of that interview today. Crucial timing there as the House and the Senate try to get together, figure out what happens next.
Right, as certainly a lot of Americans and certainly small business continue to struggle in this environment. Teva stock, got to talk about it. It's rallying following its earnings. We've got the CEO in a lengthy and in-depth conversation. That's coming up in just a few minutes. And then we've got the 2019 Nobel laureate economist. He's the subject of a story in the magazine this week. Peter Coy, our economics editor, he says, Jason, you got to pay attention to him.
And I believe everything Peter Coy says because he's super smart. He's our economics editor at Business Week. They're both going to join us, and we're looking forward to that conversation in our 5 o'clock hour. And a little bit before that, we're going to hear from Uber. We heard from Lyft yesterday. Obviously, these are two different companies, but they're in generally the same space. Uber have been cutting jobs. We're going to see what their outlook is and whether, as Dan Morgan predicted with us yesterday, whether Uber Eats may be the thing that helps them cushion this a little bit.
And I'm just going to put out there, Lyft is up 25% in today's session, so we'll see whether Uber, follows suit. All right, we should set the Bloomberg Business Week agenda, and with us to do that is Mike McKee, international economics and policy correspondent, Bloomberg News on the phone in New York. Dave Wilson, stocks editor at Bloomberg News, on the remote access line from New Jersey. And I know, Mike, you spoke with San Francisco Fed President Mary Daly. We want to get to that in just a moment. Dave, just quickly set the stage in terms of today's rally.
Well, I mean, you're looking at some pretty broad-based gains, no question, at this point. You got so the more economically sensitive areas of the market leading the way, which certainly jumps out in light of the backdrop in terms of data in the latest surge in weekly jobless claims. Oil prices resuming a rally that was interrupted yesterday. The energy shares are leading the way. Raw material producers keeping up. You see financial companies and, of course, industrial companies and the old reliable technology. Put it all together, and all 11 of the main industry groups are in the S&P 500 or higher, but those areas are really leading the way here.
All right, Mike McKee, that's the Wall Street view. Main Street got a dose, or gave us a dose of realism this morning, and I do wonder how that figures in to the conversation and what you heard from Mary Daly this morning.
Well, we got another dismal jobless claims report, 3.1 million, which sounds like a major improvement over what we've seen the last couple of weeks. But until about 4 or 5 weeks ago, we'd never seen anything close to that. So it's still a terrible number. A lot of this may be catch-up. States that hadn't been able to process applications are now trying to work their way through the backlog. And if that's the case, we might see another couple of weeks like this. But it tells us we've got 33 million people who lost their jobs at some point during the month of April, which sets us up for a really terrible jobs report tomorrow. The question is, how much attention do you pay for this? Obviously, Wall Street not paying much attention because it's so bad. You kind of look to when is it going to get better, and that's what we talked with Mary Daly about. Her view was that it is going to be bad news most of the rest of the year. This may be the worst, but we're not going to see real expansion until we get to 2021. And as she put it to me, nobody that she is talking to in her district, no business leaders, are seeing a V-shaped recovery.
So wait, is she talking depression or just protracted recession? Not that that's any better, but depression, certainly terrifies everybody, Mike.
I think at this point she'd probably classify it as a protracted recession. The very idea that depression scares people is something the Fed wouldn't want to be talking about. But yesterday, Jim Bullard said that if we don't start to see some growth, it could turn into a depression if we had a backslide, if maybe we reopen too fast and we had a second round of the virus, or if the economy doesn't lift off.
So, Dave, square this for us if you can, and maybe you can't, maybe no one can, with what we're seeing on the equity trade.
Right, especially since we know equity investors tend to look forward, but man, Dave, are they looking way too forward, and maybe it's misguided?
Well, I mean, we'll only know over the next several months. There's no doubt that people are figuring that things get better from here. I mean, you start to see signs that some companies are opening up at least pieces of their business, so that's giving people some encouragement. And then beyond that, I mean, you got the forecasts out there that, even though S&P 500 earnings are going to be down, each quarter of the rest of the year, the declines get smaller in the second half, and by the time you get to 2021, you've got growth again. Now, there's a lot that has to kind of come through for companies to be able to deliver on those projections. Nonetheless, for the moment at least, people are focusing on sort of on the optimistic side. Now, whether they're proven right over time, well, if you know how the virus is going to play out, maybe you can come to some kind of a conclusion on that.
Yeah, which nobody does. Mike McKee, big jobs day tomorrow. Remind us what we will hear, how this works compared to what we know so far, either based on the ADP data or on these jobless claims. What will we hear tomorrow that may put a little more meat on the bone for the economic picture here?
Well, it's going to be a little bit confusing, Jason. We're going to see a lot of job losses. The consensus is for a little more than 21 million and an unemployment rate of over 16%. But because of statistical anomalies, it won't match the number that we got in jobless claims, because the jobless claims have been constant throughout, and the jobs survey is the week of April 12th.
Right.
So the last half of April is not going to be captured in this. And then there are questions about how the Labor Department classifies people who have been laid off but think they're going back to work. If you were laid off right now, would you go look for work? No, because nobody's hiring. Obviously, they can't. And so if you're not looking for work, generally you're counted as out of the labor force. But in this case, they may make an exception and count people as in the labor force, which means that the unemployment rate might be lower than the actual number would be if you were counting everyone.
Well, definitely stats for the history books, no doubt about that. Mike McKee, thank you so much. International economics and policy correspondent at Bloomberg News. Check out on the Bloomberg his interview with Mary Daly of the San Francisco Fed. Dave Wilson's going to be back a little bit later on.
And we should point out tomorrow on our show, we're going to have Chris Liu.
Yeah.
He worked in the Department of Labor. He's actually worked across all aspects of the government. He's our go-to guy in helping understand what some of these numbers may mean, because as Mike McKee just said, it's going to be a little bit tricky.
Everything in our world right now is tricky and complicated.
That's true.
All right, let's get a check on your top world and national news headlines. For that, let's turn things over to Bob Moon. Hi, Bob.
Hi, Carol. House Speaker Nancy Pelosi is making it clear she will not support President Trump's recent call for a payroll tax cut and changes in the capital gains tax, saying that wouldn't help the millions of workers thrown out of their jobs and others struggling in an economy shut down by the pandemic. Speaking to Bloomberg's David Weston on balance of power, Pelosi also said the House could vote next week on its version of a new coronavirus rescue bill, which will not plow any new territory but will dig deeper in terms of addressing the country's needs. Among other things, she says, it takes on the future of voting.
We have money in there for voting, for a vote by mail, which we think is a health imperative now, even though Democrats and Republicans support vote by mail. But right now, it is an imperative.
Elsewhere on Capitol Hill, the Senate Health Committee called in officials of the National Institutes of Health to press for stepped-up development of tests for coronavirus infection and immunity. Bloomberg's Irv Chapman has that story.
Chairman Lamar Alexander said the effort to ramp up testing has been impressive, but is not nearly enough.
Testing is necessary first to identify the small number of us who have the disease or who have been exposed to it, so we don't have to quarantine the whole country. that will help us gain confidence, go back to work and back to school.
Ranking Democrat Patty Murray said the problem is not lack of innovation, but lack of leadership from the White House. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, on air and on Quick Take by Bloomberg. I'm Bob Moon.
So, Carol, here's an interesting question. How do you balance public safety when it comes to health versus public safety when it comes to crime? How do you balance privacy? How do you essentially get a society back up and working and moving around in an era where we still have to be vigilant around all sorts of things, not just our own health?
I got to tell you, this troubles me. And, you know, we've seen it happen in China, specifically in terms of a lot of monitoring, people going in and out of transportation systems. Well, France, and specifically the Paris Metro Authority, they're testing CCTV software. If you watch any kind of crime shows, especially those based over in Europe, they constantly are talking about CCTV and surveillance. Sorry, my husband's really into it, so we watch a lot of it. So anyway, you're constantly, that's how they get film and footage on criminals and so on and so forth. Well, anyway.
Listen, I've binge-watched Homeland. I get it.
So the Paris Metro Authority, they have begun a 3-month test of its software. It's from a French tech company. It's called Data Collab? I guess so. Collab. So anyway, and they're testing it at one of their stations in the heart of Paris. And so those who monitor the system, they're going to have access to a dashboard with the proportion of riders believed to be wearing masks. They're going to be able to actually watch everything, right? Essentially what's going on.
Well, and they're also going to be able to tell who's wearing a mask, who's not. I mean, there are all these questions that are going to come up around the government's role in protecting society, but at what cost? At what cost? I mean, these are the same things that we faced after 9/11, right? Like, what are we willing to give up?
Well, how much of our identity do we give up, right? If they're monitoring, is it tied to our identity, and then that's analyzed and thought about or passed on to other authorities? Like, what's the line where it stops?
And are they synthesizing that with health data that they already have? And what are we giving up on that end? What are we giving up to the government? What are we giving up to our employers? These are big questions. And by the way, different countries, different societies are going to deal with them differently.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks rallied the most in a week. Nasdaq erases its loss for the year. S&P up today by 43 points, up by 1.5%. We've got the Dow up 324 points, up 1.4%. Nasdaq up 140 points, up 1.6%. In the year-to-date column, Nasdaq now up by 0.3%. 10-year up 20-30 seconds at yield 0.63%. Gold up 2% now at $17.20 the ounce. West Texas Intermediate crude bouncing all over the place, up now by 1.8%. Have been negative last hour. Right now up 45 cents a barrel, 24.43. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week on this Thursday. Well, shares of the generic pharmaceutical maker Teva, they are rallying big time. This after the company maintained its profit projections for the year as quarterly sales of drugs, including respiratory products, rose during the COVID-19 pandemic. Let's get into the quarter and the outlook and talk about the virus impact on the pharmaceutical industry. Cor Schultz is president and CEO at Teva Pharmaceutical, joining us on the phone from Amsterdam. Cor, so nice to have you here with Jason and myself. Tell us a little bit about the quarter, what drove earnings, and what the outlook looks like. We're really curious about visibility for all kinds of companies right now.
Yeah, very nice to be with you. So we had a first quarter where we were, of course, very focused on the challenges from COVID-19. So we're quite proud that we managed to keep our extensive manufacturing operation fully operational. All our facilities are open. We managed to keep them very safe for our employees. And by keeping them operational, we were able to serve the 200 million patients we serve every day. We are the largest volume manufacturer of pharmaceuticals in the world. We are the largest supplier of medicines for the U.S. So it's of key importance that we stay operational. And we're very happy we were able to do that. So by doing so, we managed to maintain our normal business. And we are, as you know, in you could say, getting out of a turnaround mode where we had to cut costs dramatically and where we had to also prune our portfolios. But now we've turned the corner and we're starting to see growth in our underlying business. We did also see some extra demand for generics and OTC products, not so much in the U.S., but more in Europe in the first quarter.
And so, Cor, given the size and scope that you just laid out of your global operations, I do wonder where, if any place, have you seen or do you expect to see any supply chain disruptions? Because every company, it feels like, is at least facing the threat of that. I wonder what's happened with you guys.
Yeah, so we have a very wide network of manufacturing. We have a lot of manufacturing in the U.S. We have a lot of manufacturing in Europe. So we did see a lot of challenges, of course. And I'll just mention a few of them. One is, creating a healthy work environment where essential people who do critical things like manufacturing, where they can still come to work and feel safe, and you avoid having any outbreaks of disease in your factories and so on. We managed to do that to keep it very safe. But you also have the problems of absenteeism when people cannot have their kids in school and transportation shuts down. How do you ensure you get your people to work? So we managed to overcome that. Then we have a lot of worries about supplies, API supplies, from China, from India, and so on. We managed to overcome that. We had lots of challenges on logistics. When all passenger jets stopped, then what you don't realize is there's a lot of air cargo in these planes, and there's a lot of pharmaceutical products that are being flown around the world to, keep the supply chain going. And that stopped from like one day to another, really, with all the airlines stopping to move products. So we had to change our logistics there. So I would say really, really many challenges. Also governments closing borders, making export restrictions and so on. But I would say throughout working with all the different governments, throughout the strong dedication of our people in all the factories and in supply chain, we managed to keep it rolling, and we are very proud about that.
How many of those changes that you had to make do you think are permanent when it comes to the supply chain, and are they more expensive? How do you quantify this going forward?
Yeah, so you could say on the manufacturing operations in each factory, there's, of course, some cost elements, but they're not dramatic. I would say, more precautions with how you sanitize and how you clean and how you operate and so on. So those precautions you can actually keep in place if you want to, even if COVID-19 goes away. The transportation cost has gone up temporarily. I think once we get some more airplanes in the air again, they will probably normalize again. And of course, we've also been moving things to sea transportation instead of airplanes to the extent it was possible. So I think that there will be some changes. There will also be changes in how we do promotional activities. We're doing a lot more e-detailing now, where our experts talk to doctors and healthcare professionals using the same kind of media as internet-based communication and so on. So there will be some changes in the industry, and there will also be potentially some political decisions to be made by governments.
You understand the pharmaceutical industry and obviously play big time in the generic world, but I do wonder when you hear some of the conversations about the creation of a vaccine, by the end of this year. We've talked to a lot in the medical community and then not only creating it, but then ramping it up so that the billions of people around the world can tap into it, which many say you've got to have a vaccine in order for global economies to really get back to normal. How do you see it? What do you see as the realistic view on all of this?
So first, I want to say that I'm not a scientist. I'm a business person by education, an economist by education. But of course, I've been in the industry 30 years. And Teva is not a vaccine company. We are not really manufacturing vaccines or developing vaccines. But I would say one thing I've learned in pharmaceuticals is that clinical data and the quality of clinical data is paramount, and patient safety is paramount. So it's very difficult to develop a new drug or a new vaccine extraordinarily fast without compromising the quality or the safety of the drug or the vaccine. So I'm optimistic it can be done, but I'm not optimistic about these very short timelines you hear about, because I don't think it's really realistic, given that you have to live up to patient safety and quality requirements.
So, Cor, hydroxychloroquine, we've all learned to say it here in the journalist world a little bit because we've heard the President of the United States talk about it. It's something that I believe you've been donating to U.S. hospitals. Are you going to continue to ramp up that supply and make those donations, despite the fact that there's some risk around that? Help us understand that side of the story.
Yeah, you could say, as I said, I'm not a real scientist
Sure.
in the sense that I'm managing Teva Pharmaceuticals, but of course I know a lot about this story. I think I basically read the same things that you might have read, because we don't have any insight into the potential effects on hydroxychloroquine on COVID-19. We haven't done any trials, and it's quite clear, of course, that at the present time we don't have any definitive answers as to whether it works or not. We have only been responding to demands coming from various governments, and we had the possibility to respond very fast because we've been producing this product for many, many years. It's being used by patients to treat lupus in the United States, and therefore we had an inventory of the product. And when we had the request, we, of course, responded positively. But you could say we are not taking the clinical decisions about whether to use the product or not.
Well, Cor, how much has demand ramped up for it? As you said, the normal flows in terms of demand for hydroxychloroquine. See, I'm still learning how to pronounce it. They need to come up with a little abbreviation. But the normal demand. How much did it ramp up the demand as we move through this crisis?
So it's difficult to say, because actually what happened was that we made a major donation to United States government. Mm-hmm. Some of that went to different states. Mm-hmm. Other companies also made donations. So that kind of probably covered the demand for several months, if you do a normal calculation on the population that you might treat. So therefore, it's really difficult for me to assess, because I have no insight into what level these products have been actually used. We have shipped them, of course, but whether they have been used in hospitals around the country or not, I simply don't know.
So your demand that coming out of you, beyond sending it to other facilities, nothing has changed? You haven't seen incredible demand from some of your global sources?
No, we've not seen. I mean, we saw a demand for donations, which we met immediately in the U.S. because we wanted to respond the best we could. And I know that other companies did the same. There's like 10 or 12 companies worldwide that makes hydroxychloroquine, so we're not the only ones. So my guess is that the initial donations will have covered whatever demand would be there for the first couple of months.
And so when you think about sort of beyond this disease, which obviously all of us are talking about all the time, what are the ripple effects across the rest of your business when it comes to demand? I mean, we're talking to hospitals all the time about, elective surgeries being postponed, about people being afraid to go into hospitals. I wonder how that plays into your business in terms of demand.
Yeah, you say short term, it doesn't really has not affected us. But of course, if we look longer term, then I can just give you some examples because we do more than 20,000 different products. So of course, we have many. But let me give you two examples. One example where we see, I think, sustainable higher demand. That's in respiratory diseases, and that's for a simple reason that normally hospitals, when people came in with a respiratory disease, depending on which one it was, they would use a nebulizer and give them whatever drug they needed. But these days, due to the risk of passing on disease by sharing nebulizers and having the whole challenge of using common equipment, it's been the common standard that you use these personal inhalers, the small devices that people normally carry around. So the hospital demand has switched onto that. Now that is probably a permanent situation. I also think that due to the fact that this is very much a respiratory disease, we will see people have better adherence to their therapy if they suffer from asthma and so on. So there you could say there you have a situation with probably a long-term higher demand. Then you have an area such as oncology, and it's quite clear that the visits to oncology departments in hospitals, the visits to oncology centers clinics has been dropping as a consequence of the lockdown.
Right.
Now, people don't get less cancer because we have this lockdown. So hopefully, once things normalize, the people who need therapy will get back into treatment. But there we're seeing, I think now, a moderation on the demand for oncology products. So that's just an example of two areas where you see some changes. Hopefully when we get out of the lockdown situation, people will get back in there and people who have cancer will get treated to the same level that they were treated before, because that's, of course, the best thing for the patients.
Yeah, absolutely. I was just listening to a podcast this morning just about, individuals who are just afraid to go to the hospitals right now for non-COVID related illnesses because they're concerned about getting the virus. One thing I have to ask you, Court, and your stock is soaring. It's up this year, but it has seen overhang and pressure certainly in 2019 and the year before, concerns about the potential legal settlement regarding your company's role in the U.S. opioid epidemic. And I am curious, I know a settlement has been talked about, but it's not been finalized. What are your expectations, and how has the crisis impacted your expectations around timing and sizing of the opioid litigation fines, if at all?
Yeah, very good question. So you're absolutely right. We had a framework agreement with the AGs last year, at the end of last year. We've been working on finalizing that. We've been making good progress on the practicalities. We're going to donate a lot of product that will be helpful for people to wean them off the products that they're misusing. But we've seen a slowdown in the process, not due to any negative attitude from anybody, but I think due to the fact that when you have these kind of framework settlements and you need to get over the finishing line, so to speak, with the final wording and the final details, it's good to have something that puts pressure on both sides, because otherwise, the lawyers can keep on going. That's the way lawyers normally work. So you need something to say, okay, now's the time to get it done. We were expecting that the first state trial in New York would be that event, but that trial has been postponed due to COVID-19, and a new trial date has not been set. So I'm still optimistic that we will see a firm settlement. I think it should be done before that new trial date that we don't know right now. I think that the COVID-19 situation probably have taught people that in order to help solve major health problems, such as the misuse of opium substances or fentanyl and all the other substances that are being misused in the U.S., in order to solve a problem like that, you need to collaborate and take action and do something. And that's what the whole settlement's about. And it's better for society to come together and do something to help the American public rather than have, hundreds of trials over the next 10 years where somebody gets some money. That's
right,
not
and
going to help the people.
Yeah, and get it out to those who need it. The settlement, it's still $250 million in cash, $23 billion worth of drugs used to treat addiction. Is that what you expect will ultimately be agreed to, or do you see something different at this point?
No, that's what we're expecting. That's the framework that we entered into, and that's what we've been working hard to figure out all the logistical details with the AGs and figuring out how would we exactly do it, when would we start, how would it be executed, because it's over a 10-year period, of course, that we will be supplying the product, and we're making good progress there, but of course we still need to get the final settlement done, and we also, as you know, this is a situation where we, together with 3 big distributors and Johnson & Johnson, had this negotiation with the AGs, so it's also all 5 of us who sort of have to come together and agree with the AGs.
So, Cor, final question for you. You know, so many things feel like they're going to change. We talked about some of the things that are changing in your business. When you visited us in your studio just a few months ago, it seems like forever ago.
Yeah, that's true.
We talked a little bit about drug pricing, and I do wonder, you know, amid all of this, amid all the discussion about healthcare and pharmaceuticals and vaccines and serologicals and therapeutics, does pricing change going forward, especially when it comes to the generic landscape?
It's a very good question, and it's an open question, because you could say there is one element that could stabilize the pricing, and that is if you could say the consideration for stable supply to patients, the consideration for having security of supply, if that starts to play a higher role, so that it's just not the rock bottom price that's the most important, then that would lead to, you know, more commitments on supplies, which would be wonderful for us because we have the world's biggest supply network. But it would of course come at a slightly higher price. Generics are very, very cheap, as you know. This is not where you really have any pricing problems in the U.S. So there is a chance that the buyers will value stability of supply higher and quality of supply higher, and that could lead to a stabilization. I don't really think that you will see prices go up dramatically and nothing like that, but it could lead to a stabilization. If you keep on going for the cheapest product you can get out of China or India, then of course you will see prices still going down, but then you will also see the buyers running a bigger risk on behalf of the patients.
All right, we're going to leave it on that note. Hey, Cor, thank you so much. Appreciate this chunk of time that you've given us. Cor Schultz, he is President and CEO at Teva Pharmaceutical, joining us on the phone from Amsterdam. As we mentioned, they did come out with their latest quarterly update, and the stock is soaring in today's trading session.
I find him to be pretty thoughtful and candid when it comes to that business, which is not something that I think we can always say about CEOs, and especially this is a tough business. I mean, and they are in the thick of it too.
Well, and they're an important and an interesting part, right? They're not the R&D guys, they're the generic guys, which is a certainly important part of the drug chain. So, yeah, great to check in with him. Hey, let's check in, though, on your top business stories right now. Let's head on over to Charlie Pellet.
All right, I thank you very much. And a developing story out of Washington, the Justice Department says it is dropping the criminal case against President Trump's first national security advisor, Michael Flynn, abandoning a prosecution that became a rallying cry for Trump and his supporters in attacking the FBI's Russia investigation. The move, a stunning reversal for one of the signature cases brought by Special Counsel Robert Mueller. We're looking at an update here well off our session highs, but the Dow, the S&P, and Nasdaq all continue to advance today, despite the first-time jobless claims news today. S&P up now by 37 points, a gain of 1.3%. The Dow up 268 points, up 1.1%. Nasdaq up 128, now higher by 1.5%. Worth mentioning that Nasdaq is still in the green in the year-to-date column on the Bloomberg, up now by 0.1% for all of 2020, wiping out earlier losses. 10-year up 21.30 seconds, 0.63%. Gold up 1.7%, 17.15 the ounce, and crude now dropping 3.1%, down 72 cents a barrel, 23.26 right now on WTI. So a volatile day for crude. Again, recapping here, S&P up 38, up 1.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Jason Kelly on this Thursday. And just looking through some of the stories, it's interesting. We're all trying to figure our way through. And I was looking at this story about United Airlines and weak demand for their $2.25 billion junk bond offering. I do wonder what the airline industry is going to be like on the other side of this. We already know that when they come back, Jason, you and I are both fascinated by it, maybe because we like to travel, but they're an interesting business, right? High costs in terms of the equipment they have to deal with. They're obviously always tracking what's going on with fuel costs, but this is an industry that is going to come back to much weaker demand and a whole different business equation, with a business equation that after struggling for many years, they kind of figured it out in terms of capacity, learning to charge us for every kind of extra thing, and became profitable. But it's going to be different.
Yes. I mean,
what?
They became profitable and not without some help along the way, whether it is bankruptcy, reorganization, and all of that. You're like, it's fine.
Well, because I think it's given, right? They have gone through cycles of everybody creating an airline, and then it filters out, right? And only the stronger players. And we've seen tons of consolidation. But I mean, I do think, how many times have we had conversations about we get on a plane? I remember getting on a plane going cross country, and it would be largely empty. Yeah. That I don't see anymore. So I think they got rid of the excess capacity. We all got used to being charged for different seats. We wanted a little bit more room. We wanted a bag of peanuts.
Well, and what I don't know, and I mean, the demand and supply, and certainly the demand is one question. I think the other thing is, what is it going to look like? What's it going to look like in the airports? Christina Casotas, the CEO of Pittsburgh Airport, she's become one of our go-tos. We spoke with her yesterday, and she is in the business of understanding this, and I thought she was fairly muted in her expectations. And this comes down to, in the same way that we talked about sports with Paul Rabel and others, it all comes down to pre-vaccine and post-vaccine in many ways. And I just think the airline industry is going to struggle until people really feel safe about their health.
Well, on this weak demand for the United bond offering, it just shows that investors have their limits. We're not just going to fund anything and at any price. So, interesting story. All right, you're listening to Bloomberg Business Week. Let's get a check on world and national news headlines. Over to Bob Moon we go. Hey, Bob.
Hi, Carol. In a stunning reversal, the Justice Department is dropping the criminal case against President Trump's first national security advisor, Michael Flynn, according to a report from the Associated Press. That case was first brought by special counsel Robert Mueller. The country can't solve its economic crisis before it takes care of its health crisis. That assertion today from House Speaker Nancy Pelosi, who continues to call for better coronavirus testing capability. She tells us what that will be. It's an important part, she says, of the new coronavirus rescue bill, which she says the House could vote on next week.
The key to opening up, to unlocking the lockdown, is testing, 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 tracing, 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 treatment, treatment, treatment. We have to do that. Science requires it. Everyone agrees that we have to. It's a health issue that is going to solve the financial issue as well.
The House Speaker talked to Bloomberg's David Weston on Balance of Power, heard daily from noon to 2 p.m. Wall Street time on Bloomberg Radio. And again, a little more of the story that we have been reporting this hour, the Justice Department dropping the case against the president's former national security advisor, Michael Flynn. That move, a stunning reversal for one of the signature cases brought by the special counsel, Robert Mueller. It comes even though prosecutors for the last 3 years had maintained that Flynn had lied to the FBI about his conversations with the Russian ambassador in a 2017 interview. Flynn himself admitted as much and became a key cooperator for Mueller. Global News 24 hours a day. I'm Bob Moon.
Bob, thank you so much. Really appreciate it. I really liked kicking off the show with Michael McKee on the jobless claims and also his conversation with Mary Daly, but also looking ahead, because given that jobs report tomorrow, we're going to start to dig a little deeper into what this jobless scenario looks like. And it feels like it's going to reveal some things. And this is based on some really nice reporting. This is a mega byline in Bloomberg Business Week around who's losing their jobs. And I really worry about this a lot, that this virus has just laid bare, and is not just laying bare, but is going to exacerbate a lot of divisions that we've had in this company around who has and who does not.
Well, I also feel like it's 10 steps forward since the financial crisis in terms of the labor market, and now we may be taking 20 steps back. And so, you know, what we saw is as a result of the crisis and then coming back and then the tightest labor market that we've seen in a long time, unemployment rates for Black Americans and Hispanics fell to historic lows. We saw, because of a shortage of workers, you had many employers made accommodations to fill openings, so former prisoners got job offers. Drug tests were waived. I mean, there was a lot of things going on. Women entered the labor market at an increasingly high pace, and as of December, they made up the majority of payroll employment, and also wage growth picked up across the board. That's where we were pre-crisis. And now that you've got millions, 33 million that have lost their jobs in the past 7 weeks, how much of that certainly goes away, and how much of that going away is temporary, and how much is permanent?
Yeah.
At least for a while.
And the temporary versus permanent is a really important question, and McKee referenced this, you know, this notion that we're in such uncharted territory, but also with no real end in sight and no real knowledge of whether a lot of those jobs that were lost will come back quickly. Some may not come back at all. You think about the airlines, you think about restaurants, you think about all these industries that are going to be dramatically impacted and disproportionately felt among minorities. More on this story to come. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with this headline from the Bloomberg Professional Service. California now reporting a 3.1% rise in virus cases and 92 daily deaths. The Dow, the S&P, and Nasdaq all advancing right now. Stocks are off session highs as investors sift through the latest corporate earnings and data showing another surge in the number of out-of-work Americans. After the bell, we will be hearing from Uber, among other companies. Lyft shares surging today after earnings. Lyft is rallying 21%. Uber, ahead of its report, up now by 8.9%. S&P up 34, up by 1.2%. Dow Jones Industrial Average up 240 points, up by 1%. Nasdaq up 119, up by 1.4%. 10-year yield 0.63%. Gold is up $32 the ounce, up almost 2% at $17.17. West Texas Intermediate crude down 3.1%, $23.23 a barrel. Recapping, stocks higher, off our session highs. S&P up 34, up by 1.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Well, let's talk about one of the must-reads in the magazine this week. It is not for the faint of heart, but you need to read it. You need to understand what's going on out there, Carol, because it has to do with the meat industry, something we've been watching very closely, so many people watching it closely, including the president. We get inside this business. Peter Waldman, he wrote the story, projects and investigations reporter for Bloomberg. He joins us on the phone from San Francisco, as does Joel Weber. He, of course, is the editor of Bloomberg Business Week. He's on the phone from Brooklyn. Joel, this was a tough story.
Yeah, that was right. And one that I think Peter and his co-authors really brought just some wonderful material to. I mean, this is a frightening topic, right? And you think about meat packing in the U.S., these are very vulnerable workers. The history of meat packing in the U.S. is also sort of a tortured one, going back to obviously the jungle way back when. But what really came to light in this reporting is that the workers have really not been protected, and that's actually led to basically meat shortages because of the lack of ability to process. And it's all really, really frightening. I don't even know which anecdote is more frightening to give you to start with. Peter, which one's the most frightening that you found in your reporting?
Well, basically the indifference. I mean, in March, when all of us were running to our shelters, the meat processing plants were obviously continuing to run to provide food for the country, but we're not making any amends, really very few changes to protect workers, and the numbers just exploded. So by April, we were seeing hundreds and hundreds of thousands, and ultimately the CDC now says 5,000 meatpacking workers came down with the disease, at least 20 dead, but we can expect several more than that.
I got to tell you, Peter, I don't even know where to point the blame to, and I feel like to a lot of individuals or a lot of institutions. You tell a tale, and it just kind of breaks our heart. You talk about Raphael Benjamin. Just briefly, just tell us about his experience, because we all, as you said, when we were all shutting down and sheltering in our homes and staying safe, these meat workers and meat processing workers doesn't look like they had much choice.
So Raphael Benjamin was 64 years old. He is so prototypical that he's almost a writer's dream. I mean, it's hard to say that. I mean, his case fit so many facts we were looking at. And ultimately he died. And that allowed us to write about him, because I will tell you, we did 32 worker interviews for this article. So we really got into that plant and spoke to people on the phone. and not a single one of them wanted to use their name, because, as Joel said, these are very vulnerable workers, and they could easily and would probably have been fired if quoted by name in the media. And so what happened was, in the middle of our reporting, we heard about this 17-year veteran of the Cargill plant in Hazleton, Pennsylvania, who lost his life from COVID-19. And using internet resources to find phone numbers, I tracked down his son,
an active duty soldier in his 30s who's based in Georgia at a cybersecurity site for the U.S. Army. And he told me the story. Basically, Raphael Benjamin had been working all these years, looking forward to retiring. His pension anniversary to top up his pension before retiring would have been April 10th. He ended up spending that day on a ventilator in the ICU, having contracted COVID-19 while working, and a few more quick facts about how he did that. He did report to work and told the nurses when they were screening in early April that he wasn't feeling well and had a dry cough, but his fever didn't hit the 100.4 trigger, so they waved him through and he went to work. In addition to that, he had previously, a week earlier in March, been given a mask by his daughter, and she said, "Wear this, Daddy, it'll help you against this virus." So he was trying to wear it, but was told by a supervisor he could not because it would scare other people.
It's just frightening stuff. But, Peter, I have a sort of a bigger question, which is obviously this is happening in the U.S., and it seems to be happening here with great frequency. Why is it happening here and not in other countries and around the world, which is, obviously have their own meatpacking facility?
Yeah, that's a really good question, and it goes to the question of can we resolve this so that our workers are safe and we'll have plenty of meat? Because the answer to your question, Joel, is the answer to that one. So in Europe, they are not having the same extent of problem. They have obviously stiffer working laws in most EU countries, stiffer labor protection laws. So they're more on guard to protect their workers. They also tend to have smaller meatpacking plants. We have enormous ones that employ up to 5,000 people in 3 shifts, and things are much harder to control in plants like that. And they have more automation. So those 3 factors have led to, no plant shutdowns in Europe from this cause. So it can be done, and I will say there are companies now that have adapted. I mean, this is a kind of before and after story. As I said, in March, numbers exploded while those of us were sheltering. Those people were working and companies were treating them as business as usual. And let's face it, we don't always get treated very well.
One thing that brings to mind, Peter, is that obviously the facilities that we're kind of talking about in this article are predominantly pork and to some extent beef. The one that is sort of an outlier here is actually the chicken industry, right, which tends to have more distance between people and automation, right?
More so, but for example, Tyson has had problems in Georgia. There are chicken plants that have had issues. I don't think they have the scale we've seen, especially in pork and also in beef. Part of that may be I'm not aware of chicken processing plants that are as large as these others, so they could be a scale issue. But they're not untouched.
Order filled.
Tyson.
Order canceled.
And automation, does it ultimately change this dramatically? Only got about 30 seconds here.
Yeah, I mean, in May, I can't tell you I'm an expert in that. I can tell you all the experts are saying this will only accelerate the move to automation. And as a story closes on the note of saying, it used to be about coffee breaks in terms of getting a robot, but now it's about robots not getting coronavirus.
Yeah, well, it's an amazing story. Congratulations on it, Peter Waldman. Thank you so much, Joel Weber. Our thanks to you as well. For those of you listening in New York, D.C., San Francisco, watching on YouTube, Bloomberg Business Week continues right here. If you're listening on 106.1 in Boston, Bay State Business is next.
I do wonder how much automation comes into play in a lot of different industries. Just like we talked with Christina Casotis at the Pittsburgh International Airport, I do wonder how much of that starts to play into our economy. This is Bloomberg.
Order filled. Order submitted. Order submitted. Order filled. Order submitted. Order submitted. Order submitted. Order submitted. Order filled. Order filled. Order submitted. Order filled. Order submitted. Order submitted. Order submitted. Order filled. Order submitted. Order submitted.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour trading on this Thursday. The Dow, the S&P, Nasdaq, yes, they're all advancing, but they are well off their session highs. Investors sifting through the latest company earnings and data showing another surge in the number of out-of-work Americans. Yields on treasuries fell. Right now we have got the 10-year, the yield there 0.62%. West Texas Intermediate crude is down 2.7%, down 65 cents a barrel, 23.43 right now on WTI. Gold advancing now, spot gold up 2%, 17.19 the ounce. S&P up 37, up by 1.3%. The Dow up 253 points, up by 1.1%. And Nasdaq is up 130 points. The tech rally continues, up 1.5%. And in the year-to-date column, Nasdaq holding on to a gain right now of just about 0.1%. Teva Pharmaceutical Industries maintained its profit projections for the year as quarterly sales of drugs, including respiratory products, rose during the COVID-19 pandemic. Its CEO, Cor Schultz, was our guest right here on Bloomberg Business Week last hour. He talked about the challenges for researchers amid the race for a new vaccine to fight the virus.
Teva is not a vaccine company. We are not really manufacturing vaccines or developing vaccines. But I would say one thing I've learned in pharmaceuticals is that clinical data and the quality of clinical data is paramount, and patient safety is paramount. So it's very difficult to develop a new drug or a new vaccine extraordinarily fast without compromising the quality or the safety of the drug or the vaccine.
Teva's American depository receipts are up 10% after earnings this morning. Lyft shares are surging after overcoming investors' worst expectations when it pushed closer to profitability and reported moderate growth of the ride-hailing business. Lyft shares, they are up right now by 21.8%. Uber reports after the bell up now by 9.5%. Grubhub shares falling after the company reported its first quarter results and withdrew its full-year outlook. Right now we have got Grubhub trading lower. Recapping, S&P up 32. I'm Charlie Pellet. That's a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, let's do a little Business Week economics, Carol Masser. A big day in the world of economics today, yesterday, tomorrow. Every day is a big day in the world of economics, but jobs, jobs, jobs. That's what we need to be talking about, that's for sure. All right, let's check in with our team. Bloomberg News Global Economics and Policy Editor Kathleen Hayes. She's joining us from the Poconos. Bloomberg Economics Chief U.S. Economist Carl Riccadonna. He's on the phone from New Jersey. Jobs, 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 or lack thereof. Kathleen, set the stage for us with how the market is dealing with this and what's the thing we need to know based on what we know now and looking ahead to tomorrow.
Well, you know, I'm going to leave it to Carl to get into some of the juicy details and to tell us how our Bloomberg Economics team is translating into their forecast for where we go next. But the bond market didn't need to wait for any kind of forecast today because even as stocks posted some gains, maybe they're thinking it twice over, you know, towards the close now, but rally in the long end of the bond market. And that's after we had that Treasury funding announcement showing there's going to be a lot more 10 years and 30 years sold. Both of those have their yields falling, their prices rising. But let's focus on the 2-year yield. It fell to a record low, not far above zero, down as much as 4 basis points today, so to 0.1388%. Why? Well, we were kind of pricing in weak jobless claims, getting ready for a weak jobs report tomorrow. But the Fed funds futures market has taken it upon itself to start pricing in negative rates at the short end by 2021. I want to say one thing really quickly, guys. Everybody you talk to about negative rates in the U.S., the Fed's against it, the Powell's against it. What did it do for Japan? What did it do for the ECB to have a negative rate at the short run, right? Not so much for, well, it's on something maybe.
Oh, it's just going to be different this time around.
But wait, of course. But remember one thing, money market funds, negative rates at the short end, that messes up the whole structure. It just doesn't work, you guys. That's another thing they're going to find it. But I want to just call your attention to, looking ahead, a number we don't pay a lot of attention to, the Challenger J and Gray and Christmas layoffs. How many people you expect to lay off in the next few months? That number, year over year, went to 1,569%. In other words, the National Federation of Independent Business net hiring plans, only 1% in April thought they'd add workers. They'd already plunged. It's gotten worse. Well, now let Carl give us the rest of the numbers. Well, but you know what I mean? There's a lot of bad signals out there.
It mirrors what we talked to earlier in the week about, hey, folks, we're already talking about Christmas and the retail season, and it isn't going to be good. Yeah. Carl Riccadonna, we love talking to you when it comes to everything economics, but in particular this monthly jobs report. We know it's going to be a bad number. What do you think is important about this? How should we look at it and analyze it?
Well, we have to not be lost in the fog of just hearing a really large number and not being able to contextualize it. So here's a way to put it in perspective. My team's looking for 23 million jobs to be lost in a single month. That's the equivalent of taking the job losses of the last 9 recessions. That takes us back to Dwight Eisenhower's second term. Take the job losses in each of those recessions, including 82, including the Great Recession from 07 to 09, lump them all together and put them in a single month. And that is what we will be seeing tomorrow morning. So to contextualize that, that tells us that there is no chance this is a V-shaped recovery. There's a massive labor dislocation taking place. Hopefully we'll start to see that unwinding in June or at least in the third quarter, but this tells you we're not going to snap back from this very severe, in fact, record decline in the economy in the second quarter.
That's what makes me nervous, Carl, about temporary job loss becoming permanent job loss and what that means, once we get through and hopefully get some kind of vaccine. How do you see it playing out? And I guess, are you looking at 2021?
We're looking at 2021 for the economy to really get back to the pre-crisis peak in output, which would be Q4 of last year. To get back to that level, where my team is forecasting that to occur in either Q4 of 2022 or even later. So it's going to be a very long time for the economy to right the ship from the damage that was done. And we still don't fully understand how much this shock to income for both households and businesses, some of that's being filled by fiscal stimulus and whatnot, certainly not all of it. That's why additional rounds of fiscal stimulus will be so critical. And maybe tomorrow's report will kind of focus the attention of policymakers on the need for additional fiscal support to the economy. But with that many people facing that much lost income, again, it's going to be hard to reopen the economy because we're worried about reinfection. Also, with that kind of hit to income, it means vehicle sales, discretionary spending are going to be very slow to bounce back.
Well, let me just jump in here quickly if I can. Jim Bullard said yesterday, we have to reopen or we could have a depression. I think that there's a lot of contrary voices, scientists, many people who are saying, look, we need herd immunity. You can flatten the curve. That just means the curve lasts longer. At some point, when you know you're not going to overwhelm hospitals and you protect the vulnerable, that reopening is essential as soon as we can, as intelligently as we can. And I think that debate is getting louder all the time. And when you have a Federal Reserve Bank president who early on warned about how the virus was going to be so big, acknowledging that reality, I think this is the challenge for us now. We've got to have a strategy, to win the war and how we're going to fight each battle. But, you can't send off people off into a hopeless fight they can never win. And maybe that's what a long delayed reopening would be.
And so, Carl, just about 30 seconds here. After tomorrow, where do we look to see, from a data perspective, the economic impact that you're talking about of this widespread joblessness?
Well, what we're going to see tomorrow is going to set the tone for a slew of record bad reports for the month of April, including the following Friday when we get things like retail sales and industrial production. But really the leading indicator to watch is that those weekly filings for unemployment insurance. And I sound like a broken record repeating that on this program time and time again, but that's going to tell us when we're finally hitting the inflection where net layoffs are maybe starting to turn towards net hiring, and that's going to be critical to understanding the shape of the recovery, which incidentally will be a long and shallow U.
Yeah. Or
we hear the Nike swoosh.
A Nike swoosh is what we keep hearing. Yeah. All right. Kathleen Hayes, Carl Riccadonna, thank you both so much. All eyes on the jobs report tomorrow. We will be breaking it down for you in great detail tomorrow, Carol.
Yeah, it's just going to be tough, but we will have those numbers and, of course, in-depth analysis. Right now, we do want to get back to World and National News headlines. Let's check in once again with Bob Moon. Hi, Bob.
Hi, Carol. The Justice Department is dropping its prosecution of Michael Flynn, President Trump's first national security advisor, who admitted to lying to FBI agents about his discussions with Russia's ambassador before trying to withdraw his guilty plea. The dramatic reversal comes after court documents were unsealed last month, in which FBI officials discussed whether they should try to get Flynn to lie during an interview so he might be prosecuted or fired from his White House post. The context of those notes is uncertain, but President Trump made a quick conclusion at the time.
Well, it looks to me like Michael Flynn would be exonerated based on everything I see.
The decision to drop the case comes amid criticism that the Justice Department, under Attorney General William Barr, has made politically motivated calculations to benefit Trump. House Speaker Nancy Pelosi is making it clear she won't support President Trump's recent call for a payroll tax cut and changes in the capital gains tax, saying that wouldn't help the millions of workers thrown out of their jobs and others struggling in an economy shut down by the pandemic. Speaking to Bloomberg's David Weston on balance of power, Pelosi also said the House could vote next week on its version of a new coronavirus rescue bill to address the country's needs.
On our heroes, state and local, testing. Let's make sure that we address the disparities and all the rest by identifying really where this cruel virus is creeping out there. It's so scary. And then third, putting money in people's pockets.
Global news 24 hours a day on air and on Quick Take by Bloomberg. I'm Bob Moon.
All right, Bob, thank you so much. Well, when we think about grim predictions, Carol, there was a voice out today. He's been on this program, Chris Nassetta, CEO of Hilton. He's a pretty upbeat guy. I know that from knowing him for a few years, but there's nothing upbeat about the hotel business right now. Years to recover. Things are going to get worse. This is, as you know, and as many of our listeners know, the key metric in the hotel business is what they call RevPAR, revenue per available room. 90% down in April. 90%, 90.
Yeah.
WOA.
Yeah, right. I mean, there's nothing happening, right? We've heard these statistics from the hospitality industry. Nothing. Everything has been shut down. We know March was just a wash. April, too. Apparently, it's still anemic, could remain so for months, if not years. And so Nassetta, on a conference call today with analysts, said, given the timing of the pandemic, we expect a much more dramatic impact on our second quarter results. A full recovery will take time, and it could take several years, Jason, as you said, to return to the hotel demand levels we experienced in 2019. Yeah, I think it mirrors just what we heard from Carl and Kathleen. You know, on the other side of this, we're not going to go back to the economy we had going into COVID-19 and the shutdown. It's going to be very different. Demand's going to be very different. People are going to be scared about their safety in kind of going back out into the world, especially in areas like New York, where it's very populated and is very important to the overall economy.
And this was one of the interesting things that Chris said, which I wanted to make sure we heard. Natural human reaction coming out of this, even as we slowly get out of it, is, I want to move, I want to get out. I'm quoting him here. Maybe I'll sort of move around the region. Maybe I'll go to the region next door. Eventually, I'm going to cross the country. I'm going to get on a plane and go around the world. Eventually, I'm adding that. But I think it's in that progression. That's what Nassetta said.
My husband and I were talking about this because we have not really done anything. And then I, about a week or so ago, actually took a trip. And then my husband was out in the car. We're slowly feeling our way, but it's going to be a progression. So great story, and you should check it out on the Bloomberg. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, and Nasdaq all advancing well off our session highs. Nasdaq now flat on the year. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading in the green, but like you said, well off their best levels. Dow's currently up 197 points, was up 430. S&P's gained 31. Nasdaq climbs by 117. The U.S. 10-year yield at 0.63%. WTI crude futures erased a 10% gain. Gold is higher by 2%, and transports gain 1.5%. Leaders to the upside in the Dow, Boeing, Home Depot, and Disney, while Pfizer, Raytheon, and Merck led to the downside. After earnings, PayPal jumped 14% to a record, and Twilio soared 43%, also to a record. In other news, Dow Inc. is said to explore sale of its port, storage, and rail businesses, and United Airlines sees weak demand for its $2.25 billion junk bond. Wrapping things up, some of the names pointing after the bell tonight include Dropbox, FleetCor, and Monster Beverage. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, I thank you very much, Bill. And to hear live breaking news over your Bloomberg, type Squawk, SQUAWK, on your terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Order submitted.
Thank you so
Order
much.
Submitted.
Well, back with us for a daily look
submitted.
at the health crisis caused by the virus
Order
is Dr.
submitted.
Amish
Order
Adalja,
submitted.
an infectious
Order
disease
submitted.
physician at Johns
Order
Hopkins
submitted.
Center for Health
Order
Security at the
submitted.
Bloomberg School
Order
of Public
submitted.
Health.
Order
On the phone
submitted.
from Pittsburgh, the Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder
Order
of Bloomberg
filled.
LP
Order
and Bloomberg
submitted.
Philanthropies,
Order
and
submitted.
of course, Bloomberg Radio. Dr. Adalja, nice to have you here with us. A lot going on. We heard U.S. House Speaker Nancy Pelosi talking a lot about the importance of testing and tracing. Tell us where we are in this process and what you think is the most important thing that our audience needs to be focusing on right now.
Testing and tracing are going to be the way we move forward in a new reality with this pandemic virus among us. It didn't go anywhere during this time of social distancing. And now the question is, how do we minimize the risk from this, minimize the disruption that this virus poses to us? And the only way that we can preserve hospital capacity and not have things spiral out of control like they did in March, some hotspots around the country, is to have a robust system where people can be tested at the will of their doctor without really any kind of hassle or worrying about supplies, and then also that we can find their contacts and trace their contacts through our local health departments. And this is something that is kind of a patchwork across the country. And it's going to be something that every part of the world, every part of this country is going to have to try and augment and make sure that their health departments are resourced. And it's going to be challenging, and some states are going to be better at it than others. So we will see differences across the country.
Right, and we often see it in terms of the number of cases across the country. Right now, a headline crossing the Bloomberg, Florida, COVID-19 cases rising 2.2% to 38,828. So, Dr. Adalja, you said we need a robust system of testing. We don't really have that. As you said, it's a patchwork. How do we get there? Is it difficult to ramp it up so that everybody is tested and we have a better framework for what's going on with the virus?
We're definitely getting better at testing. I can just say, even from my personal experience over the last several weeks, it's gotten much, much better. And many states are in an okay shape for the ability to test. The challenge is going to be contact tracing, and that's because our local health departments and our state health departments are often neglected. They're not considered priorities by the government, and they're often spread very thin over many different health threats and kind of have moved away from a lot of their core work in infectious diseases for which they really were instituted a long, long time ago. And we're going to have to give those health departments the flexibility and the ability to cut through bureaucracy and red tape and hire contact tracers. Maybe they hire people whose jobs were deemed non-essential. Maybe they train people very quickly. And we're seeing that, actually. Michael Bloomberg is actually doing that for New York State. So there are innovative ways to do this. And I think it is something that can be doable. We just have to have the political will and empower the health departments the way they should have been empowered a long time ago.
Right, and as we mentioned at the top, Mike Bloomberg, of course, the owner of this radio station as well. So, Dr. Adalja, I would love for you to help us figure out something that I've been talking to my family about, and we've been talking about a lot on this show, which is this patchwork that you describe, and that's such a great word for it, across the country. There's also just this unevenness, it feels like, as we look across, not just where the virus has spiked in terms of cases and in terms of deaths, but also and largely this is connected to the former point, this patchwork of reopening strategies. So what's the right way to proceed at this point? And I think it's especially relevant to us here in the tri-state area because we're still in the thick of this, and yet we see a very different picture across the country.
You have to remember that a pandemic doesn't occur synchronously, that there's going to be heterogeneity around the country and around the world. And the best way to think about when you can lift social distancing is going to be driven by regional data, meaning what are the dynamics of this virus in your region? What is the local hospital capacity? What is the local health department's ability to do contact tracing? All of that is really going to be different across the country. And this is something we see all the time with any kind of public health emergency. Some places are in better positions than other places. And the hot spots like the tri-state area around New York City definitely got hit early and have a hospital capacity problem even on good days because those hospitals are often crowded. And we've had hospitals getting shut down, for example, in the New York City area over the last several years. So they're going to have a much higher threshold before you lift it. But there are places that were relatively spared that have made changes to their hospital capacity, that have secured personal protective equipment, diagnostic testing, and have resourced their health departments so that they can deal with the new number of cases that they're going to get as social distancing is removed, those restrictions are removed. So it is going to be something that is a bit of a patchwork, and you may see people tightening in certain areas and loosening in certain areas as we get through this. But I think that's going to be what we have to get used to because it's not one big outbreak. It's many small outbreaks all around the country.
So that we've just got about 40 seconds here. So in terms of that patchwork, I mean, some areas obviously can open up, but it sounds like we can open up if done carefully.
Exactly. The question is not that do we open up? We are going to open up. And there's a way to do this in a safe manner by keeping an eye on hospital capacity because we know we're going to get more cases and more deaths as we increase our social interactions with each other. The question is, can we keep that to a pace that's manageable by the hospitals so they don't go into crisis? And that's why things are going to have to be titrated, where you're constantly looking to see what your hospital capacity is. And that's, I think, the best way to do it is to do it in that manner.
And so what's your best advice for our listeners if we are in a hot spot, speaking very parochially, like we are here in the tri-state area? How should we be sort of living our lives, especially in these places of higher infection?
The virus isn't going away, so you have to really think about what risk tolerance you have and try to find a way to be as mindful as you can about this virus and limit your exposure as best as you can while also living your life, because this is going to be something that we're going to deal with. Going to be risk-free. I mean, there's no way to make this virus go away, and there's no way to drive the number of cases down to zero. This is going to be something that we have to cope with, and it's going to be difficult, and it's a horrible choice that we face, but this is the situation we're left in. And until there's a vaccine, we're going to have to take risk when we leave the house, and that's something that we have to get used to doing.
So we need to understand that, and we have heard this certainly from the president and others, that there will be lives lost as we reopen, unfortunately, because we do need to reopen the economy.
Submitted.
Is that
Order
basically
submitted.
the point?
Order submitted.
Yes,
Order
the virus
submitted.
hasn't changed its behavior.
Order
It is still going to infect people. Some of those people are going to get hospitalized. Some of them are going to die. That's something that we're going to have to cope with, and it's a horrible choice because this virus got out of control. But it's nonetheless a choice that we have, and the question is how can we move forward with. And we have to be cognizant of the costs of the economic shutdown because that leads to decreased screenings for colonoscopies, decreased cervical cancer screening, decreased breast cancer screenings, delays in chemotherapy. all kinds of things are happening because of the shutdown, which is going to have a cost. In the economy, at a basic level, is people's lives, and people need to produce to live. And I think that this is this balance that we have to have, and it's going to be something that's going to be difficult. That society is going to have a discussion about, and there's no easy answers. It's not black or white. It's all gray.
Yeah, it's, as we've continued to say, it's so complicated. And you really took us in some other areas, especially about the medical cost, not because of the virus directly, but by not doing cancer screenings or colonoscopies. There will be a medical cost for that as well, and people will be impacted. Dr. Amish Adalja, thank you so much. Infectious disease physician at the Johns Hopkins Center for Health Security at the Bloomberg School of Public Health, joining us on the phone from Pittsburgh, as we mentioned earlier. Of course, the Bloomberg School of Public Health, supported by Michael R. Bloomberg.
All right, let's head down to Washington now. We've got some playback for you of some comments that the president made during a meeting he was having with the governor of Texas.
And Pulitzer Prizes should be given to the ones that got it right. And I could give you a long list of those names, too. And you know who I'm talking about.
Mr. President Putin today, did he
I did.
any ventilators or any equipment for his pandemic?
Yes, we are helping various countries. As you know, Russia's having a hard time with the same COVID-19. They got hit like everybody else got hit. And we had a long talk, and also the 75th year, and you know what the 75th year means. It was very nice. He called me because we were partners, so to speak, for a very big, successful war. And it was very nice. He called as a congratulatory call and as a call of celebration because it was the 75th year. And also, I suggested if they need, because we have a lot of ventilators, if they need ventilators, we'd love to send them some, and we will do that. At the appropriate time, we'll send them some ventilators. Yeah, we'll be doing that. No, it was a very nice call. And remember this, the Russia hoax made it very hard for Russia and the United States to deal with each other. They're a very important nation. We're the most powerful nation. They're a very powerful nation.
Order
Why
filled.
would we not be
Order
dealing
filled.
with each other?
Order
but
filled.
The Russia hoax
Order
is
canceled. Order
absolute
canceled.
dishonest
Order
hoax
canceled.
made it very difficult for our nation and their nation to deal. And we discussed that. I said, it's a very appropriate time because things are falling out now and coming in line, showing what a hoax this whole investigation was. It was a total disgrace. And I wouldn't be surprised if you see a lot of things happen over the next number of weeks. This is just one piece of a very dishonest puzzle.
And you've been trying to arrange an arms control summit with President Putin and President Xi. Is that getting anywhere?
We are talking about arms control with Russia, and we will go forward with that, and we are talking about it very seriously, having arms control. They have many nuclear weapons, and so do we. And we're talking about arms control with Russia. Yeah, they'd like to do it. We'd like to do it.
Sir, can we ask about the economy today? We've now learned that 33 million jobs have been lost in the last 7 weeks. Will there be more jobs lost in May, or is that number going to start coming down next month?
Yeah, Peter, the number will start coming down at an appropriate time, whatever that is. I'm viewing the third quarter as being a very important quarter because it's, as I said, that'll be a transition. I think you could almost say a transition into greatness because I think next year we're going to have a phenomenal year economically. We're working very hard now. The governor's working along with us. The relationship with Texas has been phenomenal. And Texas is opening up, and a lot of places are opening up. And we want to do it, and I'm not sure that we even have a choice. I think we have to do it. This country can't stay closed and locked down for years. Somebody could say, let's keep it closed for a couple of years. The United States of America, the greatest economy in history 2 months ago, in the history of our country, in the history of the world. We had a far greater economy than anybody, including China, by a lot. And we had to close it down in order to really do something about the plague. But we did something, and we did a lot. And we also, you know what, Governor, we learned a lot about it.
We did.
We know that you may have fires every once in a while in certain locations. Some little ones, maybe some big ones, but you know how to shut it down.
That's
you might
exactly
want
right.
to speak about that.
Sure, I would. I was talking with Dr. Birx about that. And so what we've done, we've been able to contain the spread of the coronavirus in Texas, but at the same time, we created these
surge forces that will go out to regions where there are flare-ups. And it's like putting out a fire. We have a surge force working in the Panhandle in Texas right now, up in Amarillo and just north of Amarillo because of an outbreak at a meatpacking plant. There's several other issues with other meatpacking plants in Texas. Basically, there's only 3 categories causing any type of outbreak. There are meatpacking plants, there are jails, and there are senior centers. And so we have task forces that focus on those 3 areas. If it weren't for those 3 categories, the people in Texas testing positive would be very minimal.
And the governor and I have spoken about what he's doing with senior citizen centers is incredible. The time and effort and love that you're giving to senior citizens, they were just what has gone on throughout the country in some instances, as you know, senior citizens areas. And the governor's really made that a point, really almost before anybody I can think of. So.
And because of that, we have one of the lowest death rates in the United States of America.
That's right. Last week in Odessa, Texas, police were used with an armored vehicle and guns drawn to shut down a bar that had opened up in going against the order. What role does police have in enforcing these kind of lockdown and social distancing orders?
Well, there's different standards used in different communities. However, today I made one thing clear, and that is, as we go through this process of trying to maintain order in our states, as we are asking the people in our state to comply with these orders, we should not be taking these people and put them behind bars. These people who have spent their life building up a business and being told to shut it down and lose every penny they have, and then if they don't follow every little